Testing, 1, 2. Testing. Can you hear me, Joey? Testing, testing. Can you guys hear me okay? Everybody good? Good morning. We're halfway awake. We'll get there. Good morning. All right. Thanks, Joey. Well, good morning, everyone. Welcome back to day 2 of the 2023 Tampa 2-Day Investment Seminar. For those of you who are just making it here today and didn't join us yesterday, my name is Ray Clark, and it's my honor and privilege to be your host for the rest of today. We've got an exciting, action-packed day filled for us coming up. We had a great day yesterday, some great sessions. I just want to cover a couple of quick pointers before we move on. And we have a $100 voucher that everybody can use online. If you go to VectorVest.com/offers, that $100 voucher can be used towards one of the 4 coaching group packages, whether you're upgrading or you're renewing, or it can be used towards one of the 4 courses mentioned on that offers page. It's not valid for a regular subscription. When you go to the offers page and you fill out the order form online, you'll notice that it doesn't reflect the $100 additional discount from the voucher. But when you submit the ticket into our billing specialist, they will then remove that $100 voucher, an additional $100 off of that order from the back end of it. So I just wanted to clear that up. For those of you, anybody who subscribes to an annual subscription, any type of renewal for an annual subscription, or if you upgrade from a monthly to an annual subscription, we are going to give you the recordings of the 2-day for the entire year. So all you have to do is renew your subscription, your annual, or upgrade from a monthly to an annual of any type, and you'll get access to the recordings for 1 year. For those of you who don't, it's very simple. We will have the recordings up on YouTube for a week following this session. So you can review that for about a week, but for the annual subscribers, we will give you the recordings at no additional cost. So I just wanted to clear that up. Let's move into the agenda for today. We're going to start the morning off with a bang with Dr. David Paul. He's going to come up and he's going to talk about the anatomy of a swing trade. Okay, this is an amazing talk. We saw him yesterday. We saw him last night. If you haven't had your coffee yet, you'll have a lot of energy by the time David's done. Then we're going to move over to Mr. Jerry D'Ambrosio. He's going to talk about top techniques for trending and channeling markets. This is a great talk. Jerry D'Ambrosio is the guru of technical analysis. That's why he's one of our swing trading coaches, the primary coach. So that'll be a great talk. We'll take a quick break, and then we have Mr. Stan Heller, the amazing Mr. Stan Heller. He's going to present live to us from Canada, and he's going to talk about the near perfect indicator. And for those of you who have not been exposed to this, it's an amazing system that Stan, he put a lot of work into it, spent months and months and months revising and revamping, and it's really the near perfect indicator. So he's going to give us a great presentation on the near perfect indicator, and then I'll come up following that, and I've got something pretty neat to show you that Mr. Steve Chappell developed around the near perfect indicator. Then we're going to move over to Mr. Ron Wheeler, who's going to talk about leveraging your swing trades. So we get this question a lot. Jerry will do a presentation on swing trading, and somebody says, well, can I trade options with this technique? You know, we said, okay, well, that would be a good talk for Ron to come up and give. So Ron's going to do this talk for us. We're going to have lunch. Whoops, I'll figure this out. And then Ron will also do the options Paycheck live. And then Mr. Glenn Tompkins is going to come up, this keeps changing on me, and do the path to securing financial freedom. And after that, we'll have a quick Q&A session with the instructors from the seminar. But we're really excited. Day 2 is about to begin, and we're going to kick this off. Mr. Dr. David Paul, if we could put our hands together.
Thanks, Ray.
Yeah.
Thanks, Ray. Good morning, everyone.
Good morning.
Hope you're all well. Well, I was listening or reading the minutes of the FOMC meeting. I think it was a Wednesday they came out. And it reminded me when I was a child, I read Mutiny on the Bounty. And Captain Bligh said so beautifully that beating will continue until morale is restored. And that's essentially what the Bank of England said a couple of weeks ago. I think that both the Bank of England and the Fed realize that they won't be able to pull inflation down until the jobs market on both sides of the Atlantic goes a little southwards. And I think that's probably the reason the market went up so strongly yesterday, folks. Although the non-farm payrolls came out significantly better than expected, 223 as opposed to 200K new jobs, the wage growth was lighter, much lighter in fact than anybody expected. And I think that with the layoffs that you've all read about at Salesforce, the layoffs at Amazon, etc., I think that the market feels that the Fed policy is having an effect, and that might indicate a pause, and that's pretty much, I think, why the markets went up yesterday. As Jim Pennis said to me the other day, we've only seen how many green lights now, Jim? 2 green lights.
2, maybe 3 in the last.
Yeah. So what we're going to talk about today, folks, is how to put together a high probability swing trade. I said yesterday that you have to take care of your money very carefully, otherwise it will find a new owner. And I believe in putting the probabilities together to try and line up the probabilities so that you can push your hit rate up to something that's both profitable and emotionally acceptable. I don't think any of us here will be much good at this with respect and deference until we get our hit rate above that 60% level. The clusters are actually just so difficult to handle, where you can easily get 7, 8, 9 losing trades in a row, and you've got to put your trading system on with courage after 6 or 7 losing trades. How easy is that going to be? Bloody difficult. So you're going to end up jumping from system to system to system. Has anybody here jumped from system to system to system? More often I change my socks, which I may add is normally once a day. Okay. So investing, folks, is boring until you can live off it. Then it's not boring at all. So let me try and line up the probabilities. Again, a brief overview of what I do. I intraday trade the S&P 500 these days. That's in the UK afternoon. It suits me well. It opens up, market opens up at 2:30 UK time, and by 4 or 5 o'clock, I'm done. And I paid all my bills out of doing that for many, many, many years. I haven't sized it as well as I would like. As I say, my friend Tom Hogarth has sized it much, much, much better. Swing trades, which I use the futures market for, not what Ron's going to speak about, the options market. And in the UK, we have a futures market known as spread betting, where it is a future except for the legalese, and we don't have to pay taxes on that. As I say, I manage a portfolio of core trades which last up to 6 months, 9 months, and I do my best to manage that in our Q&A sessions once a week. If you want to hear those sessions, folks, if you go to vectorvest.co.uk, the recording is normally up about lunchtime US time under events. Okay, and then of course I have a portfolio focusing on yield. I don't do that much to that, and certainly Jim is much, much better to talk about such a thing than I. So yesterday I talked about a methodology and the characteristic of that methodology, and it must make much more money when it's right than it loses when it's wrong. Simple as that. A positive expectancy system. And that positive expectancy system is a function of at least three things. One is the hit rate, two is the risk to reward, which is the most important, and three, of course, is commissions and spreads. That's one of the main reasons that we don't have a VectorVest UK intraday, because in the UK, on every share purchase, we have a stop loss, we have a spread that's much wider than US spreads. And secondly, we've got a brokerage, which is 10 times the US brokerage. And we also got 0.5% tax, just as well you left. 0.5% tax on every trade. So to get over that intraday is nigh on impossible. So we need to manage our money really, really well. And I hope I drove that across yesterday. Those clusters are damning. On a 50% system, if you bet 20% if you're looting any one trade, which is commonplace, you go bankrupt every, 32 trades. Remember that? A half times a half times a half times. That's what took the smile off your face yesterday. I remember that. Okay. You've been there. Or you don't know, as they say in South Africa, whether you're Arthur or Martha. Okay. And then, of course, you've got to manage yourself really well, which I've tried. So the first thing we're going to talk about is the overall market. Every Monday afternoon, I say the same thing to the UK people. I'm sure they're rolling their eyes listening now. 70% of the exercise is the overall market. Many people didn't believe me until 2022. In fact, when the market was rising and rising strong, a confirmed down was a real royal pain in the backside, because it would get you out and you would probably get back in again at a worse level. But in 2022, that saved our bacon. And at the moment, for once, the UK market is actually leading the American market, and our market is moving up and moving up relatively strongly, with the FTSE at 7600. Hasn't been up there in a while. So the general market's on our side. Now, VectorVest have got many market timing models. I think it was Jerry who spoke about them yesterday. I pretty much just use one of them for my swing trading. That's the front page of VectorVest, and we went through this in a great deal of detail. Clearly, I had to do these slides for Ray, 3 weeks ago, so they're out of date now, and that's a snap of the front page. So the two most important things, and they showed me, remember that Timex watch in a digital era they told me about? There's a Kuchi on here. That's South African for gadget. Yeah. As you can see, the two most important words on VectorVest under trend. And I think that says down up. If that's the case, it means the short-term trend is down and the underlying trend is up. And then we've got a confirmed down, which is in fact the longest term measure of the trend on the market. Jim talked about confirmed downs yesterday in his presentation. In my swing trading, I find that the confirmed down and the confirmed up happen a little bit too late to get me in timeously. So I use a medium-term market timing system known as the DEW. There is the VectorVest composite with the confirmed call signals. And as you can see, all the moves up have been relatively small. The market is making a series of falling tops. It's also making a series of falling bottoms, and that's how Charles Dow in 1880 defined the down market. Mr. Gann, in about 100 years ago, said that the safest place to buy was after the first rising bottom. Now, since I've done this, the market has moved back and gone sideways. If we were to break above that top, folks, that would be the most positive thing we've seen in this market for a long time, because that would be the first rising bottom. So just watch out for that. Where the market has gone sideways and has broken up through that level. If you want to come to the recording of my sessions, I go through that in detail every Monday afternoon UK time, every Monday morning, and I'll alert you to that in a great deal of detail. Technical analysis is an art, it's not a science. And unfortunately, one has to make a judgment as to whether that, and I'm using Elliott speak, is a wave of a similar degree to these ones. A little small rising bottom doesn't count. So, but it's starting to look much, much better to me, I must admit. technically at least. The next, that's the DEW, folks. And the DEW is quite simple. We have a 30-day moving average. We've got a detrended price oscillator, the DPO. And when the market closes above the 30-period moving average and the DPO comes up through its center line, Bob is your proverbial uncle. You get a buy signal. And similarly, if I can make this work again, when the moving average, when we close below the moving average and the DPO comes down below its signal line, that's a sell signal. And over the last little while, that's produced some really, really great signals in the market, some really good swing trading. So I like to be strong in the market and swing trading when the DPO is up. So the DEW is up. That's what I've been very successful for me over the last few years. This is the primary wave. And the primary wave, because of the volatility in the market, the primary wave has worked exceptionally well. The primary wave, the shortest term measure of the trend on VectorVest. I know Steve Chappell uses that for some of his trading systems, his aggressive trading systems, which work well in the US because of very low commissions and very low spreads. They just don't work in the UK at all because of that 0.5% tax, which just is too big a headwind for them. So that's the primary wave. The primary wave is nothing more than the composite closes higher than it closed 5 days ago. Very simple, very straightforward, very robust. In any market timing, the simpler the better, because you'll find that if you do any optimization work, folks, that the more the more numbers you put in there, the more you've curve fitted to the past. And one thing the last 40 years has taught me is that the better the fit to the past is a really bloody awful fit to the future. Something that's relatively loose works reasonably well in all markets. Has anybody done any optimization like that? You have to be very careful about curve fitting. Very careful. Mathematicians love it. So I use the DEW now. There is a sequence where the trend changes, and it changes exactly the same every time. So just have a look at this. Commit this to memory. John Graham, if you're listening, John Graham from our Guildford group taught me this in the church hall in Godalming so many years ago. First of all, when the market's in free fall, we're in a down-down situation. The first thing that can happen is the primary wave turns up and you go to up-down. That's the first thing that can happen. If the market gets a bit stronger, we can then now have a green light in the price column. Now the green light is the market's up day over day and week over week. It's higher than it was yesterday, higher than it was this day last week. That's stronger than just a primary wave up. Now the second thing, Jerry talked about this yesterday, is a black star in the green light on the front page. And that black star essentially means it winks at you. Have you ever seen the darn thing wink at you? Okay, it's saying that the price is up day over day and week over week, and momentum is also rising. And you'd have to do this for yourself, but in the barrels of the computer puts a 10 and a 15-day moving average on the RT. And if the 10's above the 15, it means that the RT is rising. If the 10's below the 15, the RT is falling. If the 10's above the 15, and we've got a green light, you get that little flashing fellow in the green light. That's a darn good signal for aggressive traders. The next thing is that the DEW turns up. And this is what happens. Every turn is the same. Now, my challenge to you is that as this market bottoms out now, starts to bottom out, work through that sequence of the turn. It happens exactly the same at every single turn. And what you need to think about, big fella, is that you need to think about when you're going to jump onto the wagon. I can't tell you which system is good for you. Okay? Many people, Jim, will have a go at the green light. Certainly not for a retirement portfolio, but I don't want to put words into your mouth. But I find it a bit too aggressive for me, but I'm getting old and conservative. The DEW, when the DEW kicks up, then I want to be really getting strong into markets. And I need a damn good reason to get into a stock. I need a really juicy setup to convince me to get in before the DEW breaks up. And I found that if I'm in sync with the general market, I make money relatively easily. And when I'm not in sync with the general market, in other words, the general market is falling, and I'm trying to find a winning stock, I've got to be much, much better. Last year in the UK, really the only place to be was in energy, and that bucked the trend of the general market, and we'll come on to sector selection in a second. But then the underlying trend turns up, the VectorVest MTI goes above 1, and we're now in an up-up situation. And then finally we get a confirmed up. Now sometimes those go out of sync depending on the geometry of the market, but that's roughly the same turn every single time, and you got to get used to that. So just humor me on the next turn. Just tick those off in your notebook as they turn. That's money in the bank for you. Thank you, John Graham. Todd at the education department has done a great deal of work on overbought and oversold levels, and certainly if the MTI gets down below 0.65 and the buy-sell ratio gets down below 0.25, then there is the prospect of bottom fishing, and Steve Chappell, as you know, who's not here, has in fact made that subject his own over the last few years in terms of bottom fishing searches. So I won't in fact through it. So the next thing, folks, is the industry group. So the general market is doing well. The next place to look is the industry group itself. Now I'm not going to spend a great deal of time on this because Glenn does this so comprehensively every Thursday. Where is Glenn? There he is, the big fella at the back. Takes no introduction. He's a real pro. He travels with 2 suits. Okay, you can always tell a real pro. 2 suits the big fella has. Glenn puts out absolutely valuable information every Thursday afternoon for Mahala, which is Zulu for free. Okay, he will. I think that if you haven't got the time to listen to the big fella, then the recording is there. Am I correct? It's on YouTube. Big Joey sends it out. It's a hell of a team. He sends it out timelessly. Melissa tweets it, I'm sure, as well, and God knows what. All of that goes out, and he will actually talk you through that. In the UK last year, what did we have? I'm sure it's similar here. We had one, energy, yeah? And we have people in the UK that were 100% in energy stocks. And they say, what last year was the best year we've had ever. If I went 100% into energy stocks, the FCA, the UK regulator, would fry me because I'm supposed to be preaching diversification. I did very, very well on Shell. Royal Dutch Shell, couldn't be much more conservative than that. As I say, there's a mantle of conservatism sort of falling all over me as I push towards 70. So I'll leave that in Glenn's hands to find the best sectors for you to be. Dr. DeLito, I hear him in my ear all the time telling me, David, you don't have to look at anything more than the top 30 or 40 shares by VST to find swing trading opportunities. And hopefully I illustrated how we found 3 relatively quickly yesterday morning. Okay, the Midas Touch watch list is also a really good watch list to find swing trade shares. And I also like any watch list that's sorted by CI times GRT. That finds some great stocks for swing trades. I have one in the swing trading group, which is called the DEW Swingers. Again, we go to Dr. Lido, and good portfolio management starts with buying the right stocks. And so I'm looking for a stock, folks, and I don't want to reiterate what I talked about yesterday, but I'm looking for a stock. I want to favor undervalued stocks. I want to rarely will get involved in a stock with an RV of less than 1.25. reasonable safety. Now, as swing traders, we're managing risk proactively by stop-loss orders, so I'm not looking for a retirement type safety, a roller stock type safety of 1.3, 1.4, but I like it to be reasonably safe, and certainly even the most aggressive searches that I would use would have a relative safety of greater than 1. Okay. You can be more aggressive than that if you wish, as long as you can sleep. The comfort index automatically finds a trend in finds stocks in a long-term trend, and a simple resort by CI will find lots of stocks that are trending. And again, I found over the years that the more CI I put into my uni searches, the better the searches do. Okay, it's a secret weapon. It automatically finds. In the 18,000 shares in the VectorVest universe, it finds the shares that are trending strongly. So that's the comfort index, and that is my simple DEW swingers. It's in the book. Now, I use also to define the trend on a stock. I use 3 moving averages. I've used them since before time began. Some of the UK people say, "Where are the averages? You haven't put the averages on your chart." And I say, I don't need to put them on. I've been looking at them for so long, I just know where they are. So I use 21 EMA, 55 EMA, and 89 simple. And where they all cross, folks, is, I call it a bow tie. And you get very lucky in swing trading in shares that are above their bow tie. So that's a bow tie. And as you can see where they all came together? I know I'm going to stuff this up soon. Where they all came together, just about there. And any swing trade on the way up normally makes good money. If I had 2 days with you, I would show you how to actually clock that point exactly. That's the sort of stuff that we do in the swing trading mentorship. I've got another one here. There's the bow tie. You see the bow tie just down there? Thank you, Jim. Just down there, where they all came together. And when you start to swing trade, something magic happens around the 55-day exponentially smooth moving average. I call the area between the 21 and the 55 the zone. And markets love to find support in that zone between the 21 and the 55. So I've got a bearish example. As you can see, I've got earnings per share, and you can see here that there's the bow tie up there, and then the thing fell out of bed. I'm not quite sure what that is. Is that Meta?
It is.
Yeah, that's what used to be called Facebook. It fell out of bed and gapped down, and as you can see, somebody got a sniff of the earnings falling off the floor well before it happened. So there was some insider work going on there, that's for sure. People dumping stock a mile ahead of the news getting out there. So the bow tie has stood me in very, very good stead for a long time. So we talked about where to find these. So you get very lucky, folks, when the overall market is behind you, when you've got strong growth fundamentals, and you trade in sync with my bow tie. Those are some watch lists that I suggest. That's the DEW swingers, the Unisearch. Couldn't be simpler. It's in the notes. Top 30 stocks by VST, the Midas Touch watch list, and then there's another search called Explosive EPS stocks, which I like as well for looking for swing trades. And I filter all those with a bow tie. Now, some of you said yesterday that when a share has flown, I couldn't buy it, and I couldn't buy it either. I tend to try and get in when the share pulls back to the last old high. Now that's what we're trying to do in this line of work. And this slide, folks, was done for my first technical analysis seminar that I did at the University of Cape Town, University of Stellenbosch, outside Cape Town in 1989. That's where that slide came from. I was nervous as hell. It was done to the Technical Analysis Society of Southern Africa. And same stuff, God knows how many years later. Market runs up, it pulls back a little bit, and what we're trying, core trader would be trying to take the whole bit, and what we're trying to do is to pull the eyes out of it. Run these little bits up here. Get in here, get out there, get in here, get out there. But if you are a longer term trader, if you finesse that point, then you've got in at a very good level, and you can let it run if you want. And you could use these points to add to your position. I'm going to show you how to do that in a second, I hope, if I get time. And of course, like Ron Wheeler yesterday, I couldn't resist in drawing a bloody trend line in there. There's a fellow out there called Martin Pring. Anybody heard of Martin Pring? He's written a wonderful book called Technical Analysis Explained. It's this thick. And I got to know him quite well. And he told me once upon a time that in 30 years of searching, he hadn't found anything more predictive than a trend line. Where's that? That's diagrammatically the same thing. And folks, what happens here frequently, a nut market's a series of rising lows. That's what Charles Dow said so many years ago. Now, there are three types of trend. And the first is called a fast trend by Charles Dow himself, written in 1880. And if a market pulls back and that reaction low is above that high, in other words, you get some fresh air in there, that's a great place to add to positions. So if you see a strong market and a strong trend, then you should be thinking of adding to winners. And that is a trading system all of its own. So if the market's above, if the 21's above the 55, it's above the 89, you see this market pulling back, and it can't get back to that top, and then it breaks up through that high. That's a market that's going strongly. You could use that as the only method that you do, and you'd be a very successful swing trader. Remember, folks, the thing that I've spent 40 years trying to get through my thick head is that I need 3 to 4 good trades a month. That's all. And sitting waiting for them is the killer. And that's why I trade in the afternoon with the S&P. It sort of lets me scratch that spot every afternoon. I need 3 to 4 good trades a month. That's all. To build, and 3 to 4 good trades a month, I can make 7% a month. And I really must start to do what Jim talked about, and Ron, what Ron's going to talk about, and try and get some income from covered calls or something like that in my old age. This is an example. There's the, this is the bow tie, and as you can see, it pulled back to there, and it didn't get back to that top. When it breaks out, away you go. If you were in from here, let's say, and you got in there, as you can see, that bottom is a mile above these tops. When it breaks, that'd be a good entry point, and then add there. So the young man who asked me that question, you primarily want to be adding in a fast trend where the market doesn't pull back to that top. Okay, does that help? A little bit. All right. If that's a margin call, don't take it. Don't take it. Just ignore it completely. Now, that broker wants your money, man. Somebody is deep in the trouble there. Okay. Have you ever had one of those? Okay. Years ago, I was trading the futures market in Chicago, much, much bigger than I'm doing now. And my ex-wife at the time managed to talk me into putting all our assets into a trust. So if we did get a margin call, at least the house would be safe. This is what happens most of the time. Markets will pull back to that last old top. And that's what Wyckoff called a sweet spot. And in that, if I've got a market that's good, a dozen people have asked me this question. Sometimes when they get to the top of the VST, they've gone so far. I don't buy them if they've run too far. I'll wait for them to pull back to the last old top, wait for a candle pattern, and then get in. That's what I do. So I don't chase. And although it's been a while, you'll find that chasing doesn't work with either markets or young ladies. It gets you nowhere. So that's a diagrammatic example of that. These happen all the time, where markets will run, they'll pull back, and they'll kiss. And you'll be looking for a candle pattern there. Big Jerry, where's Jerry? Jerry has done a candlestick course. Am I correct, Jerry? Yeah. Which will tell you the candle itself is will give you a good indication of when to get in there. And there's only a few candle patterns that I use. I won't have time to talk about them today. That's, as the Irish would say, where's that Irish fellow that I met yesterday? It's the same, only different. Okay? So the price, where am I now? The price came down, went up, kissed that level, and fell again. Look at half a dozen stocks that have fallen this year. They've all done that. Markets are, in fact, more predictable on the south side than they are on the north side. The crowd are actually more predictable when they're just about to lose money than when they're about to make money. So that's a good example of that. And again, I've got my earnings per share plot. Now, I think that if there was one thing I had to pull out that you should have for positive swing trades, long-only swing trades, it's that EPS. If that EPS is at your back, folks, that's going to dig you out of an awful lot of trouble. So 70% of the exercise is the general market. If you get that right, you're well away. If you get that EPS right, it's just a matter of saying it's moving up from the bottom left to the top right, then that's going to add a great deal of probability to your back. And you're going to get up to that 66 to 70% hit rate. And if you get up there, the clusters won't be too bad. And what's left of your hair, you might just keep it. Okay? You might just keep it. Not looking good from here. That's a great pullback. And you see the confluence of the 55 there as well. Just loves that, folks. Now, why does that happen? Well, I assure you that every trader in there, will be taught never to chase. And they'll let the market come to them. Why did the market pull back to that level? Any idea? Was it the 55-day moving average? Well, it went there simply because that's where the orders are. It was bid there. That Goldman Sachs and the big boys would have bid it at that level, and the market will just come to the orders. Markets are not there to make you money. Markets are there to fill orders. All you need is a few people to chicken out, the market will go to the orders. Simple as that. So that's more examples on the way up. Again, earnings per share doing the right thing. There's another one that happens all the time. You need 3 to 5 good trades a month. That's all. That's on the way down. That's on Meta, Facebook. Old what's his name? Down to his last couple of trillion. Got that one myself, believe it or not. I rarely short shares. I'm happier shorting the index, but I got that one myself. I think it was his smug look that made me short it. But that's just pure jealousy. I think it was the trillion that made me a bit jealous, maybe. Okay, I still can't afford a house in Hampstead, and he could buy Hampstead. Could it be so simple? Well, the trick is to wait for them. Now, when you see this, folks, that's a trend getting tired. And you can see that in fact, that reaction low is overlapping that high. And if you see that, you shouldn't be swing trading, and you should, in fact, be flicking forward to the next section where Jerry's going to talk about trading in sideways markets. Am I correct, Jerry? Jerry's going to cover that, and I'm into his So the biggest question, folks, that you get when you're trading a pullback. Here's what's going through everybody's mind when you're trading a pullback. Is it a pullback, or am I going to make a complete prat of myself and the trend's going to change? Has anybody thought that? Now, it's always so easy to see the market pulling back to an old high when you're sitting on a Saturday morning perfectly relaxed. Yeah? But when you're sitting there at your trading desk and you see it pulling back, what's going through this? Oh, this is not looking good. Pulling back. The last time I bought a pullback, it kept pulling back. And I'm going to make a right proper Charlie of myself. The wife's going to laugh. I'm going to feel miserable. The poor dog is cowering in the corner because he was kicked the last time. All right. So the only way to work out whether a pullback is volume. And this all comes back to the work of Richard Wyckoff. Now, for God's sake, don't go out and buy a Richard Wyckoff course without sitting down and saying to yourself, this is going to take some serious study. It's not something that you're going to work out on a Sunday afternoon while you're cracking open a couple of cold ones, I assure you. Wyckoff writes in the King James's version of the Bible. It's all these and thys. But I've condensed it down to some simple stuff. I did the course myself. It took me years to go through it. And basically, Jerry talked about it yesterday. This is the most important chart in technical analysis because when a market is rising, folks, volume should rise with it. And when a market is pulling back, the volume should pull back. And the only way to know for sure, technically, if it's a pullback or a trend reversal is the study of volume. So if you see the price pulling back and volume drying up, that's a sure sign that there's no sellers around. And what happens right down here at the turning point is that if you were to look at the intraday data at that point, folks, there's actually no volume at all. Now, if you were to walk into the mall here and you were to buy a bottle of sparkling water, I don't know what it costs here, but in London, in Tesco or somewhere, a bottle of sparkling water is about £1. Would anybody pay £2 for it? Probably not. But if the supply at £1 was not there, and you were thirsty, you might pay £1.10 for it. Yeah? And that's how prices go up. Whether it's stocks or whether it's soya beans, or whether it's coffee, the price goes up because the supply at the lower price is no longer there. And anybody who wants it has to pay more for it. So a leading indicator of a change in price is volume drying up. Now, most technical analysts get this completely wrong. They say that volume leads price. That's rubbish. It's the lack of volume that leads price. Prices go up because there's no sellers at that particular price. So down around here, folks, if you were to actually look at that, if that was a daily bar, if you were to look within that daily bar, you'll find that for half an hour, there's actually no volume going through it at all, apart from rats and mice. Now, I used to observe this in the FTSE 100 future, where at every turning point, for about half an hour, virtually no volume at all, apart from ones and twos. And then all of a sudden, when it starts to move up again, volume starts to expand. Now, sometimes it's very, very difficult to see because there are people in markets and people buying and selling shares that have got nothing to do with a share. Now, there's Joey at the back. Joey's granny dies and leaves Joey $250,000. Joey goes out and buys shares. It's got nothing to do with the share itself. It's just Joey's granny. I myself I used my 1980s lines on Joey's granny, but the old girl was having nothing of it. And she left the money to Joey. Joey, there was nothing too kinky, mate, just old Presbyterian stuff, all right? Jim Penna's daughter is getting married. Jim wants to give her a big day out. She's having the receptionist at one of those big hotels off Central Park in New York City. It's going to cost Jim $250,000 for the day. Jim has to sell shares below the retirement portfolio to pay for the big day. He sells shares that nothing to do with the share itself. So volume can be noisy, especially in the Dow 30 stocks, because the Dow 30 stocks is a huge amount of arbitrage going on. So you can't see the volume that well. But in medium cap stocks that are not subject to arbitrage with reasonable volume, you can see the volume patterns. If you wanted one thing, sir, to keep your hair, to get you up to an 80% hit rate, it's volume. Volume can do that. But sometimes you just can't see it. If you were to stand back and only trade in stocks that pull back on noticeably falling volume, your hit rate would be 80%. As long as you do it in sync with the bow tie, as long as you do it in sync with the general market. So one way to push your hit rate up, if you're a perfectionist, and I've done this for so many people, if you're a perfectionist, the only way, technically, well, there's two ways. One, you sleep with the MD's missus. All right. That's called pillow talk. The other way is to become really, really good at volume. Do not go out and buy a Wyckoff course. It's going to cost you $5,000. Most of the time, as long as you can see price pulling back on falling volume, that's a sitter. That's an absolute sitter. Let's see if I've got, and this came out of Wyckoff's original. Again, this was done in '89. I had the artist put the color in. And as you can see it breaking out. Where's the lady with Lulu? Lululemon, yes. Lululemon I know well. Believe it or not, I had a girlfriend. Can you believe it? And she only wanted Lululemon kit. So we trips down to Regent Street. That's a very expensive afternoon gym in Lululemon. $150 pants for the gymnasium. Now, unbelievable, unbelievable. You can see how it broke out on big volume. If you see Lululemon breaking out of that range on big volume, then I think it looks good. All breakout should happen on big volume, and then you see how the little bugger pulled back on falling volume. Now, if you're trading a range like this and you're trading breakouts, it should break out in big volume, and then you got to do your best to keep your sweaty little hands off it. Don't chase. It'll come back. Sooner or later, it'll come back, and it should pull back on falling volume, and then you're away. Yes, sir.
Does that volume include, high-frequency traders and dark pool traders, people who buy so many shares at one time?
The algos are programmed. There are trend-following algos that will ignore this, but the algos are programmed not to chase. That's rule number one in a trading office. You know, if you bought the high of the day, let's say that you bought the high of the day next Monday morning. In 20 years' time, they'll be laughing in the office. You're the plunker who bought the high of the day way back in 2023. You'll be laughed at forever. If you do it once and you fill a good client at the high of the day, you'll get a bollocking. That's a ticking off in London speak. Okay. If you do it 2 or 3 times, well, you're not going to get any more business if you fill somebody at the high of the day. Who's the broker on the floor in Chicago? If you fill somebody at the high of the day, you know, you're going to be dead. Am I correct? So markets will come back. This happens over and over again. Now, this is a trade that I took. I'd never heard of this bloody thing before. It came out of, I think, earnings per share, EPS, explosive EPS. I'd never heard of it. Has anybody heard of it? TH. All right, you got it, sir?
I had it, no longer.
Okay, I sold it out at that old high, which I think from memory is 16, just before Christmas. Pardon? I found it in VectorVest. I'd never heard of it before. Okay, And do you know what? All the big winners that I've got, I'd never heard of before. My biggest winner in the UK, without a doubt, over the last few years has been Games Workshop. It makes toy soldiers. And it came onto VectorVest. I stood up and talked about it at a London symposium just like this, and I was laughed out of the place because the moderator said that you're buying into a company that makes toy soldiers, and it was a 20 bagger for me. Okay, that, as you can see, we got big volume here, and then all of a sudden the volume dried up, and that's the volume. That's a volatility contraction pattern that I spoke about yesterday. You can find those quite easily, and this I don't know what vintage this is, but you can see, maybe you can see how that ran on big volume. And then all of a sudden it goes sideways and falling volume. You want to keep that hair, sir. That's what you're looking for. Okay. That's what you're looking for, big fella. And I haven't put earnings per share on there because it meant you couldn't see this as clearly. It goes sideways on falling volume. And if I put the moving averages on there, they're all saying good. And there was in fact a DEW buy signal there as well. And the thing has just kept on going. So frequently, you can't predict the first breakup. And then it goes, but then all of a sudden, it goes sideways on falling volume, and then it goes again. I like to do a delta search to find some of these delta price over the last 13 weeks, where the price has in fact run up by 25%. And then I eyeball them. That's where I found this, that's where I found the other one. That's particularly good trade. There's another one, folks. You see how the volume rising at the moment, and it's going sideways. I think that's going north. That's my pullback, and I want to see that pullback happening on falling volume. And folks, in a rally like this, see the market rallying, should rally on falling volume. So again, for that Irish fella, the same, only different. On a bear market, markets fall in rising volume, and they should rally on falling volume. That's the definition of a bear market. So if you see a market rising like this to that old top, which Facebook did do, then that's a great place to short it. If you've got the stomach to sell something you haven't got, that is. And folks, by the way, selling something you haven't got is much, much more difficult technically than buying and selling. And Joey's waving at me. Joey, he's trying to get me back for the old granny. She left you the money, Joey. Okay. There's Jerry's pattern. See, Jerry? Honorable mention in dispatches. Okay. That, again, done in 1989. That's the thing pulling back to that old top. And that was my first call in South African television. That share went from, I think, 17 South African rands to 109, and I made the call on TV based on that. And of course, you can use a technical indicator, and Jerry, I think you're going to be talking about technical indicators in a second, but I was taught the stochastic by the guy who put it together, George Lane, way back in 1986. I use, when the stochastic gets down to about below 20, and I've got a bow tie in place, then that makes a darn good signal. And that is an example, and I think that share has done quite well since I made that call in December. And it's showing a particular form of divergence. Thank you, the young man who sent me the slide on reverse divergence the other day. But as you can see, the price is rising, but the old indicator is falling. That's what a friend of mine, a very good technician called Jeffrey Kennedy, calls a slingshot. And you can see quite a few of those signals. Folks, if you trade in sync with the bow tie, if you trade in sync with the DEW, if that earnings per share graph is rising, then you're going to find that you get this right. And more importantly than getting it right, you should make a great deal more when you're right than you lose when you're wrong. If you want to get yourself up to that 80% level, then you need to discipline yourself to wait for a pullback on falling volume. That'll get you there. That is the most conclusive of all. to make this work for you, both financially and emotionally. You need to develop the discipline to tick the boxes. If you go in there with John Wayne, like John Wayne, with the old pistols flying and the reins in your teeth, the market's going to suck you in and spit you out. And you're going to find that you're going to be jumping from method to method and method, and you're going to find that you're going to be subject to late at night to all those guys on the internet trying to flog you a system that's right 80% of the time. There's no doubt that there are systems that are right 80% of the time, but they have to open up their stops so wide in relation to their targets that they are losing systems. So I haven't got anything to sell to you apart from blood, sweat, and tears, as Mr. Churchill said so long ago. So I've got quite a few more examples in the notes, but I'm going, there's Jerry's, those are the only patterns that I use. Engulfing, hammers, haramis, piercing line, which is a poor man's engulfing, and the old doji itself. And the last thing that I use is what I call a Wyckoff, what Wyckoff's called a Wyckoff spring, which is a double test, basically just it comes back twice. And when it comes back twice, folks, it tends to spring, and spring very fast. There's one of those in, what was that company? Not Skechers, the other footwear company that we looked at. Pardon? No, we looked at it yesterday morning. Deckers, yes. There's one of those in Deckers at the moment. And a lot of my trades are with the Wyckoff spring, which is just a double test of the old last top. I want to be in sync with the bow tie. I want great growth fundamentals. That earnings per share is rising. And at least the primary wave is up, but I personally trade with the DEW. The good trade is always the hard trade. The more difficult it is to do, the more money you make out of it. So my rules are, the good trade is a hard trade. I want to fade the short-term trend in the direction of the long-term trend. The long-term trend is up, and I'm buying a pullback. And I want to place my entries where the masses place their stops. How's that? Where everybody else is running away. That's my best trade in 2021. Is that AMD, I think? That was a beauty. That was a beauty. I nearly got to Hampstead on that trade. Hampstead's a particularly pleasant part of North London, I may add. Some great ones here. And there is, what is that, Jim? Can you see? That's NVIDIA on the way down. Went right up, kissed that level, and then fell out of bed. Ladies and gentlemen, please don't go in like John Wayne with the pistols blazing. Tick the boxes. You're looking for 3 to 5 good trades a month. 3 to 5 good trades a month. You should make 5 to 7% a month. And what you've got to do is to learn how to play the game over and over and over and over again. I'm happy to help you in any way. It's david.paul@vectorvest.com. Thanks very much indeed. And Big Jerry, I've run into your time. My sincere apologies. Sorry about this.
All right, welcome back, everybody. Good morning. You guys were at the bar late last night. I hear it in your voices. Good morning. There we go. Much better, much better. Okay. Hi, Glenn. Well, welcome back, everybody. David, that's awesome, man. Awesome talk. Love hearing that. Heard that presentation a number of times. Gets better and better every time. So we're going to stay along the same kind of the same lines here in terms of swing trading. This morning's a lot of swing trading, and today is a lot of swing trading and options trading. So we are going to talk about top techniques for trending and channeling markets. I really like this talk. One of my favorite presentations. I have a few. This is up there, probably top 3, top 5 favorite presentations. But I think it's an interesting approach to indicator selection, to technical indicator selection, because there are hundreds, right? Hundreds and hundreds of technical indicators. David mentioned a book called, what is it, Technical Analysis Explained. He said it's like this thick. We were talking yesterday about another book called Technical Analysis A to Z. If you want to read it, you can. I wouldn't suggest it. There's, of course, you can learn about every indicator in the book, but it doesn't provide you with any practical application. It's just here's the indicator, here's the definition, here's kind of how you use it. But what I think is novel to what we're going to talk about here is we're going to take a look at the overall market first, okay? Because not all indicators should be used all the time. So there are 3 areas that swing traders need to focus on to be successful. 3 areas, very similar to our mantra and our philosophy. The first, so when we converted these slides from the white to the blue, I lost my fly-ins here. But there are 3 areas that we need to focus on: when, what, and how. The when part of it is, what is the market doing? Not necessarily what timing system is up or down, but let's take a look at the market kind of from a 30,000-foot view. And what is it doing? Is it trending? Is it range-bound, channeling? Or is it hitting an extremely oversold situation? Okay, buy-to-sell ratio below 0.2, MTI below 0.6. Those are the 3 situations that we're going to focus on. Is the market, what is the market doing? Is it trending? Is it channeling? Is it in an extremely oversold situation? Okay? And what you could put here, guys, I want you to write that in, actually. Trending, channeling, extreme. Extreme, just extreme. Trending, channeling, extreme, or channeling, otherwise known as a neutral market. So we'll talk about trending first, uptrend. How do you recognize an uptrend? I asked this yesterday. A simple answer is a series of higher highs and higher lows. So if you're looking at the hard right edge of the VectorVest composite, and that's always going to be our foundation, our baseline for our market perspective, our market analysis, we are going to look for a series of higher highs and higher lows. Well, how many higher highs and higher lows? 2 or 3 at the very least. Okay, now you know you're in a trending market. Okay, what we also will look for is the MTI above or below 1. And do we have up-sloping moving averages? I really like what David did earlier, is he talked about, or kind of brought up 3 different moving averages that he uses. 21, 55, 89. Short-term, mid-term, longer-term moving averages. Because it's not just one trend that we're recognizing, it's multiple trends. What's the short-term trend? What's the mid-term trend? What's the underlying trend? So a successful swing trade or a high probability swing trade is one where price is above all of those types of moving averages, short, mid, long-term moving averages. And are those moving averages up-sloping? You know, moving averages, one of the most widely used, popular, oldest form of technical analysis. Up-sloping, the direction of a moving average, indicates the strength of a trend. So if we're looking at an uptrend, we want those moving averages to be sloping upward. If we're looking at a downtrend, it's the complete opposite, a series of lower highs and lower lows. Again, you're looking at the hard right edge of a stock graph or the market graph, and that's what you're seeing. Lower highs, lower lows. Is the MTI below 1? And do you have downsloping moving averages? So now we're looking, and look, I love David's 3. I like just a 20-day EMA, a 50-day simple, a 100-day simple, and a 200-day simple. Those cover pretty much all your trends, right? 20-day for the short term, 50, 100-day for the midterm trends, and your 200-day moving average for your longer-term trend. So MTI at the bottom of the chart, price of the VectorVest composite at the top. Don't look necessarily at every single little whipsaw crossover. Just kind of glare at it. Uptrend, MTI above 1. Downtrend, for the most part, again, you're going to get these little bounces. Downtrend, MTI below 1. It's a very, very important indicator. We always say, keep your eye on the MTI. This is a very, very important indicator for swing trading. It's a very important market analysis indicator for swing trading. Because swing trading, and I like pullbacks as well, buying dips in underlying uptrends. Well, I want the market to be in an underlying uptrend, and then it makes my stock selection and indicator selection a little bit easier, okay? So just again, just kind of glance at it, uptrend, MTI above 1, downtrend, MTI below 1. Now, what you're also seeing during the uptrend is higher highs and higher lows, and then in your downtrend, you got lower highs and lower lows. So it's just kind of confirming what the previous slide and what we were talking about. So here's an uptrend, VectorVest composite, 3 moving averages. Here's the 20-day EMA in pink. I don't know why I chose pink, but 100-day simple moving average in green, 200-day simple moving average in purple. So a strongly uptrending market is when you have price above all 3 of those moving averages. All 3 of those moving averages are sloping upward. Now, let's take, for example, if we took off the moving averages, and in this area here, we just kind of observed price. It's a little bit hard to see because the market is continuing to hit higher highs and higher lows. But what's happening to the shorter and the intermediate term moving averages? They're converging towards each other. They're coming closer. The separation, the distance between the two is getting a little bit more narrow. So weakening short-term trend, weakening intermediate-term trend. Now, that's not quite enough necessarily because the 200 days is your cruise ship. It's going to take a little longer to start reversing direction, and if price is still rising, that 200-day moving average is going to continue to rise. But as you see price begin to break down and truly begin to break down here, that's a head and shoulders pattern, by the way, on the VVC, a famous one because we talked about it during that time. I remember that was when November of 2021. That's right, right before the confirm call. But that's a bearish reversal signal called a head and shoulders. I mean, textbook. Left shoulder, head, right shoulder, neckline, break down below the neckline. I mean, it was just textbook. But you saw kind of during the pattern, you saw the moving averages begin to break down. Okay, so moving averages identify trends, and the slope of the moving averages is important to recognize. Downtrend, kind of just the opposite. Not only are you hitting lower highs, but your moving averages are sloping downward. You're going to get these rallies. We've seen a number of them last year, right? These short-lived, weak rallies within an underlying downtrend. And we saw the VectorVest composite, or the MTI. During this period, the MTI was for the most part below 1. So you're in an underlying downtrend. Again, we're taking just a very terse picture of what the market's doing. I haven't talked about any market timing signals here. We'll talk about that in a little bit, but just kind of getting an idea of kind of the bigger picture, what is really the market doing, the behavior of price, the behavior of the market, and moving averages do a really nice job of helping us out here. So in an underlying downtrend, I want to be bearish mostly. In an underlying uptrend, I want to be bullish mostly. Okay, I don't want to short stocks in an underlying uptrend. And in certain situations, I'll buy in an underlying downtrend, but I want that buy to sell ratio below 2, and I want the MTI to be below 0.6. Those are my buying opportunities in an underlying downtrend. But when you have the 50 below the 100, you have the 200 sloping downward, I'm going to look to short the rips, short the rallies, right? Once, and trend lines do a great job of this. I mean, if you simply just drew a trend line connecting the lower highs there, that's ideal opportunities there to short the market off of these subsequent lower highs. You're in a downtrend, lower highs after lower high. All right, so that's a trending market. We use moving averages to help us identify all different types of trends, short, mid-term, long-term trends. We use the MTI above or below 1. Very, very important. If you leave here with nothing, it's that MTI indicator. If you're a swing trader, you want to be bullish mostly when the MTI is above 1 and bearish mostly when the MTI is below 1. Not all markets trend. You know, we'd love that for the market just to trend higher or trend lower, right? On a consistent basis, you know, forming that nice pattern of lower highs. That's not always the case. Prices do, or the market does move sideways from time to time, otherwise known as range bound. They stay in a horizontal channel. In essence, what they do, or what price does and what the market does, is they bounce up and down, back and forth between support and resistance. This is an investor's nightmare, right? Buy and hold type of a longer term approach. You know, the average stock, if you're looking at the VVC and the market's not really going anywhere, you know, you make money, you give it back. These are, again, more longer term holds. You make a little bit, you give it back. You're just spinning your wheels in this type of a range bound market. It's otherwise known as a trader's market, because traders, swing traders, will buy off support, short off resistance. They're going to play the market up and down. Now, this is a rather wide range. Sometimes the range is, or the channel is much, much tighter, and it makes things a little bit more difficult. But this is this is 2018, I think, or 19. So very wide range. You can see a very clear level of resistance there, level of support, 3 touches, and that's what traders look to do. So I didn't get into the extreme situation, but we will once I get into the market timing program. But those are really the 2 different types of markets that we're gonna talk about. Indicators for trending markets don't work well in a neutral or channeling market. So when I say, you know, you can go out and read technical analysis A to Z, you're going to have definitions and explanations of all these indicators, great, but you may say, I just learned the MACD, I'm going to go use the MACD. And you don't take into consideration what the market's doing, because, and we'll talk about moving averages first. And it just makes sense. I said this is an interesting approach to indicator selection, because the first thing on that triangle was when. What is the market doing? That's the first thing we want to consider. Is it trending or is it range bound? If it's trending, I want to use trending indicators. Moving averages, MACD. MACD stands for moving average convergence divergence. I mean, doesn't it just make sense, right, to use a trend indicator in a trending market? Trying to use a trend-based indicator, that, like MACD or moving average crossovers, which identify meaningful changes in trend in a range-bound, non-trending market, that doesn't make much sense. And those indicators will fail you. They won't provide profitable, enough profitable signals to make it worth it. So moving averages, simple technical analysis tool that smooths out price data to create consistently updated average price. Okay, average price is taken over a specific period of time, 10 days, 20 minutes, 30 weeks, any period of time that you're looking for. Moving averages are used to establish insight into future real price direction. That's what they were designed for, to identify real, true direction, which is something that it's a little difficult to do just if you're looking at price. That's what I love about relative timing, right? Because it identifies not only trend, but the strength of the trend, the magnitude of the trend. A little hard to do that just by looking at price. 3 different types of moving averages: simple, exponential, weighted. Real quick, I'm not going to get too detailed here, but a simple moving average, just an arithmetic average. No price in the look-back period holds any more weight than any other price. It's a simple average. Divide the sum of the number of the days by the look-back period. There's your moving average, and it continues to change each and every day. A simple moving average, if you're looking at mid to longer term trends, I don't mind just a simple moving average. It's when you get into the shorter term trend analysis where you want to use moving averages that apply more weight to recent prices, because in a shorter term trader, more recent prices are the most important prices, right? So exponential moving average, EMA, just simply puts a little bit more weight towards more recent prices. Weighted moving average assigns different weights. It's a linear weighting, all right? So each day in the look back holds a little bit more weight than the previous price. Moving average crossovers. Classic technical analysis technique. Find stocks where the short-term moving average has crossed the long-term moving average. If you're bullish, short-term moving average crossing below the long-term moving average if you're bearish. And in the Unisearch tool, which we'll see in a second, you can require it or you can require both moving averages to be moving in the same direction. All right? So again, bullish signal, fast, or the short-term moving average crossing from below. Bearish signal, just the opposite. Short-term moving average crossing below. Short-term moving average crossing below the longer-term moving average if you're bearish. Those are the three different types of moving averages that I just talked about. And here's the sensitivity levels. Simple, because there is no weighting. Weighting, W-E-I-G-H, that weighing. There's no weighting in that moving average, so it's the least sensitive. And then as you begin to weight that moving average, it becomes a little bit more sensitive. So here's a couple of moving averages that I really like. Moving average for short-term entries. 3 and 8 EMA crossover, or moving average crossover price crossing above the 20-day. These are a couple of different moving averages that we teach in mastering moving averages. So just a few that I like there. What I also look for, and the acid test, by the way, acid test is the 10 and the 30 week. David actually pulled that up on the chart, I think, earlier. He used the 50 and the 150 day. Same thing, 10 and 30 week. 50 day crossing above the 150 is the same as the 10 and the 30 week. That's the acid test. Jim, let's get into the program. I want to go into Unisearch because scanning for these is important. And what I want us to pay attention to, well, first off, I'm sorry, I skipped something. What do I have to do first? I was about to go into Unisearch and start to scan for stocks. What do I have to do first? Check the market. What's the market doing? Should I even be looking at moving average crossovers or MACD? So let's go to graphs. Let's go to a market timing graph. All right, take off the buy to sell ratio, just put the MTI on. Now, I know it just crossed above 1 yesterday. 1 year, so let's take a look at our trends. Are we in an uptrend or are we in a downtrend over the last year? Downtrend. Go to a 6-month chart. 6 month over 6 month, what are we looking at? Kind of range bound, but really nowhere. Not in an uptrend because price is not higher than it was back 6 months ago. It's also not really lower than it was 6 months ago. So we're kind of in a neutral type of a market here over the last 6 months. Give me a 3-month chart. Little uptrend here, right, over the last 3 months. Long-term downtrend, a midterm neutral signal, but a short-term uptrend. Okay? MTI just crossing above 1, so boy, man, if this is, if the market does continue from here, here is kind of the earliest, right? Kind of the earliest opportunities for us to be bullish again. I don't want to get too deep in here, but go back to a 1-year chart. I also see an inverse head and shoulders reversal pattern over the last 6 months or so. Here being the head, left shoulder, here being the head, possibly, and you got to wait for these things to play out, this might be the right shoulder. Now the neckline here is a little crooked, which is okay. If you don't mind drawing an extended line, Jim, connecting those highs. Textbook inverse head and shoulders is if this rally stopped at that old high. But it can be crooked sometimes. You can just connect the, there you go, and extend that all the way out. So the breakout here on an inverse head and shoulders, and this is just a technical price pattern, guys, but I think it's an important one. Just like the head and shoulders, pull us all the way back, Jim, give us like a 2-year, go back to that November high. These work. I mean, these patterns, they truly work. I'm sorry, Jim, when I say pull us back, keep that high there, and then pull us all the way, I don't know, give us a couple years, and then stop. Okay, so here, left shoulder, head, right shoulder, almost a horizontal neckline, and then boy, when it broke down, we've never seen those prices again. So that's a bearish reversal signal. Here is a bullish inverted head and shoulders, also a reversal signal, but let's see what happens here over the next week or so. So breakout above that trend line there is a bullish breakout. MTI is just crossing above 1, so you know, we got, I don't want to use hope, but I'm encouraged a little bit by the MTI crossing above 1. I think this level right there really important. So are we trending? Can we use a moving average crossover right now? I would say no. I would say, look, if we're going to try to find a high probability trade, you know, what did David say? He said something funny, said a lot of things funny, but he wants to find the ideal setup. It's got to be the juicy, juicy setup and not, you know, looks okay, I'll go ahead and trade it. Or I think the market's doing this, and you know, you have to have this juicy setup. You know, you want high probability trades. What I would look for, I would say we're more in a neutral kind of range-bound market, okay? You know, if we were kind of back here, you know, beginning of the downtrend, I'd have a different perspective. But now we're off of the lows, we're off of recent highs, so we're kind of right in the middle right now, right? Hard right edge. Let's be practical in how we approach this talk and how we approach the indicators that we're going to use. I'm not looking historically and saying, hey, we're going to go back here and, you know, that's when the market was trending. Right now, what is the market doing? I think it's range bound. I'm not ready to use moving average crossovers just yet. I want to look for something or an indicator that is better suited in a range bound market. So let's go back into the slides quick, Jim. Oh boy, there it is. MACD, another indicator that you can use in a trending market. I don't want to get too caught up in all the definitions or the descriptions, excuse me, the calculations. You don't need to know it. All you need to know is how to use the indicator, but here they are in terms of the definitions and the calculation. Interpretation, that's the most important thing. You know, the indicator technical analysis A to Z book is going to give you all the calculations, the formulas. They're also going to teach you how to use it. But my most important thing here is in the interpretation. So a crossover, a buy signal with the MACD. MACD rises above the signal line. Sell signal was when the MACD falls below the signal line. I also like to look out for divergences with the MACD, bullish and bearish divergences. If MACD is an indicator of trend, emerging trend, strengthening trend, divergences will help us recognize when that trend is weakening, whether it's an uptrend or a downtrend. So that's what divergences do. We can use RT for that as well. So here's a MACD just on a daily chart. Let's get back into the program. Real quick, guys, I want to do a few things. Not that I would use the MACD or any moving average crossovers, but I want to give you guys a little something here when it's time to use those indicators. Go into Unisearch. Go into our ProTrader folder. And we're short-term traders. I want to look for a 3 and an 8 EMA crossover. That's fair, right? That's a good combination of short-term EMAs to use. So Jim's going to find it's not in the folder, but we're going to create it. We're going to kind of modify this one right here that says 5 and 10-day EMA crossover long. And Jim's going to come here in the value box, and instead of the 5 and the 10, he's going to drop down and select the 3 and the 8. So 3-day EMA crossed in the past day. In the past day, you're getting that initial crossover. The 8-day EMA, and I don't need both moving averages moving in the same direction. You could do that, but I'm going to click OK. If Jim is not going to run the search yet, but when he does, it's going to find every stock in the database that yesterday, because we got the date right, yesterday, had a 3-8 EMA crossover. We looked at the triangle earlier in one of the slides, and the first one we talked about, and that's the only one we've talked about so far, is when. Everybody have a better understanding of, okay, that's an interesting approach. I have to take a look at what the market is doing, not necessarily, am I in a confirmed up or down? Is the primary wave up? Is the DEW up? I want you to not focus so much on the specific timing system used, but what is really the market doing? Is it trending? Is it channeling? That's really important to recognize. So 3-8 crossover is just simply going to find a moving 3 in the EMA crossover. What I want to do is I want to add a few more parameters here. If Jim runs the search and we're going to find all the stocks with a 3 EMA crossing above the 8, we know that's a short-term signal. Well, what's the long-term trend of that stock? It's going to bring up a whole bunch of stocks. I don't know what the long-term trend is. I'd have to go to the chart. We can add that into the search. So yes, I want a 3-8 crossover, but I also want price to be above its 50-day moving average. I also want price to be above the 200-day moving average. So I'm in an intermediate term, a midterm uptrend with price being above the 50. I'm in a long-term uptrend with price being above the 200, but the 3-8 crossover is giving me that pullback, short-term pullback, and then resumption of trend. You can look at charts. Again, the triangle, we talked about when, the other one was how. How am I going to find my trades? We have a couple of different methods. The one-by-one method is not the preferred method. It is looking at charts, going into the top VST stocks, going into the top S&P watch list, S&P 500 watch list, and saying, okay, this is what I'm looking for. I got to go through all these charts. That's not the preferred method. With the Pro Trader tool that everybody should have, I mean, if you have a real-time subscription, it's included, with the premium subscription, not included in the basic or the intraday, but available to purchase. I think every trader needs this tool. So if you're a swing trader and you're doing it the one-by-one method and just saying, this is not a very efficient use of my time having to look at all these charts, this scanning tool is going to get you really most of the way there and save you a heck of a lot of time. So Jim's going to add in 2 parameters. Price greater than, so he's going to go stocks, price volume, price split adjusted, greater than, and he's going to come in here, value, he's going to go to stocks, VectorVest fields, and do we have a 50-day MA? Yeah, if you just scroll down, use that, there we go. It's got to be here somewhere. Getting close, I think. There it is. 50-day MA price right there, not EPS. One right below it. There we go. Okay. Add another line where we're looking for price to be greater than also the 200-day moving average. You have to add those 2 in there, or 2 similar to this, because just looking for a short-term EMA crossover isn't enough for me. I need to know what the underlying and midterm trend is. Look, professional traders, the very best, they apply this type of methodology. RSI2, you've heard of RSI2, right? Larry Connor's RSI2, he makes sure that the stock is in an underlying uptrend, but boy, he's buying the short-term pullback, and he's applied the 2-period RSI and a 5-period moving average to kind of help with that, right? Help identify the short-term pullback within an underlying uptrend. Very similar. The 3-8 crossover is your short-term pullback and reversal. But, thank you, Jim, but the 2 moving averages that you add there, add the other trends to the equation. You're sorted by VST. There's your VectorVest advantage right here, right? You go and run this search, I don't know, in any other kind of scanning tool, and I don't know how that list of stocks is ranked. Could be by symbol, who knows? You don't know, and you guys, you appreciate the sort, the ability to rank stocks in a very specific way. I like VST, I also like CI, Comfort Index. So Jim, run that search. All right, we got a few. Tidewater, Supermicron, Bear, okay. All right, let's graph them. Ooh. Well, hold on. Let's take off, let's see. Jim, I want a 50-day moving average, I want a 200-day moving average, I want a 3-day EMA and an 8-day EMA.
Way to go, Jim.
Instead of Jim, click here, he knows.
I'm sorry, what'd you say?
3 EMA, you could take off, to keep volume, change this MA to a 50. Nope, I'm sorry. That you could change that one to an 8. It's there already. Oh, perfect. We have them. I'm sorry. Click on that one. Yep.
You want 3 and 8.
I want a 3 and an 8.
Okay.
Uncheck the 20. Change this one to a 50.
This one?
Yep.
Okay.
That's volume.
Oh, it is volume. You're right. Okay. Whoa. Glenn. Yeah, unchecking that, Jim. Yep. And then you are going to add, right-click on price and add 2 moving averages. Simple. Simple. And a 40, and change the 40 to a 50. This is a good signal. This is a good setup, by the way.
Are you messing up my graph?
This is a really good setup. This is the first stock that came into the top of the list. It almost is a I want a simple moving average, 50. Scroll down to the bottom.
Well, on the bottom, it's a new one.
Yeah, there you go. Perfect. Awesome. Oh my goodness. This is, guys, very rarely will I run a search and pull up the top stock and it's just perfect. Price, where's price right now? At the 50-day moving average. Yeah, it's moving, it's pulling back off of a new high. Are you in a trending environment? Are you in a trending stock? Looking at the last year, is price higher than it was a year ago? Have you seen higher highs and higher lows? Right? That's a trending stock. Price is pulling back off of a new high. It has landed right at the 50-day moving average. If Jim would have put on the 200, we would know that it's below the 50. Right? So price is above the 200. It's landed on the 50. Take off price for a second and just zoom in real quick. Yep, zoom in. Here's your 3-8 crossover. Okay, here's your 3-8 crossover. Is it a strong crossover? Not really, but that's what follow-through is for. Waiting for follow-through. Guys, I'm not saying go out and buy this. I'm showing a very nice example of a short-term moving average crossover within an underlying and mid-term uptrends. Kind of what I've explained to this point. Now we're kind of practically applying what I've been talking about. And that's how you do it. You'll put price back on. So really good stock. This also might be very close to a Wyckoff spring or a sweet spot. Let's open us up, Jim, a little bit. Give us a little bit more. Yeah. Are we pulling back? Almost. Give me a horizontal line right there. Right there. That's fine. We're in that zone, aren't we? Price has just recently pulled back to the old high, just exactly like David was talking about. But now we're just applying, and he said, this, if you used anything, and just, if you used nothing but this, you'd have a lot of success. We're adding a few more layers in that we got that moving average crossover helping us out as well with the other indicators and moving averages there. So really good one. Let's take a look at another one quick. And oh, by the way, EPS rising. EPS rising. So here, price is above the 50. The 50 is upsloping. What does that tell you? Your midterm trend is up and strengthening. Take off price. It looks like we just got a little bit bullish crossover here. Again, I wait for follow through, but this thing looks like it has some room to run. You're in a nice, strongly trending stock there. All right, let's close out of that. Good scan there. That's a good scan. If you're writing this down, you get the videos later. 3-8 EMA crossover. With price above the 50 and above the 200, that's a strong signal. All right, let's close out of that. You also have in the Pro Trader folder MACD, and you can do something very similar. So if I look at the MACD crossover, again, if we were in a trending market, I would argue that we're not right now, not yet, but I want to make sure you understand how to apply the indicator. You click on MACD, just say no, Jim. So this is just simply looking at a MACD crossover. Just click on continue. All right, we're good. Simply looking at a bullish MACD crossover. MACD is a rather short-term indicator. So here you would also want to layer in other moving averages to make sure, okay, I got my MACD crossing, my short-term trend indicator MACD crossing, but what's the long-term trend? What's the intermediate-term trend? Okay? Go ahead and close that. And let's get back into the slides. Okay, you can also use MACD on a weekly chart as well. So if sure, MACD is a technical indicator. The weekly MACD really removes a lot of the noise that the daily MACD might give you, right? So if you're even a more a position trader, yeah, swing trader, you're holding a position for a few days, maybe a few weeks, but position traders, you want to hold on to a stock for a few months. I think the MACD is a good indicator to use, but apply it on a weekly chart. It's going to give you some solid signals. So now we'll talk about indicators for neutral markets. Support and resistance, Jim and I were talking about this last night. We both agree that this is probably the most important technical indicator that you should consider always. Always. You might use MACD or other type of moving average, but you should always know where key support and resistance levels are. Okay? So support and resistance, we kind of saw that when we were looking at the market, right? The BBC bouncing up and down, range bound, off of support, off of resistance. If that's what the market's doing, don't use the MACD. Use something like support and resistance. Use stochastics. Use neutral technical analysis indicators in a neutral market. Try it. Try to take a look at a time where, the market was moving sideways, beginning of 2019. And then take a look at some stocks, good stocks, top VST stocks, top S&P stocks during that time. Apply the MACD to it and you'll see for yourself. You're not going to get profitable signals. You might get a few, but it's not going to be consistent. Okay? So support is the price area under the market where buying pressure overcomes or equals selling pressure. So the support level is where demand is deemed strong enough to support the price from falling any further. Resistance, whoa. There we go. Resistance is the ceiling. It's the price area above the market, over the market where selling pressure overcomes buying pressure. A supply is deemed strong enough to resist price from rising any further. Okay? And there's zones more so than exact to the penny prices. And that's what the VectorVest graphing tool does. It applies those support and resistance levels. You hover your mouse over them, and that creates your zone. Don't buy at support. Buy off of support when price retraces from support. Don't sell at resistance. Sell when you see price breaking down off of resistance. If that resistance level holds, because it might not hold, right? Because eventually buying pressure is going to overcome selling pressure and price is going to break out through resistance. And if you're long a trade, that's what you want. But if that level holds again and retraces, you close your long position. So don't buy at resistance either. Don't trade at the levels. Trade when price retraces or breaks those levels. Okay? What had been resistance becomes support. So if price breaks above resistance, what a lot of times you'll see is a retest of that zone. It's not resistance anymore. It's now support. Just like David put on the chart, retest of support on low volume, strong signal. But wait for the retracement off of that zone. All right. Here's just an example at Merck. Okay, this is April 22, most of last year. So range bound, I guarantee if you're trying to apply the MACD in a situation where you are not seeing price highs, but you're not seeing lower lows either, you apply the MACD to this type of a price behavior, no good. Okay, but range bound, you buy when price, you're bullish when price retraces from support, you're bearish when price retraces from resistance. You're bullish, so here, real quick, 1, 2, 3, 4 touches in that zone. 1, 2, 3, almost 4 touches in the support zone. Something's got to give at some point, and the bulls won in this case because price, retraced from resistance there, little mini pullback, but that was it. Sellers gave up, and the bulls won, nice breakout above that resistance zone, bullish as well. We don't see it here, but a breakdown below support, bearish. We didn't see the retest here, and that's the difficulty or challenge sometimes in, hey, I want to buy the breakout, but you might feel, oh man, this thing is just going bananas here. It's going to pull back at some point. I'll wait for the pullback. And sometimes you'll get the pullback and the retracement to the support. Here you really didn't. So if you waited for the pullback here, you didn't get it. So you kind of missed out on a good trade there. All right, you can also use support and resistance on weekly charts as well. Okay, same type of an approach. My favorite indicator, stochastics. Again, just description here. Don't worry so much about the description. Interpretation, stochastics above 80, overbought. Stochastics below 20, oversold. You don't buy when stochastics is below 20. You wait for the crossover from below 20 to above 20. Let's couple both of those. And I don't think this is, well, it actually is, perfect. Couple both of those indicators. Price retracing from support and stochastics below 20 to crossing above 20. You can code that in too into the Unisearch tool. Okay, so here you're in a range bound type of market here, right? Clearly support there. 3 nice opportunities off of those support levels. So you're combining indicators. By the way, I said don't use the MACD in any other type of market but a trending market, and that still holds true. You can mix and match the other indicators. I'll use stochastics all the time. I always look at support and resistance. If the one indicator not to use in any other type of market but a trending market are moving average crossovers and MACD, trend indicators. But again, I'll mix and match some of these other ones. Let's get into the program. Okay, and in the Pro Trader folder, we have, let's see, so if right now, we're kind of range bound, we're rallying a little bit, I want to find stocks right now whose stochastics has crossed from below 20 to above 20 and whose price is retracing from support. Does that sound fair? All right, so we're gonna write that in. And these scans are not like Jim's ruler stocks or any other type of scan or search where you're gonna just buy the top 10 because it's part of a trading system. We gotta look at some charts here, okay? We gotta find, again, the juicy ideal setups. Yeah, let's go stochastics crossing above 20. Okay, just simply find stocks whose stochastics oscillator has crossed above 20 in the last day. We're going to add another parameter here. Jim's going to go stocks, price volume, price split adjusted. Operator is going to be support and Pro Trader, support and resistance. And then the value is going to be price retracing from support. Number of touches 2 is fine. So basically that's the minimum number of support touches that I want to see. Price retracing from support, we can say by 1%, you can say by 1.5%, you could say by 2%, let's go 2%. Give us a nice little pop off of support. Click OK. We're sorted by VST. What did David said? GRT times CI he likes. I think that was it, right? Another really good sort. CI alone, another really good sort. But let's go run the search. Let's see if we got any. All right, we got a few. Let's take a look at the charts. All right, let's put price on. Let's keep earnings per share on. I love it at the bottom. Put price on. Let's take off all the moving averages, Jim. Yep, all of them. All right, so this is interesting. Good, and then add parameter and add support and resistance and stochastics. And take off RT for now when you do. Okay, take off RT, scroll down and check both of those. They were already, support was already on there, but okay, so check support and resistance. You're gonna find a support level right in this area, boom, right there. That's what the search just found. It just found price retracing from support. It also found stochastics below 20 at some point recently, crossing above 20. Not a strong signal for this stock. That's why you just don't buy the top 10. Why do I say that? Why do I say this is not as necessarily a strong signal and not a trade that I would take tomorrow if the market was up?
It's only very small between support and resistance.
Comment was, or answer was, a very narrow range between support and resistance. So in a situation like this, I would look for resistance as my initial profit target. If I'm going to buy off a support, resistance is going to be a level where I look at to initially take profits. Well, I don't have a lot of profit potential here with this particular stock, right? Yes, I'm retracing off support. Yes, stochastic has just crossed from below 20 to above 20, my goodness, if we can break out above that level, that's a strong bullish breakout on high volume. What's volume doing recently? It's kind of dry, a little dry here, right, over the last, that's generally what you'll see in these range-bound type of situations. You know, I would love to see a breakout, but that would be my trade. I'd put this in a watch list, and I'd keep an eye on it. Of course, I'd want the market to keep rising, but I want to see a break. I'm not going to buy this support retracement. I'm just not, because my profit potential is not really there. Let's go to the next stock. Not really. So so here again, what these scans do, they get you most of the way there. That's how I like to put it. They get you most of the way there. There is some cherry picking involved. Yes, we are retracing from support. Yes, stochastics has just crossed from below 20 to above 20. Both very good signals, but let's take a look at price a little bit closer to see if this trade would make sense. And it really wouldn't here. You're too close to the next resistance level. I'd pass on this one, I'd move on. But a breakout above that resistance level, I think there's some decent upside to the next resistance level. You guys see that? There's a little bit more profit potential if I do get a breakout above that zone on high volume. That would be a nice bullish setup. Also has a buy rating, and look at the earnings per share. Next one. I want to find one. Well, there's resistance. We're little range bound still. Just retracing from support. What price? I can't see. What price is that? The close. And what's the zone, the support, resistance zone above? Nah, see, not a ton of profit potential. Move on to the next one. I want to find one that's retracing from a solid support level, too much congestion there. Next one. There we go. This one's a good one, right? It's actually both retracing from support and breaking resistance. It did that on Friday. It did that yesterday. It retraced from this support level. Look at the volume too. Pretty decent volume there over the last couple of days. Boy, this is a nice one. So you kind of go through. Can you imagine how long it would take you if you didn't have a scan and you just say, hey, let me look at the top VST stocks and try to find a setup like this. You put on support, you put on stochastics, you're going to go through a lot of charts. This gets you most of the way there. What's that price, Jim, that resistance zone? 322.95. And what's price?
300.
All right, almost 10%, 20 something bucks on a $300 stock, almost 10%. That's worth it. Okay, let's close that and get back to the slides. Any questions, guys, before we take a break? I'm going to bring Ray up to kind of bring us to break, but any questions? Oh, I'm sorry. Any questions, guys? Yes, sir.
Would you add in your fundamentals, are they greater than 1.3 or 1.4?
Yeah, sure. So question was, should you or could you add in your fundamental indicators, looking for, let's say, RV above 1.25 or RS? Sure you can, absolutely. And you should. The sort's going to really help with that, because if you're sorted by VST, you're likely going to get some pretty good stocks at the top anyway. But if you want to keep adding those fundamental layers in there, you absolutely should. Yes?
And do you sell at the resistance, or do you ride that?
Question is, do you sell, good question, do you sell at resistance or do you ride it? What I like to do is take half off. Half off, book profits, raise my stop to entry, and I can't lose on the trade. No matter what happens, if I take profits at resistance and price retraces from resistance, I'm going to take half off. If it pulls back all the way back to my cost basis because I've raised my initial stop up to that level, then you close the second half, but you book profits on the first, and it's a winning trade. So take action at resistance or when it retraces from resistance. You could close the whole position if you want, or close half. One last question, yes?
If you go back to Merck, it keep doing the higher high and lower low. Would you buy it?
Merck, was that a slight click on there, Jim, for me? Question is, I'll get there in a second. I just want to get back to the stock there. Okay. Question is, repeat the question. So we're looking at Merck. It's hitting. So would I buy it right now? Absolutely not. I'm not look, it's a high momentum trade, right? This is a high momentum trade. We're talking a little bit more about pullbacks, buying the dips in an underlying uptrend. That doesn't fit the bill here. It's just going ballistic. I look for some support. Look, I would love for it to come back and retest the old high, and that's when I would look to take the trade. All right, Glenn, come on up, buddy. Thank you, folks.
Testing, 1, 2. All right.
So Ray was gonna come up here, but Ray said, hey Glenn, can you come up there? I said, yeah. So as I look out in the room, good gravy, y'all need some coffee. There's a lot of coffee out there. Y'all need some coffee. So it's all good. It's all good. I'm going to do a shameless plug for our YouTube channel. For everybody who's out there, we got like 1,400 people on the YouTube channel right now on a Saturday, which is really good. So yes, VV Nation out there, thank you. Thank you definitely for being out there. If you're brand new to the channel, don't forget to hit the subscribe button. We're trying to grow the channel. If you like the content, hit the like button. And if you can, share the content. But folks, for those of y'all who didn't make it here, we got a full room of people in here today. So I want to give my hands up to that as well. We got a full room of people, and product support is here to answer your questions if you need to call in. So with all of that being said, a lot of great content. I know what Jerry and what David did, a lot of it was practical application, not just talking about the indicators and what to look for, but practical application to get you in and out of those stocks. So folks, we got a lot of still more great presentations for you today. You don't want to miss out on that, especially if you're on your YouTube channel. But you guys, man, you gotta remember, what is this? This is your business. You gotta get excited about your business, all right? And that's what this is all about. Don't forget, if you're thinking about orders, we're gonna have a rush at the end. You probably wanna take care of them now. If you're an annual subscription, renew your annual. If you're on a monthly subscription, you need to think about going annual in one of the facets. All right, we're gonna take a break. Go get some coffee. I need to see coffee on everybody's desk when I come back. Go get some coffee, and then Stan Heller's coming up with the NPI. You don't wanna miss that. See you guys.
Hello, and thanks again for joining us for the 2023 two-day investment seminar. As you know, we're offering the $100 discount voucher to all attendees once again this year, and I want to spend a moment to explain what the $100 voucher can be used for and how to take advantage of it. This year, you can apply the $100 voucher to any one of the 4 courses listed on the offers page, or it can be applied to any of the 4 annual group coaching packages. The voucher is not valid for a base subscription like end of day, intraday, or real time. When you go to www.vectorvest.com/offers, you will see the group coaching packages button that you can click on to access the list of coaching groups. The prices you see are our special seminar prices and does not reflect the $100 voucher. When you submit an order for one of the coaching group packages, we will automatically apply the $100 voucher to the price listed when one of our billing specialists apply the order to your account. The additional $100 discount will not be displayed on the order page itself. If you're ordering one of the 4 courses listed, the $100 savings will be applied at the time of purchase, so you'll get an additional $100 off of the prices shown on the offers page. If you're ordering an annual coaching group and a course, the $100 savings certificate will be applied to the course and not the subscription, as there is only one voucher to be used per person. This voucher will expire at the conclusion of the two-day seminar and will not be valid once the seminar is over. Thanks again for joining us to kick off 2023. Jerry, just sit there. Hello, everybody. Welcome back from the break. Hello, everybody. Welcome back. All right. We're moving on to our next talk. We have a very, very, very special guest, Mr. Stan Heller, who's going to talk about the near perfect indicator. He'll give you a little bit of background behind it. He spent a lot of time developing this system, and it's absolutely brilliant. A lot of you are familiar with it. He's going to really show you the ins and outs of the near perfect indicator. And then when Stan is done, I'm going to come up here and show you something that Mr. Steve Chappell, with the assistance of Dr. Bart DeLito, was able to create in regards to the near perfect indicator. So it's going to be pretty exciting. But without further ado, let's send it over to Mr. Stan Heller up in Canada.
Okay, I'm just waiting for Ray to finish. Oh, well, then we will start. Hey, thank you very much, Ray, for that introduction. Very kind. And good morning, everyone in Tampa and around the world. It's truly an honor and a pleasure for me to be with you today from my home in Lethbridge, Alberta. And it's a particular honor to follow David and Jerry this morning, two extremely knowledgeable and exceptional instructors. The near perfect indicator is a terrific indicator on its own, but it fits very well with everything that David and Jerry teach in their swing trading sessions as well. So that's really great. As an aside, yesterday when David was speaking, I saw a warm reference in the chat to David's use of TF. I thought it was a stock symbol or an acronym for a particular strategy, but I couldn't find it anywhere. With determination and fortitude, I kept looking, and then it hit me. I got it. I also just have to say I appreciate so much our VectorVest community for the ideas and suggestions you continue to share with me and our subscribers for improving the near perfect indicator. Steve Chappell, Gord Nixon of Canada, Jesse Loxton of Australia, and Steve RT40 of the UK. I listened to him on David's Q&As, among others. So keep them coming. That's pretty fantastic. We'll make this as close to perfect an indicator as we can get. So let's get started. All right. So we know that many traders and investors struggle at times with knowing when to enter a trade and when to exit. And 2022 was a particularly difficult period. I think for many wannabe long-term buy and hold investors, that just wasn't working. And many of us really did more swing trading, and that's what we want to do. But recently we discovered that by placing two specific moving averages on VectorVest proprietary relative timing indicator and the stop indicator, we created something very special. We call it the near perfect indicator. And it's a highly visual methodology that anyone can follow. And that's what I love about it. I'm getting feedback that it's just very easy to recognize the entries. And today I'm going to show you a bit more about setting price targets and being able to exit in a timely way as well. And the NPI removes the uncertainty from your trading and replaces it with a systematic, easy way to find high probability setups for better, more consistent entries and exits. So that is our goal today. And the cool thing is the near perfect indicator is based on repeating stock price cycle waves. And like the tides of the ocean, the market and a stock's price move in recognizable, repeatable wave patterns. Once you recognize those waves, you can make better decisions about when the best time to enter is and when the best time to start taking profits. These waves have a rhythmic pattern of contraction and expansion that can be used to predict price uptrends, downtrends, sideways moves, and velocity and momentum. And I'm looking at the chat and I see lots of folks chatting in. They use the NPI every day and they love the NPI, and so do I. So it's wonderful to be able to come to Tampa virtually and explain a bit more and some of the new things we're doing. So what does this look like? Well, I had our graphics team create this image for us, and what it's showing is that price cycle waves occur when the price expands and becomes extended, reaches a peak, and then contracts closer to its mean average or below and into a trough. So you can see the point of maximum financial opportunity is when the RT, this is the RT40, when it's in a trough, there's a little bit of a quiet period, and then it starts to move up, and we want that RT5 moving average to be a strong move to the upside. And then it continues, we get a little more confirmation, sometimes the buy rating from VectorVest or a very large volume candle suggesting that institutions are coming in. So that's where you have a strong buy, a real conviction buy. And then along the way on the upside, quite often you will get a bit of a pullback and another crossover of the 5 moving average above the 40 moving average of the RT, and that's a great entry point as well. So if we look at it at the buying low, we know that aggressive investors confidently look for attractive buying opportunities when the stock is pulled back or is battered. So this is the point of maximum opportunity. And I want to say, because we're using the RT5 moving average and the RT40 moving average, market makers don't know where you're entering and where you might be exiting. Other investors and traders don't know and don't see it. It's an exclusive to VectorVest. So it's a huge advantage, giving us an edge in our trading. So as we go along, you can see the strong buy, waiting for that expansion of and momentum building after the pullback, the mid buy, that's still early in the trend, but another opportunity with that crossover, and away we go. Taking profits, risk management is a priority when the price cycle has reached that peak up here at the top point. That's the point of maximum risk where things can turn south on you very quickly. And so you've got to be prepared for that. And along the way up where this sell high is, you should at least be taking half your profits, if not more. And then a late sell is when you just don't have the discipline. You're an emotional trader or investor. You don't have sell rules, and you just let things get out of hand, and then you sell close to the bottom or the trough where you should have another opportunity to go long. So this is really the price cycle waves. And what I noticed back in April when I first wrote an essay for the Canadian VectorVest Views about this methodology, what I noticed is that the 40 moving average of RT tracks these price cycle waves very, very closely and can be a very strong help to us. So which stock is it? I guess it's in the slides if you've opened the slides. And by the way, I've added some slides. I kind of pulled my crib notes. I wasn't sure I'd be able to see them here today, but I can. But so the slides will be a little bit different, but pretty much the same. But here's the 40 moving average of RT on a particular stock, and you can see how it mirrors the previous slide. So to end the suspense, I'll just tell you it's Apple. So our graphics team took Apple, put the 40 moving average of RT on it, and you can see how it looks here. But the nice part is there's hundreds of stocks that display similar wave patterns every single day. We have lots of choices. And so we can use the price action or other technical indicators to help us with our choices. So let's start by doing a little bit of a case study. I find that graph history is just a terrific way to learn and gain confidence in our trading method. And so I'm going to start by trading Apple using the NPI. And I'm just going to give you the rules in this slide. I had it in my notes, and I thought it was better just to put it down here so we can all read it. But we're looking for an alert and a setup. And that's the RT5 moving average crossing above the RT40 moving average. We can use the custom Pro Trader searches, the 1-day crossover of RT and 40, or the 3-day crossover. Those are now pre-built in all of our countries in VectorVest. Or you can simply use a watch list or the industry viewer and do a chart review. It doesn't take very long. We need to have a trigger. The 5 moving average continues higher the next day and is confirmed by price action following through. And the steeper the 5 moving average, in other words, when it goes straight up, the better that's going to be for your probability of success. We want to set a stop loss, an initial stop loss below a recent low candle of your entry point. Very important. In this market environment with high interest, high inflation, we want to keep our losses small. And so we set a stop loss right below our entry point. Not too tight that you're going to get stopped out with a minimum volatility, but tight enough that you're going to cap your loss at between 5 and 8%, for example. We want to set a first target. Every trade should have a first target, and when that target is hit, raise your stop to break even or better. Dr. Paul explains this methodology with breaking even and letting your shares continue to run after you've got back to even. And I love it. Aim for 2 or 3 additional targets. And then we'll use price waves and the RT5 moving average to set our targets. And this is something fairly new that I've been using now for a few weeks, and it really works well. So I want to share it for everyone at Tampa. And take full or partial profits near the top or peak of that price wave. Remember, we just looked at that graphic where we showed the peaks and how that corresponds to the 40 moving average peaks. So we can use that methodology. All right, and I'm just going to grab a quick sip of water. So we want to take full or partial profits near the top or peak of a price wave. And I'll explain some exceptions to that rule. So let's go in and open the program. Now I'm gonna stick pretty much to the U.S. market. Just know that just know that this system works in all of our countries, Canada, Europe, UK, and Australia, as well as the US. So it all works very, very well. So first thing I'm going to do is just take us back here to April 8th. April 8th, 2021, we got a green light there. This is the confirmed calls, happen to get a green light there. And I'm filtering on a stock watch list that I created. It's Tampa 2-day watch list. And then we can run the search. And you'll notice Apple shows up having the 5-day moving average of RT crossing the 40-day moving average of RT within the last 3 days. So this is a technical search. It does require the Pro Trader add-in, but a very handy search. You can also use the buy rating search. New buys is a possible workaround, but this works really, really well. So here's Apple, and I've got a graph already set out to April 8th, 2021. So I'm going to ask you, in the audience to kind of follow along with me and help me decide when to take some profits. This is our entry. What I love about this entry, you'll notice how price has been trading in a channel that Jerry D'Ambrosio just spoke about, trading in a nice channel. There's a quiet period and then a breakout with some fairly good sized candles. So it's a really good, solid entry point. Now, here's what's new that you might consider using for yourself, and that's setting those price targets. And how do we do that? Well, we look at these price cycle waves. There's tops and there's bottoms. So let's just come up to the top row here and grab the horizontal line. I'll grab the horizontal line, and my first price target is going to be the peak of the most recent wave, which is right about there. Now I can set additional targets. For example, here price reached, or at least the RT5 moving average hit another high, so that might be a second price target, and a third target might be at the top of this peak here. Is everybody following that along so far? All good? All right, so what I'm going to do from here is just move my date bar along one day at a time, and I'll put on the date line. Let's just see where we're thinking about entering. We got the crossover actually on April 7th, so we've got follow through the next day, so we would be entering at the open price of about $129. Everybody good? Looks like everybody's getting it so far. So there we go. We're into the trade at $129, and our goal is to hit this first price target. We need to set our stop price. So we're going to take this freehand line this time, bring it over here, and we're entering in here. So we're just going to set our stop, our initial stop right there. And actually what I want to do, and what I do, is use the extended line. So I'll use the extended line, and that's our stop price. All right, we're just a little bit below the actual price. Let's just see where we are there. So we're at about $125, $26, so about $3 off of our entry. Okay. Andrea says, we're with you. That's awesome. All right, well, let's go one day at a time. And when you see a possible time when you want to exit, just chat in a 1 into the chat box. The 1 says, we've hit a target, I want to get out, or I've lost my money and I want to close the trade. So let's go one day at a time. So far, so good. Notice the 5 RT now is strengthening to the upside. That's what we like to see. Doesn't mean it's going to carry on forever, but it's going for now. So we're still going. I don't see any 1s in the chat box, so everybody wants to stay in this trade. Let's just see where we're at for price. So we've gone from 120.29 to 132, 134. So we're at 134. So we're up about $5. Let's keep going. A little bit of a wobble here, but we are in a trough. Notice we're in a trough again. So that's the point of maximum financial opportunity. So let's keep going. We're having sideways action, which is just fine. Eric says, I would get out right now with a 1. So we're coming down. So we're not below our initial stop, so we'll keep going. Getting close, but we're still going. And we found support there at the 5 and 40 moving average at the top. So let's see if that keeps going. We did get a crossover here. I should have noted that. So we had a crossover there. So we could have gotten out at a break even right there. And some people are saying Yeah, that's what they would have done right there. They would get out, miss some of those ones in there. So let's go on and just see what happens from here. So we're out of the trade for now. All right. So now we see another opportunity. The 5 moving average of RT is a little flat, but it's okay. We can look at that consideration. There's our new first price target right there, this peak right there. So we'll take a new trade, and we're in at about $133. So we're in at a higher price, but now we're in, and now we've hit that first price target pretty quickly at 145. And this is the key to this system: is your winners are typically going to be very big. Your losers are typically going to be very small. So this is clearly a pretty good winner so far, and we've just hit our first price target. So what do we do when we hit our first price target? We've got about a $12 gain. Yeah, Dave says we could add to the position. And some folks, yeah, so we just keep going. We could take some profit there, right? That's what I'm getting at. So let's just keep going and see what happens. We pulled back a little bit there, pulled back. So now we're kind of at this first target level, so we should take some profits, right? In fact, we could close our position because we're so close to this wave here. So let's keep going. Well, we didn't close, didn't have to. We got to our second price target, $148, so we're up $15. Let's keep going. And now we really want to consider taking our profits, right? We've hit this top of this wave. Let's get out. Everybody good with that? Drew says this indicator is perfect. It's working pretty well, isn't it? So now we're out of the trade. Let's see if there's another opportunity. So here we did have a crossover, and we had a quiet period with price. So that could have been an entry point, but we really didn't get a clear follow through. So we need that follow through as well. So let's go forward. Whoops, didn't need to go that far forward. So here we finally get our follow through, and there's our another crossover. So we're in at about $157. We take our extended line, and we just probably go somewhere right in there. No, that's too tight, right? So we bring that down. So we probably go somewhere below this big candle. And then we can see if we hit our first price target, everything is good for targets. I might add one more target right here based on the 5-period moving average right here, hitting a peak here. So we've got another target. Let's see if we can hit it. So we hit that first target pretty quickly. It doesn't look like much, but let's just see what it is. 154 to 160, that's $6. $6 if you're an option trader, that's a pretty good move, right? So let's just see, we hit that second target right there. So that was good. And we're at 160, almost 162, I guess. Actually, now we're at 171. So again, we want to start taking some money off the table, bank those profits. Craig, Marty, Jimmy, Dave, they're all saying out. I would take half for sure. Now we're above this price cycle wave right here. So let's keep going and see if we can get above this more distant price cycle wave over to the left edge of the graph. Let's just see. Okay, looks like we're stalling out. We did stall out, so we took half our profit, and it was a good idea. All right, and you just keep going with this methodology. It's very visual, very simple. We'll look at some more as we get going, but I just want everybody to see the process and and understand why these price cycle waves work so well. So let's go back to our slides. So here's some other examples. Again, just noting how well the RT and stop price indicators track the stock price cycle waves. So you can see the potential entries here, potential exits. This one, we could have exited earlier here. What's interesting about this one with ARLP is how well the slope, that slope of the 40 stop moving average and the 5 stop moving average, that slope might have been able to keep you in this trade a little bit longer, even though there's been a crossover of the 40 moving average of RT, and we're nearing that peak. But if you did get out as a swing trader, and again, in this market environment, my essay this Friday, which everybody has access to if you go to the Canadian VectorVest views, everybody can look at it. But my take on it for 2023 is we've learned the lessons of 2022, and we need to be more nimble in exiting trades. And so we need to use these signals, and we can get back in here, still make some good coin before we get out again. And similarly here, we want to buy on these troughs. So here's another one. This is a 2-year daily graph, ARLP. So this part we didn't see before, but it was a nice rising slope on the 40 moving average of RT. Notice there would have been some whipsaws with the 5 moving average of RT, but that technique of drawing our lines on the price waves, the previous cycle, you would be just fine hanging in there right to the end. Let's just see if I can grab a better, whoop, no, I can't. But there it is. So some really good moves. I mean, gosh, you know, some of these stocks, it doesn't take a big move to get really, really good movement. All right, so new for the NPI, wanted to let you know, for those that don't know already, we have a ready-to-use layout in the VectorVest software. Everybody has this in whatever market you trade. Again, all 5 of the VectorVest countries, and it's just called the NPI Near Perfect Indicator. For those who have Pro Trader, there's 2 pre-built searches, NPI crossing 1 day, and then my favorite, I like to look at more stocks, so I look for the NPI crossing 3 days, and that to me has worked out really well. So I've got a question for you. When you think about your most successful trades, what is the #1 reason why you made money? Could you just chat in? What's your #1 reason why you made money? We'll just look at the chat a little bit and just see. Jan is asking about the modified MACD. You can definitely use MACD either as it is or modify it the way I've done in the past. Yep, these are available in the Canadian VectorVest, absolutely. Okay. Not seeing any responses to my question. When you think about your most successful trades, why do you think they worked out so well? David says took profits as it ran up. There's an honest answer from Mike. Got lucky. Scott says let the winners run. James says dumb luck. Jane says I had a plan and I stuck to it. All right. Well, I'm just going to go to my answer. And the answer is you got in early. You got in early. And it's because by the time everything is confirmed, you know, and it's paralysis by analysis. And unfortunately, the trend is already near the peak of that stock price cycle wave. You want to get in closer to the troughs. It improves your margin of safety. Successful traders are already taking profits by the time you make your decision to get in. So just remember, the trend is your friend until it ends, and it always ends. And the moral of the story is only take trades early in a new trend. Don't don't um, don't chase a trade. I know Glenn Tompkins talks about it all the time in the Jockey Club and his videos. Don't chase a trade. Try to get in a little bit early, be a little bit aggressive. I think you can be a little bit aggressive because of the track record of the NPI and those crossovers of the 5 and 40, and then having your stops in place. Yeah, Andrea says, I agree, Stan. On my losers, I got in too late. You got in too late, and they were starting to lose momentum and turned and made a loss before you could do anything. So how do we know when to get in early? It's the NPI and that stock price cycle waves. Let's look at a few more examples. I'll look at them here, and it looks like we've got a fair bit of time, so I'll look at a few more in the chart. But so here's CPRX, for example. Notice that first green arrow, deep trough. We can see that a recent price wave was quite a bit higher. The RT 40 at about 1.6, and down here it's at about 0.9. So that's a pretty good price target just on its own. And here's that quiet period on stock price. If you took trend lines and drew a wedge here, you would see that you got a nice breakout on a good candle with good volume right below the P and CPRX. Would be pretty terrific entry. So put your stop in below recent candles right here. That's your initial stop. So you've got a pullback and a quiet period. That's ideal. That's a perfect setup with the near perfect indicator. And so then we can move forward from there. And by the time we get to the peak of the 40 moving average of RT, we've gone up to $15 from about $8. So just about a double in a very short period of time. And even though the 40 moving average of the stop price is moving up pretty nicely, swing traders will just decide this is where I take my profit. I've gotten up to that second price target. I'll take some profit, at least half, and then because of the 5 moving average of stop and the 40 moving average of stop, maybe I can stay in a little bit longer with those remaining shares. And sure enough, it did keep going higher. A lot of buy ratings up at the top. And here's another trough where we can add shares and make some more money. Corey's got a great question. When I say trough, does that mean the 40 moving average needs to be below 1? Corey, I find the ideal setup is when that 40 moving average is deep and even below 1. But here is a trough as well at the right edge and a good crossover, and that was a money maker as well. So it can be a continuation like this where the RT40 is quite high. But your highest probability trades are when the trough is a little bit deeper, closer to 1 on the 40, and below even better. Yeah, and Krishnan is saying, can this be used when the primary wave is up? Yeah, I've been using it on the primary wave up signals and the green light buyer signals, green light RT buyers. So you can use it in you just want to make sure there's follow through on the stock, whatever market timing signal you're buying. All right, so here's NVIDIA. I thought I would mention this one because it's such a popular stock. I own the stock in Canada as one of the Canadian offerings here. And I bought in pretty close to this area right here. And the reason was we've got this quiet period where I've drawn the box, and then I've drawn a second box. You could enter here, pretty good volume candle right here. the reason I wanted to show this is when the 5 and 40 moving average of the stop price in the top part of the graph here, when it's still quite high and falling from that height, you might see some crossovers as we did here, but you'd be lucky to make money and come out even here, because this is such a strong downward pressure. And a lot of this was market conditions and affecting all semiconductors. But once we got here, here was a deep trough. So there was money to be made on this little move, but it wasn't ideal. You had to get out on the first target, which was right here. You had to get out. And then the second one is a much better one, and hit the target pretty early. All right. Yeah, Jeff says using no emotion, just following the plan. Yeah, once you've got your price targets, that was the missing piece for me, and I'm sure for many of our subscribers who have been following the NPI. The missing piece was the price targets, and this works really well. There's other methods you can use, but this method works pretty darn good. At least that's been my experience. So here's Microsoft again. This one, you can see you would have had a very small price wave in front of the crossover, and sure enough, you made a little bit of money, but you would have got stopped out pretty early. This one lasted much longer when you're coming from another trough. And there's Merck, an opportunity back here, but again, you're pretty close to the peak here of the 40 moving average on the stop price, and you would have had to get out pretty early, and you might have made a nickel, but not very much more. But this was a wonderful trough here, good price targets, and up it went. Robert, I'm not using Profit Locker Pro with this technique. I'm really relying on the charts. And I'll show you a technique from one of our subscribers, Jesse Loxton out in Australia, that I really like, that I'm using now. And it's running dual portfolios. So you'll see that in your slides, and I'll just briefly explain it here. But I wanted to look at a couple more stocks. So here's Uniselect in Canada. Again, very nice price target from this level here. You can see the pullback and then a quiet period. So a pullback followed by a quiet period and the crossover. Very strong entry, $37 here, so a $7 move. And the 5 moving average and the 40 of the stop price still moving up. Although we get quite a big pullback, so nice for swing traders, getting out right there. And then you have another opportunity to come back in, okay? And there's NVIDIA again on the US side. So again, not buying in here. And so I just wanted to show again this graphic. I really appreciated Keith and the graphics team putting this together for me. And you can see with Uniselect how it follows the waves. That's really, really important. All right, we'll go to some more stocks here in a minute. I want to give Ray time to really explain the new trading system. So I'm going to move along a little bit quickly. Hopefully everybody's understanding what I've been showing so far. And if you have questions, make sure you get them in. Dave says, could you use this to selectively short? You absolutely could. Just everything is opposite. So you would just set it up the opposite. That'll be another iteration that we come up with, I'm sure. So by combining the 5 and 40 moving averages of RT and the stop price, swing traders and investors can get an early, reliable signal to enter a trade. Swing traders can choose to exit early when that RT40 MA is near a peak, flattening out or sloping down. So I've showed you the technique for drawing those horizontal lines. That's going to help you with that. Investors, however, can hold longer when that 5 moving average of the stop price remains above the 40 moving average of the stop, and the slope of the 40 is moving toward that 2 o'clock. That's an ideal. Eric says confirm RT 540 on the MTI first, and then Unisearch. Well, you can run the search, Eric, and then you're going to see the crossover from the search. Absolutely. RT is the key. We've talked a lot about that over the weekend here. It's like a guided missile system, and the 5 and 40 moving averages smooth everything out. And again, a huge advantage to VectorVest subscribers is that we see the RT and the stop price, which is, again, a double smoothed moving average of price action. We see it. The market makers don't see it. Other subscribers don't see it. We have it. It's exclusive. And that's a huge advantage, especially maybe on the getting stopped outside. It's harder for the market maker to know where your stop is after that initial stop. So here's an example on the weekly. For example, I use the weekly charts. I love them as well. It's just in the current market conditions, I feel we need to consider doing more swing trading than this kind of a long-term approach. So here's a quick note from Jesse Loxton. He emailed me and said, by running parallel portfolios, the monitoring becomes much easier than looking at charts every day. And so he sent me his methodology, and I've been using it on a little gold portfolio that I have. So you would just simply create a new portfolio for your long positions in the near perfect indicator, the NPI, and you can call it the NPI account portfolio or whatever name you want to give it. Then you would create a short search and a custom portfolio of the NPI. So a second portfolio, in this case, what I'm using for the gold positions is the NPI EMA squeeze, which I've taught at our international online forums, and I know a lot of you are familiar with it. So when the EMA squeeze shows the 5 EMA is crossed below the 13 EMA on the stock price, you'll get an alert from your alert setting in the application tools. And then you go back to your long portfolio and make a choice. You can close out of the position based on that crossover, especially if you get follow through to the downside the next day. It works really well. This is what it looks like. And folks, I've been a subscriber to VectorVest since 2003. I learned something just about every week. And Jesse showed me something that I've seen before and really never paid attention to. But in the parameter section, to set up this shorting component, you'll use the stock portfolio, in this case, the NPI account portfolio, because you only want it to show the alert and the trades on the stocks that are in your long NPI account portfolio. And then you filter by portfolio. That's your portfolio name. Pretty cool. It's a very simple system once you set it up once. If you need some help, please call our support team Monday to Friday, except for today they're in, but typically Monday to Friday they're in, and they can help you set that up. But here it is. So it's in your slides. All right. And then go to Tools, Application Settings, and set up your alerts. And alerts go to your computer or phone. I don't use the mobile very much, so I just have them go to my computer. And you can get your portfolio orders, your portfolio summary if you're using RoboTrader, and there's getting a pop-up there. All right. And then this is kind of what it looks like. You've got one account that has your long positions, and then and that's this one, and then you've got another account that comes up with the short positions, and when you get that short, you know you've got to go to your long positions and close out of that trade. You can use it with the EMA squeeze, any other moving averages, if you have Pro Trader, any other shorting search, lots of ways you can use it. All right, I've got about 5 more minutes before I want to turn it over to Ray. But a couple of comments. Steve L. wrote, thanks for your NPI. I've been using it and think it's a game changer. Joan wrote, I do not buy a new stock without viewing the RT 540 near perfect indicator. It has made this difficult market manageable for me and fun. So I hope everybody gives it a try. And especially, I think, by setting some price targets in the method that we've shown, you're going to find it works extremely well. I'll just go back here very, very quickly. I've just got a couple of minutes left. And so these are just stocks from the stock viewers, some of the stocks that are currently at the top or stocks that you would recognize. So I'll just put those in a watch list. And I really recommend that. Put a watch list of 20 to 30 stocks together that really tend to follow the price waves. And I think you will do extremely well. But for example, I just want to review really quickly here. Let's just grab this date. I can get my date line going. So this is 10/26. Okay. So the search would have showed this stock on 10/26. This is what it would have been looking like. You take your horizontal line from the top toolbar. This is a recent price peak. Here's another one back here. So you're setting your price targets. Okay. I think those are the two that I would set with that one. And then as you go forward, let's just see where we're in on this. Whoops. You would set your initial stop. Don't forget about that and put it in with your broker. But it would be somewhere down here below this gap, right? Set your initial stop. And then we want to go forward from this date. And I typically start with a 1-year graph. This is a little less than that. But your goal is to try and make this area here. It's not absolutely right at the peak of this recent price wave, but it's where on that graphic that I showed you, and I hope you'll put a copy by your desk, it's where you should sell here to take some profits before you get to that peak. Does that make sense? And so we just go forward. Love to see that steepness of the 5 moving average of RT. We had this quiet period after the breakout, and we've reached our initial price target, and it's running at about $79, and we started at about 66. So we're up $13, and you got to take at least half your shares off the table. Okay. Did go a little bit higher. Never look back. Woulda, shoulda, coulda. Hey. Yeah, Irwin from Saskatchewan says the NPI probably could provide a good visual way of checking your current watch list holdings to judge which to continue holding and which to trim or close out entirely. Perfect. All right. Listen, I hope this has been helpful to everybody. I do want to turn it over to Ray Clark, our Vice President, Educational Services. Ray's been doing a great job, and a real shout out to Joey and Clay and the work they do behind the scenes, making this all work. I wasn't able to get to Tampa, and they really wanted to see this presentation, so I'm glad they were able to work it out, and it's been pretty seamless, and I really appreciate it. And thanks to all of you for paying attention and joining me for the presentation as well. There will be more coming, but I think if you follow some of the steps that we've shown here today, I know it's going to be a help to you in your personal trading for sure. All right, so now we're really pleased to announce the inclusion of a brand new trading system release in our trading system viewer, and it's called the Near Perfect Trading System. And I know you're going to enjoy it. And just welcome Ray Clark for the introduction of this system. Ray, I'll turn it over to you. And thanks again, everyone.
Well, thank you, Stan. Thank you, Stan. Take my hat off for Stan Heller. You know, the work he put in studying, you know, these concepts in the work with the moving averages of RT and what is really possible and capable using the VectorVest system is just extraordinary. So another round of applause for Stan Heller. He's such an asset to all of us. Just an incredible development. So I want to give you a little backstory on what I'm about to talk about next. You've heard that there was this trading system that was developed, and a little bit of backstory. Dr. Bart DeLito saw Stan's presentation and the wheels, the gears start turning, and Dr. D and Linda Royer, Miss Linda Royer, our CEO, they challenged us and they said, you know, we want to see a trading system, you know, built out of this. And Dr. D had done a lot of testing on his own. Just trying different things out and different parameters in Unisearch. Many of you know that there's a near perfect indicator folder in Unisearch, and there's a couple of basic searches. So Dr. DeLito, you know, reached out and he said, I've got some ideas for a trading system, you know, and we handed it over to Steve Chappell, who's the director of trading systems development, and the work that he can do, he's almost like a magician with coming up with trading systems, and he's the perfect man for that job. And it's unfortunate that Steve wasn't able to be here. You know, he put a lot of work, put months and months into this 2-day seminar. You know, I can't say it enough for him, and he really wanted to present this. But it is my honor and privilege to step in for him and unveil the work that he's done with the help, obviously, of Stan Heller, Dr. Bart DeLito, and Miss Linda Royer. So what I want to do is take a look at this. Many of you had seen this. Okay, most of you had seen this graph in some of the marketing, the advertising that we've done for the 2023 2-day investment seminar. But I want to dive in, and just like Stan had said, we've created a trading system, and yes, it is in the trading system viewer as of right now. So I want to take a look at that, and you can see the gain up 1,100%. Starting in January of 2019. Who wouldn't love those returns? I don't think there's anybody who wouldn't love those returns. It's absolutely incredible. So Jerry, if you would, could we move into the software? And we're going to go to the viewers, and we're going to go to the trading system viewer. And we're gonna walk through this. First, we're gonna look at the trading system viewer, look at some of the metrics of this trading system, talk about the ins and outs that make it work so well, so you have a better understanding. But this is using Stan's core near perfect indicator with a couple other parameters that really make the difference. And one of the most powerful things about the VectorVest system is your ability to tweak and control based off of indicators and information that nobody else in the world has. And this is a collaboration, this is work from Steve Chappell that has put that together. He ran thousands and thousands and thousands and thousands of tests over days, weeks, months, just grinding away in his office, you know, trying to figure out what is the perfect combination. And like I said, with the help of Dr. Bart DeLito, they were able to come up with this. So Jerry, if you would, if you look here, at the short-term metrics, you can see over the last month, we have a little bit of red. That's okay. Down what is that, Jerry? Can you see that? Okay, so 3%. You know, it's up on the 3 months and up nicely on the year. Let's go ahead and go into the trading system details, Jerry. So when you click on trading system details, it'll kind of give you the ins and outs. We can see that steady graph moving higher. And Jerry, if you scroll down a little bit, I want to look at some of the all-time metrics here. Up 1,111%. What's that drawdown? 21.8%. A 21.8% drawdown on this trading system. And there were some numbers that came out, and it was something to the effect of the average investor's portfolio was down 40% in this downturn. The drawdown of this portfolio that yielded 1,111%, the whole drawdown is half of that. That is incredible to have those kind of returns with such a little drawdown. It's an extremely powerful system. So what we want to do is I'm going to show you how to dial in, and we're going to do a little bit deeper of a dive. But Jerry, if you scroll up a little bit, you can click the trading system's rules. This will tell us exactly what's going on in this trading system. We have rules up and rules down. So yes, this particular trading system does short stocks. And I know there's some of you out there that do not short stocks. Some accounts you cannot short stocks in, but most accounts can in the US short stocks. And I challenge you, if you're not shorting stocks, take that first step, because VectorVest, especially in a downturn, we do the best job out of anybody at finding these stocks that you should be shorting. And to be able to come up with these returns with such a small drawdown is incredible. There's a new search. Okay, we're using the Greenlight Buyer RT Kicker. I know we've discussed that quite a bit over the last 2 days. I know Jerry covered it well. But there's a search here. Jerry, we can click on it and it'll give us some of the parameters here. We're going to end up going into Unisearch because I want to show you something about this. But before we do that, Jerry, before we dive into this search, scroll down a little bit, or if you could hide that search for me. Just click on it again, it'll hide it. This is real genius here. The stop for this search is when the recommendation is no longer a buy. So let me explain this. The near perfect indicator is finding stocks that are growing on momentum. Would we all agree? The magnitude of that momentum, the moving averages of RT, that magnitude, it's fanning out, is telling us that the momentum, the movement of the stock's price is really ramping up, right? That's what really makes it so powerful. So Dr. Bartolito had this idea, and he's thinking about it. We should try when it's no longer a buy. So these stocks, when they come into the search, they're buy rating, they're on the move. When a stock becomes a hold, so no longer a buy, one of two things has happened. It started to fall. You know, it's either converging back towards its stop price. It's not pulling away any longer. So the momentum is waning one way or another. The RT may have gone below 1, but it becomes a hold. That is going to be our exit, because when we want to redeploy that money, we want a new stock, a new player to come in that's hitting home runs. Everybody following me so far? Okay, so what we want to do, kind of like the weeding the garden, in this portfolio, we want to naturally keep the players on the field that are doing us justice. The moment that wanes by becoming a hold, and there's nobody else in the world other than VectorVest that can do this, when it becomes a hold, we're going to cut it from our portfolio. We only want these stocks that are moving, that are doing exactly what we want. There's some more managed criteria here. I'm not going to get into everything. It's fairly basic. You know, we're not repurchasing stocks for 31 days after the sale. This is pretty standard stuff. On the rules down side, we have ballistic new highs short. We've seen that before, haven't we? Chappell's Champs, ballistic new highs short. This is the search we used for shorting once again to pair this up to get those amazing results. So Jerry, if you would, let's go back into the Unisearch. We just put this into the software. Now, there is a search in here that's called Near Perfect Indicator, and it's not there yet. So let me repeat. It is not in that folder yet. Right now, it's in the folder, the Special Searches folder. But Jerry, if you just sort alphabetically for all the searches and go down to N for NPI, we can group them all together. And I am moving it. By midweek, we will have this search moved into that folder, okay? So it's not there yet, but we will put this new search in that folder. And you can see it says enhanced copy. This is the search we're talking about. So let's start at the top of this. This is just like the NPI crossing 3 days. These top, whoop, I think we lost it, Jerry. We're going to go, okay, NPI enhance. So it's the same two parameters, with the RT moving averages as the 3-day search, but we've added a couple of other things. And I want to start with the sort. The power of sort is amazing. What we can do with the indicators we have. In the sort here, if you look at the top, it might be kind of small for some of you, but it's RS or RV times RS times CI. So we're looking for the stocks to come to the top of this list that have the most upside potential, that have good safety. Like Jim did a great job of highlighting what is safety and why do we need it. That consistency and predictability of financial performance, we want that on our side. And comfort index. In the comfort index is the ability for a stock to resist severe or lengthy price declines. And CI is an extremely powerful indicator. So we've paired these core VectorVest indicators. The best combination of these are going to be brought to the top of the list. Okay? You can see the normal parameters. On top of that, we have the stock's comfort index level has to be above 1.25. Now, for those of you who don't know, even without looking at a graph, you can, if you're looking at the stock viewer, you can look at the comfort index and have a pretty good understanding of what that chart looks like. You might not know all the ups and downs, ins and outs of the graph, but when you see a stock with a comfort index well above 1, you know it's been moving in an upward direction. Everybody agree? Okay, so having that and filtering out those stocks that are not doing that, we're going to get rid of those. Okay, we want the stable stocks, the ideally ruler stocks, kind of like that. It's just keep on cruising up. And then we have some average volume criteria, and we don't want any stocks below $1. So this is the search that was developed that is powering this engine. In this one, Jerry, if you hover over it, I think it says searches, special searches. Is that what you're seeing? Yep. So that's the folder it is in now. Right now, as of today, as I'm speaking, it is in searches, special searches. Like I said, by Wednesday, we're going to move that into the NPI folder, so it'll be with the other folders. And Jerry, if we go back to the trading system viewer and look at that, I know we covered, and let's bring up the trading system rules again. We know that we've covered that. We talked quite a bit about the short side of it. Now we understand the long side and the real power behind the stock not being a buy rating anymore. And Jerry, if you scroll down, or we want to go back to the trading system details opposed to the rules. That is incredible performance. And like I said, Jerry, if you move down a little bit further, this 1,111% with only a 22% drawdown is absolutely incredible. So I took it a step further. Steve does not know I'm doing this. So Steve is watching right now, and I, after some of the conversations we had, and there was some concerns on a few individuals of, I don't short stocks, or I'm not interested in shorting stocks. So I decided to just run a test and see how this worked out if we didn't short stocks over the same time frame, to give you an understanding of it. And while what I'm about to show you is not in the trading system viewer yet, we will put it in there. And Steve will continue working on this, and as he finds ways to improve it, we'll include that as well. So I don't want to step on Steve's toes. So Steve, we've got some more work to do, but I'm going to show something here for everybody. So if we go ahead and close out of this, and Jerry, go to the back tester for me. And Ron, I apologize, I'm just going to chew up a couple more minutes. If we go to the back tester, we're going to click New, and we're going to go change the date. Let's change the date back to where we started on this last test. We're going to go to January, I think it's that first day in January of 2019. So is this 2019? Okay, and we're going to select an existing trading system. We can do this now because Steve Chappell created this for us. So I'm going to select it, and we're going to go to Next. Okay, so here are the parameters that I just showed you. This is the NPI trading system that is in the trading system viewer. But I want to edit this a little bit. I'm going to go in here into the automation rules down. We're going to leave the upside just the way it is. I'm going to go to cash, Jerry. We're going to go to cash. So this is only the long side of things, okay? And Jerry, go ahead. Could you run this for me? And it'll start chugging away. And you're going to have to help me. I wear glasses, but they must not be strong enough for me. I might need a new prescription. But you can see it chugging along from 2019. Jerry, can you tell me what the drawdown is so far?
12%.
We're at 12% drawdown so far. This is long only. You can see the points. And Jerry, can you show the people online? You can see these points where it goes to cash. Going to cash. Exiting the positions. And remember, all of the positions we're holding are buy rating, have a buy rating, and when they become a hold, or if they drop down to a sell, we're cutting them immediately and replacing, provided we have the signal. So this is almost done. Bear with me for another moment, and it's chugging along, chugging along. For those of you who only hold stocks long, are you getting excited? This is pretty incredible. And you'll notice, okay, it appears that it's kind of flattening out a little bit, but I want to highlight something. We had tremendous gain here. The market was really rallying. What happened to the market? It's been going down. What happened to this portfolio? It didn't go down. It's holding pretty steady. Actually, Jerry, can you go to January of what was that, 21? Where's January of 21? It's down over here. It's about 60-some% gain. Can you see it here? It's about December, January, it was about 68% was what the gain is. Now, Jerry, move forward to January of 22. I think we were close to cash. What is that up now, Jerry? It's up 90. So we went from about 70%, 68, 70% gain. Now, it doesn't look like a whole lot of a move, does it? But it's actually 20% during this time. And Jerry, go from there to where we are now. So another year later, it's up 100%, 99.99%. So another 10% this year, when long only, when for the most part the average portfolio is down about 40%. Is that powerful? Absolutely. Nice work to the team. Now let me ask you this. And the drawdown on this is 16%. There is nobody outside of VectorVest that can make that happen. And it's the genius behind it, what Dr. Bart DeLito created. When we were talking this morning, or yesterday morning, about the basic fundamentals of RV, RS, RT, the buy rating, it's so powerful when you combine it into a system. It's amazing. Now, this is up 100% during that same time frame. Let me ask you another question. Are you willing to push yourself, to challenge yourself, to go from 100% to 1100%? Because by understanding how to short, the system did all the work. What Stan just did is great for the individuals who want to be hands-on, who want to do it. This is as easy as it gets. Okay, and that's the question I ask. 100%, 1100%, because VectorVest is the best company in the world, the best software to be able to find the best stocks out there. Well, guess what? It's also the best company to flip it on its head and find the stocks you need to short. And it's not hard to do. And I challenge you to make that personal commitment. Go from being interested. And I said this yesterday. There's a difference between being interested and being committed. And the whole purpose of this 2-day is to take your interest, find that thing you want to really dive into and commit to it. Because you can do it. You can do it because I can do it. Everybody in here can do it. And what we've created here is revolutionary. There's nobody out there that has this. So without chewing up any more time, I'm going to bring up Mr. Ron Wheeler, but hat off to Steve Chappell, to Dr. Bartolito, to Miss Linda Royer, to Stan Heller, to everybody who made this possible. It's absolutely incredible. And like I said, I will have that long-only position in there midweek as well, that long-only trading system. So, take a look at it, play with it, see what you can do. It's absolutely fantastic. So, without further ado, I'm going to bring up Mr. Ron Wheeler.
I need to log into something real quick.
Okay, Ron is logging in, so give us a quick moment. And while we do that, just a quick note, we're going to be, after Ron talks, we're going to be going to lunch. For those of you in here and those of you online, if you want to renew your subscription, get those orders in. We do have our product support team is working today. Usually they're not in the office on Saturdays, but they are there. If you have any questions, please feel free to give them a call, chat into the chat log. We're here to answer any questions, and make that decision, make that personal commitment that you can do this and understand this, because it's extremely simple, and what it can do for you can really change your life. So Ron, we'll bring you up. Oh, it looks like Ron is still getting
I'll show that later.
logged in.
I was trying to, but don't worry about it. I'm running out of time, so. Not important.
There you go, Ron. Take it away.
All right. Well, Glenn and I have an internal contest to who talks louder. I think I do, but we'll see. Is this microphone working? Okay, cool. All right. So one of the things that I hear a lot is, well, like even with the NPI, I can't short stocks. I can't do that. Well, the one thing that everybody can do is buy a put. So if you see something that you have to short, you can simply buy a put. Now, one of the things that I committed to doing, and I got to be careful because I always say this year, when it was actually last year, one of the things that I committed to doing last year in the URS, in my retirement coaching, in my income class, was finding another way to make money. So Jim, do me a favor, pull up the VectorVest composite, just a good old market timing graph. And where is the, kind of like Ray here, I need to take my glasses up so I can see that it? Yep, that's it. All right, so for those of you, and I feel like The Simpsons, this is Troy McClure, you may remember me. For the URS, my goal is to create income. So, Jim, could you put the DEW on? And then put the signals on there too. All right. So, you've got these DEW, and then just look at a one-year graph. That way we don't get bombarded with all the signals there. All right. So when I do my credit spreads, and you're going to learn about this afternoon, when I do like the live options paycheck, I put on trades that when the dew is down are bearish. I typically use a bear call spread. When the market's bullish, I typically use a bull put spread. Now, if you look in the middle of these big trends, okay, you have these moves where the market pops up and pops up and pops up. One of the things that I miss sometimes is how do we profit from those? Now, the income coaching that I do, the spreads that I do, these spreads are designed to keep you in the trades during those little moves up, so I don't have to worry about that. But while the market's kind of maybe making a primary wave on the other side, what can I do to make money? How can I use options and how can I make money just with these little tiny moves up that are going against the trend? Again, maybe a primary wave. Well, you saw the basics of how to do that this morning. Everything that you learned this morning from Dr. David Paul, from Jerry D'Ambrosio, from Stan Heller, you have a system in place now to find swing trading opportunities. Now what we need to do is use options to take advantage of that. So Jim, go ahead and go back to the slides. Now, why options? Options provide the trader an inexpensive and limited risk way to take advantage of a stock, an ETF, or a market index move in either a bullish, bearish, or neutral move. Now, for what we're doing, we're concentrating more on the bullish and bearish moves today because I want to find those short-term, real quick swing, real quick hit trades. Now, you're also going to see they provide the best ROI. Instead of going out there and buying 500 shares of a stock that's $300, I can simply buy a call or a put and make it really inexpensive. Now, to do options, there are a few things that you need to know to start trading options. There's a few terminology things that you're going to need to know. There's what a call and put is. You're going to need to know what a strike price is. You're going to have to understand expiration, premium, delta, moneyness. Now, don't look at this and be overwhelmed. It's not that hard. Now, I've taken the steps to put together really all of this in an easy-to-use mentality. So there's two types of options, and I don't like to assume prior knowledge. That's why I go through this early part right in the beginning of the presentation. There's calls and puts. A call option gives the buyer the right, so if you buy a call, you have the right, but not the obligation to purchase a stock at a specific price, and by a certain date. That's the expiration. When you buy a call, that's a proxy for being long the stock. You generally think the stock is going to go up, you simply buy a call, and really all an option is, it's a vessel, right? It's a different derivative. Instead of buying a stock, you buy a call. It's the same idea. Now, a put option gives the option buyer the right, but not the obligation to sell a stock at a specified price. Now, a purchase of a put is a proxy for being short a stock. Now, I hear a lot of times, well, Ron, I couldn't short that stock even though it said to do it. Well, you can just simply buy a put on it instead and still take advantage of the bearish moves. Now, with the calls and with the puts, there is an option chain. Now, the option chain, whether you're using Options Pro from VectorVest, whether you're using Thinkorswim, Ally, TradeStation, an option chain typically gives you all of this information, right? It's going to give you the strike price. Now, the strike price, very simply put, is where your right to buy or sell the stock exists. Now, is strike price important? Somewhat, but I've been trading options for 15 years, and I have not, well, okay, that's not true. One time in 15 years have I ever turned an option into a stock. And the only reason that happened is because I forgot I actually owned the option. It was Friday, I was flying to Vegas on Friday. I had Chipotle options, and when I landed, I looked at my account, I'm like, why do I have 300 shares of Chipotle? I'm like, oh, I forgot I had long calls that expired. That's the only time. Anytime I trade an option, I trade options. I buy an option, and I sell that option later on for profit. I never want to turn that into a stock position. You have the opportunity if you want to, but I don't want to do that. I just want to trade the option for leverage. Now, the strike price is the stock price where you have that right to buy or sell. So if I have a stock XYZ, it's trading $100. If I buy a $100 call, $100 strike price, that gives me the right to buy the stock for $100. So if the stock goes up to $115, I own a $100 call. I can turn that call into a stock position at $100. Okay? I don't ever do that because I'd rather just sell the option and take my profits and run. Now, a put is the same idea. It gives you the right, but not the obligation to sell that stock at 100. So if I buy a put and the stock's at 100, the stock drops to 80, I now have the right to sell that stock. And you might ask, well, Ron, I don't own it, so how can I sell it? It doesn't matter. It really doesn't. You're not actually taking a stock transaction. You're going to just buy a put for $1 and you're going to sell it for like $6 later on. Who cares about, you don't own the stock, how can I sell it? Just keep it simple. You know, one of the things that my trading mentor told me when I went to him back in the 90s, he said, I don't understand how you could sell something you don't own. He's like, don't worry about it. All you need to know, Ron, is when you go to your broker, you can click on buy and you can click on sell. If you think it's going to go down, click on sell. If you think it's going to go up, you click on buy. And I took that with me and kept it simple for years and years and years. I don't try to worry about that behind the scenes transaction. Now, moneyness refers to where strike prices are in comparison with the underlying stock. So a good way to remember this, there's something called delta. Delta defined is how much the option will increase or decrease in price based on a $1 move in the underlying. So in the money calls have deltas greater than 50 An at-the-money call is a delta near 50, and an out-of-the-money call is a delta less than 50. So you can always measure this by delta. If you want to buy an at-the-money option, find your delta and go near 50. That's an at-the-money. You want to go a little bit in the money, find a delta of 60, 65, 70. You want to do something out of the money because maybe you're going to do some credit spreads like we'll talk about later, you might go to a delta 40 or 30. Now, it's generally the same thing with a put option. The only difference is put options have their deltas represented in negative numbers. So you'd want an in the money, and I put, less than negative 50 because that's technically what it is. A negative 60 is less than negative 50. But I look at this more in line of absolute value. Take away the negative. Why are puts in negative? Because I guess the market is optimistic, right? So if I buy a put and the market goes up, my put option is going to lose money. So it's a negative 50. So I kind of just tend to think of this more as just take that negative out. ITM put options have deltas, technically greater than 50, but I understand it's really negative. Out of the money is going to be greater than that 0.5 or negative 0.5, and at the money is going to be near that negative 0.5. So that's what moneyness refers to. In the money, at the money, out of the money. Now, expiration dates. All options have expiration dates. Now, this is the date at which you can exercise the option. You can buy the stock, you can sell the stock. That's when it expires. Now, if you keep an option after it expires, two things occurs. If the option expires in the money, you buy a call for $100, the stock's at 105, you are going to be given the stock for $100, as long as you have the capital. If not, I know I made a joke earlier about a margin call. That was one of the first things my wife learned about trading when we were dating. We were on the way to I don't remember where we went, but I got a phone call, and all she heard was, okay, just go ahead and liquidate that for me. And she's like, what are you talking about? I'm like, well, I forgot I had some options that expired today, and it cost me $500,000 to take this trade. I'm like, I just told them to liquidate, get out of it, get rid of it. So that was a margin call. So I haven't had one of those since, by the way. So if the option expires in the money, you will be assigned the stock if you have the capital. If you don't, generally speaking, they're going to call you and say, hey, you're going to be out of this, by the way, unless you wire us however much money you need. Same thing with a put, right? If you have a put that expires in the money, when you wake up on Monday morning, if you have the capital, you are going to have a short position in your account. Now, if the option expires out of the money, so I buy a call at 100 and the stock closes at 95, I just had an option expire worthless. No value at all. So that's what happens on expiration. Now, I cannot remember, well, I guess I can, but I don't remember what year it was. I have not let an option go to expiration since that mistake I made with Chipotle. I just don't. Options are trades. You get in, you get out. You don't let them go to expiration. You don't let them expire worthless. You don't let them go to a stock position. You just get out of them. It's a vessel to trade. Now, lastly is the premium. The premium is the price you're going to pay to buy the option. So each option contract controls 100 shares of stock. So if you look on an option chain and the premium is $1.50, that means that option costs you $150 in premium. 100 shares times the premium price. Since the option is based on 100, you would pay that $150. Okay? Now, premium price is controlled by a few variables. You have volatility. As volatility increases, premium price goes higher. You've got time to expiration. As it gets closer to expiration, the premium drops based on time decay. And then you have moneyness. An in-the-money option is more expensive than an out-of-the-money option because it has what's called intrinsic value. So as all of the above increase, premium rises. As they decrease, premium gets cheaper. Now, we talked about delta, but I also want to talk about it more officially. This measures the price change the option will make based on a $1 move of the underlying stock. For example, a call option, let's say, has a delta of 50 and a premium of $4. If the stock moves up $1 in price, the option premium will rise to $4.50. If the stock were to fall $1, it would drop down to $3.50. Now, there's some other variables in there. I mean, there's gamma, there's all that kind of stuff, but I'm doing this as a general rule. All right, A put option works the same way. For example, a put has a delta of -50 and a premium of $2. If the stock moves down $1 in price, the premium rises to $2.50. Why? Because when you have a put, it's the equivalent of going short. So as the stock goes down, the premium increases. So if the stock were to rise, that's where you get that negative in there and the premium drops to $1.50. So call deltas are positive, put deltas negative based on the idea that if a stock rises, calls increase and puts decrease in price. All right, now this is where I start talking about what I figure is the sweet spot of options trading. A general belief in options trading is that the higher the delta and the longer the expiration, the better off you are in the trade. That's not necessarily the case. What it may be is you're just spending too much money. You don't need all that expiration. You don't need all that delta. The longer expiration gives you more time, sure, but it costs a lot more. And this is what we call leveraging. That reduces the rate of return significantly. Why buy something for $1,000 when you can get the same performance of buying something for $200? It doesn't make any sense. Now, with strike prices, many investors feel that deeper in the money the strike price they buy, the more money they can make. And it's just not true. Okay? It's true in a sense of you will make $10,000 instead of $8,000, but your rate of return is going to be vastly lower. Okay? And it also increases your monetary risk. Think about that. If I spend $10,000 for something versus $5,000, well, simple math tells you that a $10,000 investment has more monetary risk than a $5,000 investment. In case the absolute worst thing happens, you're only out 5 instead of 10. So deeper in the money is not necessarily better. So the goal is to pay just enough and have just the right amount of time, not too much and not too little. This is pivotal as a swing trader. Okay? You don't want too much time. You don't want too much delta. You just want the right amount. Now, these are a couple trades that I did. Now, Jim, can you do me a favor? Go to, is Options Pro loaded? It might not be. And I don't know. I'll just try Launch Options Pro and see what happens. I know I loaded it on there. All right, well, don't worry about it. I can just kind of work with this graph here. All right, so Dr. Paul and I have a lot in common when it comes to technical analysis. We both believe that the biggest thing that you need to know in technical analysis is a pattern kind of like this. You have a trend, you have retracements, and you have continuations. You have trends, continuations, or new trends, continuations, and retracements. These are the two patterns that I love the most. Now, before I became an options trader, and this is, by the way, where you have to separate, for those of you that know the URS, know what I look for in a credit spread, you have to separate that a little bit. It's two different trading concepts I'm doing here. When I was a day trader, I got started back in the 90s as an S&P futures trader. I traded commodities, I traded the DAX, I traded the euro, I traded the yen, I traded crude oil, gold, you name it. I traded nothing but commodities and futures. I made a living off of technically really two patterns. I did retracements, so when I saw a trend, I would wait for that pullback, sell into the trend, and then if I saw a big break of a previous high or a previous low, kind of like what Dr. Paul showed you, I could add in or I could continue buying, or maybe I could go against the trend if I wanted to. So go ahead and go back to the slides. Now, first off, any of the stuff you saw this morning, that Jerry, Dr. Paul, that even Stan did with the NPI, any of that stuff works with this concept. Any of it does. So I have the work was easy for me. All I have to do is talk about the options here. So this is back on November 18th. The situation was a DEW up. So one of the scans that I like is stochastic. I've made a lot of money over the years with a stochastic indicator. It's one of my favorite indicators to buy pullbacks. So I did a search for stochastic crossing above 20. So if you want to run this on your own, you can click on the Unisearch tab. You go to Searches, Pro Trader, and then stochastic crossing above 20. And then you can run that search on November 18th, 2022. Now, During that period, the market was in a DEW up. So you always want to start with the overall trend typically. You'd really want to trade in the direction of the trend. You can use the do, or you can also use the primary wave because these are going to be very, very short-term trades for the most part. So you can trade with the trend, the longer term. You can trade with the shorter trend, the primary wave. Now, I know that these are really, really small. You can see them much better in your handouts, but this is what comes up for me in that scan. So, one of the stocks that came up was CNC. Now, I love this stuff because if you look at CNC, we've got a nice little, and not the biggest trend in the world, but a nice little rally coming up here. The stochastic pops above, 80 for a while, and then it comes right back down, and you have a beautiful cross. Now, when it comes to technical analysis, and I'm going to give credit to Paul Tudor Jones for this, I may be wrong, but this is what my mentors always taught me. When it comes to a study or an indicator, I was always told that Paul Tudor Jones said this. He said, studies are to be used, but not necessarily believed. What does that mean? It means that, listen, I could have 15 indicators on the bottom of this graph, and I'm being a little bit dramatic there. I could have 15 indicators telling me to buy something. But if the market or the stock is going down, why would I believe that? It's like catching the falling knife, right? You don't do that. You want to make sure that if you're getting a buy signal, the stock is moving higher. And that's what we had here with CNC. Now, if you want to be a little bit more conservative, you could actually even throw, and you don't have to do this, Jim, or anything, because this is a picture, but you could throw up a trend line that runs just really right across here. And you can see we're breaking out of that very short-term trend line on that bar. So now you've got price agreeing with the indicator. Okay? Now, to optimize your capital, we're going to choose an option with a delta of 50 to 60. No more, no less. Okay? 50 to 60 is the key. And we're going to find one that expires in a 21 to 45 day range. Now, I get pushback on this. Ron, why 21 to 45 days if we're only going to be in the trade for 2 or 3 days? Because it gives you, no pun intended, it gives you options. I can be in that trade for a day. I could be in that trade for 6 days, 7 days, 8 days. And I'm basically trading away from all of those things that you've heard about. And I don't have to get up here and teach you gamma week, gamma, rho, theta. I don't have to teach you any of that stuff. Because when you do an option with that level of expiration, you're avoiding all that. So why take the risk? Well, Ron, if I do a weekly option, I can buy an option for $1.50 versus if I buy it next month, I have to pay $3. To me, it makes no difference. And here's why it makes no difference. Because I'm going to size that position the same. If I buy an option for $1, I may have to buy 20 contracts of it to make money. If I buy it for $5, I may only have to trade 4 contracts. My loss is going to be the same. My gain is going to be the same because I'm sizing the position according to what I want to make or what I expect to make. So I don't particularly see a reason to try to really harness, all right, fine, I'm going to buy an option that expires in 3 days. Well, if the trade takes a day, great, you did it. But what happens if you have to hold the trade for 2 days or 3 days? Now all of a sudden that option that you bought that's lingering, time decay kills it. And it expires in a day, you got nothing to do. So buy a little bit of time. Don't get crazy, don't buy a leap, something that expires in 2 years. But give yourself some time. Give yourself some delta to work with. It's a much more efficient use of your capital. Now, this was CNC. If we enter on the open of November 18th, and one of the things I like about this, and you guys can see, I'll try not to fall down the stairs. Okay? One of the things I always do in my searches, and you'll see this afternoon when I do the Paycheck stuff, I like trading stocks that are taking out the prior day's high. Like, this is a nice little breakout right here, but what I really like is when we get confirmation, follow through. So now we've got our first higher high. Now, this is where this lecture can take 20 minutes or 3 hours. I'm tending to go towards the 20-minute route. Our stop if you have Profit Locker, what I typically would do is program Profit Locker to put a stop below the low of your entry bar, okay? Now, the advantage of using something like Profit Locker Pro. Now, in full disclosure, when I take these swing trades, I'm not usually using Profit Locker Pro because I don't really want to hold them that long, and I really don't care too much about just trying to maximize the return, right? But I actually introduced, oops, wrong one. I actually introduced this back in 2020 at the Tampa show, and I ran it over a couple years, and I kind of went back, and these are the settings that I really thought were appropriate for an option trade. Now, one of the things that you have to understand, you can't use RoboTrader for this, so you're going to have to monitor it. You are going to exit the option based on the underlying stock. When the stock hits a certain price, you have to go to your broker and exit the option position. It's not going to do it for you automatically. So since the low is 79.01, our entry is 82.60, that's about a 5% stop. Not too bad. I like that. Okay? And I tend to use a greed factor of around 40% because that kind of locks it in as the stock's moving up. Now, the closest expiration at the time was December 16th. It was 28 days to expiration. Now, another thing that you have to be careful of, you can't do this on every stock out there. And this is why, generally speaking, outside of the S&P 500, I don't use weekly options. Weekly options are nice, but they're also very low liquidity. So if you're trading something like Apple or Microsoft or Amazon, listen, you can trade weeklies, I don't care. But if you're trading something even like IBM and you're trading a weekly option, you may not have enough liquidity. And what happens when there's low liquidity is when you look at an option, right, there is, did I put it up there? I did. There's a bid and there's an ask. Now, this is generally something that you don't have to worry about when you're trading stocks, right? Bids and asks are usually a penny apart. But with an option, in a low liquidity market, you may see a bid of $1 and an ask of $5. Now, we're going to try to target the midpoints of these, getting in right at the center of them. But you want to trade options that have liquidity. That way your bid might be $1 and your ask might be $1.20. Close options. You know, this is something I learned way back in the day when I first started to trade currencies. I traded Forex for like 6 months, which was a complete waste of time back in the day. Because there was these spreads of like 6 to 8, what they call pips, price interest points. And it's like, by the time I made 10 pips, I had to give 6 back to the broker to give up on most of my profits. So when you have a bid and ask separation, you want to make sure you're trading something highly liquid. Now, if you look at this on CNC, you might be worried, well, we're on 230, 330, that's $1. Is that a big deal? No, it's really not. It's really not. With the liquidity, you're going to be able to get into that thing relatively easy. And when you look at things like an open interest, maybe over 100, this is why we trade monthlies, so we can get in and out efficiently. Okay? So the 8250 had a delta of 55. That's the one I'll choose. Now, if we purchase that call, by the way, this is a screenshot of Thinkorswim. It's their risk graph. One of the things I always want to make sure you understand is, you know, listen, you don't need anything special. Your broker can do this for you. Your broker has the tools. Of course, we do too that are better. Just saying. Okay? To purchase that call, it's going to cost you $280. Now, if you use that Profit Locker stop of $78, it's $178.44. So instead of losing $280, you're going to lose $178.44. Ron, what if I don't have Profit Locker? It's real easy. Your stop is 50% of the option cost. So you're going to, instead of having a stop at 178, if you bought that option for $2.80, don't lose more than $1.40. 50% of the option premium is your stop. You don't have to have Profit Locker Pro, it just makes it nice. 50% is your max loss. Don't let options expire worthless. If you're wrong on the trade, get out. I think it was Dr. Paul Yasay, if I'm not mistaken, where he talked about, you know, the whole desperation. Well, I'll just give it one more day. I'll just give it one more day. You can't do that. If you're wrong on the trade, give up, get out, go into something else, and, you know, just get out. Now, the advantage of this is your risk is capped at 280. So if something strange happens, and I've had this problem before, where all of a sudden they release an earnings guidance, and I can't remember the trade I was in, I think in November that did that. I'm like, what in God's name happened? It went down like $16 a share. Well, they had earnings guidance, right? I didn't know that was going to happen. Or if they have something crazy that comes out, at least with an option, your risk is capped. Yes, I can lose $280 per contract on this, but at least that's all. I don't have to worry about losing more. Okay? Now, there's numerous ways to manage the trade. One of the ways that I really like, by the way, is what Stan talked about, the NPI, because he has profit targets built right into that thing. That's fantastic. I love it. Now, with Profit Locker, you can let Profit Locker do the work. It's going to set a trailing stop for you. It's going to just let that stock rise up very, very nicely. And on 11:30, we hit the prior high. Okay? That's great. You hit the prior high, that's a profit target. Get out now. Or just let Profit Locker continue on that trade. Now, if we exit the trade at the prior high, which I always think is a good idea, when you're doing a stochastic trade, the prior high or the prior low is always a good target to take profits. Now, let's say you did 10 contracts, but you want to let some run. Well, take off 3 or 4, I would say 7 or 8, and let the last 2 run. Let the last 3 run. It's up to you. I personally don't like to do that because I don't have the patience. I just like to get out and be done with it. Move on to the next trade. Okay? Now, if you exit the prior resistance, your target's $199.59 per contract. So for the multi-contract trader, exit most of the trade at prior high, let Profit Locker set a trailing stop for the rest. On December 13th, we hit that trailing stop, and now we're out of the trade. Okay? So that trade took, what was it, like a week, week and a half? Now, using that 21 to 45 days to expiration option, the option cost you $280. Your max loss theoretically was $280, right? Because that's what the option cost. Now in real life, you're only risking up to $178, but if you're not using Profit Locker, $140. Ending gain was $199.59. You have an ROI of 71%. Okay? So if you did it on 5 contracts, you just made $1,000. Well, $1,000. My math is terrible, by the way. My arithmetic is terrible. I have good math skills, though. Now, what I typically do is I size these positions to try to make about $750. So looking at that trade right there, I probably would have traded about 4 contracts. Okay? Now, let's say you did the stock. The stock would have cost you $8,200. The max loss, of course, if the stock went to 0 was $8,200. The ending gain was $405. Okay? Look at the ROI on that. It's 4.9%. Listen, it's $400 in profits. Don't get me wrong. Profits are good. But using an option, you were able to use that leverage and really maximize on that return. Okay? Now, we use the same ranges for put trades on bearish markets. So a delta range near 50, 21 to 45 days to expiration. Now, another scan that I really like. We have a due down situation November 16th. We have a primary wave down, and one of the scans I like is breaking support. I also, by the way, like breaking resistance. Those are both great scans because that tells you when you're looking to extend a trend. So again, I won't go through this and look for real-time trades this morning, but click on the Unisearch. We go to Pro Trader, breaking support, run that search back. Oops, I think it says 9/16. I think that date on the top, I made an error. So I might have copy and pasted that. So this is what the market timing looked like at the time. So again, we've got everything looking bearish. We run that scan, we get a nice list of trading opportunities for you, and one of those happened to be Matador Resources. Okay? I love the fact that when I'm looking at that thing, it's got a huge downward move. It's following through. It's right basically here. Okay? It's coming down, and there is my level that it's coming down past. 2% past that level right there. Okay? Now, another thing I really like about Matador is look where the next one is. Look where your next support level is. It's all the way down here. This thing's got a ton of room to run. So this can be a very quick trade. This can be a trade where you might keep it 3 or 4 days to that prior level. You can let Profit Locker kind of lock it in for you. So entering that trade midday 9/16. Why midday? because when I went back in real-time mode, it kind of broke that prior low right around noon to 1 o'clock. So when I do back testing, I try to make it as accurate as I can. I don't use prior close, I don't use opening prices. I try to get in there and use real-time prices of when these trades actually occurred. Now, our stop is going to be right above that bar's high, 59.02, and the target would be that next level of, well, it's actually support right here. You'll have to excuse some of my typos. That next level of support, right around 48 bucks. And again, the profit locker will kind of ratchet this in for you. So that way, if the stock kind of reverses on you, the profit locker will kind of keep you safe. All right? The closest at that time was the October 21st option, 35 days to expiration, and we had a delta of 51. And if you take a look at the bid and the ask, 450, is that 490, Jim? Yes. 450 and 490. It's a 40-cent width. That's beautiful. That's something I can get in and out really, really fast. I can just take that trade quickly. Now, to purchase the put, it's 470 bucks. I use the midpoint, by the way. Question?
You always set your buy between those two?
Yes, always using the midpoint between the bid and the ask. Absolutely. Now, using the Profit Locker Pro Stop, the risk is really only, 470 bucks. Well, actually, I'm sorry. Using the Pro Locker Stop of 59 is 51.40. I think I made a miscalculation there. Actually, no, I don't think I did, Jim. Let me go back and look at that. This is the problem with being half blind. It looks like right here. I forgot a 1. Your risk is $151 on that trade. That's it, 150 bucks. So you're not risking 470. You're risking 150. Don't let the option expire worthless. It's not worth it. Okay? Now, Ron, I don't have Profit Locker Pro. Okay, your risk is 235 bucks. Keep it easy. Now, we hit $48 on September 26th. Exit the trade. Or you can keep the Profit Locker Pro Stop in mind. Okay? As of that 5/18, we exited at $48. Our profit was $518. Okay? Now again, look at the option cost. $470. Max loss was $470, but again, we really were only risking a max of $235. Our ending gain was $518, and our rate of return was about 110%, versus a 16% ROI using the stock. And again, the beauty of using an option is simply this. There's no worry about, can I short the stock? If it's optionable, if it's a stock that has a lot of liquidity, you can buy a put. And you don't have to have a level 3 account, a level 4 account. Anybody can do this as a beginning trader. Okay? Now, after lunch, I'm going to be back on. I'm going to share with you guys, because I couldn't get logged in because it was so quick. I'm going to share with you guys my swing trading results for 2021. It made a really nice extra boost to what I did last year. Okay? But that's the beginning of using options for swing trading. Do you need my mic?
Thank you very much, Ron. And for those of you in the room, if you just stay for one quick message, that's powerful stuff. Thank you so much, Ron. We're going to take a quick lunch break, and then we'll be back and finish up the end of the session. Thanks for all of you online. Just give us a little time to get some food, and feel free to get your orders in. They're like option contracts. They're going to expire at the end of the day. So we have a product support team on hand. Renew your subscriptions, or you can upgrade. Thanks a lot. We'll see you in a little bit. Hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the two-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions, or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks, and this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options Paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. Hello, everybody. Welcome back. We're turning the final corner of the 2023 two-day investment seminar. It's been a great show so far. We're not finished yet. I want to thank everybody here, everybody online that is showing tremendous support, signing up for coaching packages and supporting us. We have our folks in North Carolina that are hard at work answering those calls and putting in those orders. Thank you for your patience. We will get those orders placed for you, and we've got people working all day today. We're actually going to have product support team that'll be in here tomorrow, in the office tomorrow, so don't worry, we're going to get you taken care of. But thanks again for the support, showing the love for all of the instructors, the software, the system. It's been an amazing 2 days. So next we're going to move on. We've got a very powerful talk. One of the most popular concepts, powerful concepts that we have, which is the paycheck, the options paycheck. And Mr. Ron Wheeler is going to come up right now and give us an understanding, and he's going to do the options paycheck live. Ron?
All right. All right, now, I'm turned on everything. Everybody can hear me good? All right, cool beans. Now, before I do the options paycheck live, I was able to log into my tracking program. Jim, if you could Alt-Tab into, it's called Wingman Tracker. All right, so keep in mind that this is something I did small last year. Now, you can look at it and say, okay, I ended up doing 94 swing trades last year. So I had a 62% win rate, where's my laser pointer? There it is. No, it's not, actually. Oh, there it is. I had a 62% hit rate, and this is the best part. My average winner and my average loser are about the same. So go ahead and click on closed positions up here. All right. Now, last year was a work in progress when I started my swing trading. So anytime I start something new that I've never really done, I don't like back testing and test trading, honestly. I like real trading. Just throw a little bit of money at it and see what happens. So first and foremost, Jim, you see that column that says days in trade? Click on that. All right. I want you to notice something. What do you see a lot of right there? Red. Red means I lost money. Now, I want you to notice something about all my losses. See this column right here? This is days in trade. 22, 10, 9, 9, 7, 7, 7, 7. Jim clicked on number 2 right there. Okay? 5, 5. Couple good wins there, don't get me wrong. But what you're going to find is on my swing trading, 90+% of my gains were 2 days or less. So as I traded last year, I developed kind of a system to do my swing trading. Now, I know I showed you guys Profit Locker and Profit Locker Pro and previous highs and previous lows. I didn't put this in the handouts. This is something we talk about in URS. I'm going to give you a little bit of a head start. Here's what I do. When I trade and when I swing trade, if I buy an option for $1, I look to make 25%. Now, you may say 25% is not a lot, right? If I buy something for $10, I get out of it for $12.50. 25%, that's it. And then if the trade hasn't won in 2 days, I get out. I'm done. Very simple, very quick. And as I started the year, you're going to see like some of my wins, like this was back in April. I made $246 on that trade. You know, then as you start going into some of the later months, you're going to see like my winners are $1,000. So what I did last year is I started at $250 win and no more than about a $400 or $500 loss. As I got more into it and I saw how it was actually working well, I started upping the ante. So, Jim, if you click on the realized P&L button up there, okay, and then click on number 1 down here, and then click on that realized P&L one more time. So you can kind of see my biggest loss of the year was on Schwab, typical. $1,100 I lost on one trade. I was shooting to make $750, I lost $1,100. But all these other trades right here, these were all about, look, I was in that trade for 4 days. I should have got out of it sooner. $972, I was in it for 7 days. I should have got out of it sooner. 4 days, 950. 1 day, 809. But as you can see, as that number starts going lower and lower, my losses are getting smaller and smaller. So from a swing trading perspective, if it's not there in 2 days, get out of the trade and you're going to cut your losses considerably. So 25% target, you buy an option for $1, you get out of it for $1.25. If it doesn't hit profits in 2 days, get out. I've now got a full year of that trading behind me based on the things that you learned this morning, like stochastic and breaking resistance. I also use another thing with options volume that I would share with you in URS, but that's kind of a real-time, real money test of what we did last year, okay? Now, remember, this is something that Dr. Paul talked about. When you see lots of reds in a row, clustering, okay? You have a cluster of losers, it's okay. All right, thank you. Let's go back to the slides. But I didn't have enough time to share that with you guys this morning, so I wanted to do that. All right, Options Paycheck Live. Here's what we're doing. I took all 8 modules of the Options Paycheck course, and I took about 15 or 20 slides to really break it down into the heart of what I do, okay? So, what is Options Paycheck? And first off, what is a spread? Now, I showed you my swing trading stuff. I took 90 swing trades last year, but the primary trades that I use to make money are option spreads. So, what is a spread? A spread is simply a difference in, you're taking 2 options or more in one transaction. This is key, one transaction. And there's different kinds of spreads. So, you have strike prices and you have expiration dates. Now, this is out of Module 1 of the Options Paycheck. So for those of you that have never traded a spread before, I try to talk about the bare basics of spread trading. What is a spread? So you can spread strike prices, you can spread expiration. So I can sell a $95 strike and buy a $100. I can sell a $95 February and buy a March 95. That's another way to spread your trade, okay? Or you can basically do both of them. I can do a $100 March and a $90 June. So I can do these things in all kinds of different ways. Now, what we do in the Options Paycheck is we trade what's called a vertical spread. Now, this is what most of your brokers will call this. This is what you'll see in like Thinkorswim. It's called a vertical spread. And what we're doing with a vertical spread is we're simply spreading price. I might sell a $95 call and I buy a $100 as insurance. Why do I not want to sell naked calls? Why do I always buy that insurance? There's a couple reasons. Number one, because it protects me from volatility. You guys ever heard of optionsellers.com? Google that. James Cordier was the guy. He wrote the book on option selling. He got completely blown out as a hedge fund guy. And he had that, that sorry guys, I feel bad for the guy, really. I'm not making fun of him. I lost control of the ship, and what he was doing is he was selling a ton of naked premium on commodities, no less. And then remember when crude oil had all that big, huge moves? He lost hundreds of millions of dollars trading options. 2 reasons he did it. Number one, he traded way over his account value, right? They were 90% right. Great, he was 90% right. But that 10% of the time that he lost, he got destroyed. The second reason he lost, because he didn't buy the insurance. Oops, wrong button. He didn't buy that insurance leg. The insurance leg when you sell options is your protection. It locks you into a maximum loss. That insurance leg protects you against huge moves in volatility. That's why I don't care how much money you have. The spread is the safest way to do these. So we're going to do what's called a vertical spread. We are going to sell an out-of-the-money option, and we are going to buy as protection a further out-of-the-money option. So hopefully from my swing trading class, we know what out-of-the-money means. All right? Now, probability. This is the one thing I absolutely love about options, and I love the statistics. So when I first started trading, I used Fibonacci, I used Gann, I used Elliott Wave, I used all kinds of different technical indicators. But I never used statistics and probability. Because why? I mean, I've got a Gann level way out here, a fib level way up there. Well, that's great. But when you look at statistics, standard deviation, how much the market can actually move, I found out that these levels that I was shooting for only had a probability of hitting 2% of the time. So I'm looking for this level that has no statistical chance of being hit. Probability and options really brought that home. Okay, I think this stock can move to 105, but based on the prior movement, there's only a 12% chance of that occurring. So even in my normal trading, as I learned options, that probability became very important to me. Now, I'm going to simplify this down as easy as I can. This is why I call this income investing. Because we're going to find stocks, or by the way, the S&P, and S&P is a very big part of what I do. I love trading the S&P index for a couple of reasons. Number one, it's easy. Very easy. Only one graph to look at. Number two, there are significant tax advantages. SPX index trading is taxed at a 60-40% split. 60% long-term, 40% short-term capital gains. Very, very good tax benefits. And no wash sale rules, because they tax it as a futures contract. So you can go in, out, it doesn't make a darn bit of difference. Now, what I'm going to do when the market is in an uptrend, typically a do-up. I also like trading the DEW because the DEW kind of reminds me of Elliott Wave and all that stuff. I like the do. I love oscillators, right? So I'm going to find a stock that is likely to continue moving up. So let's say that I'm trading IBM, and I'm just going to make up a price. IBM is trading at $110. Now, if I went out there and I simply bought 100 shares of IBM, or maybe I bought a call, the only way I can make money on IBM is if the stock goes up. That's it. Now, if I buy a call, or let's say I bought a put because I thought it was going to go down, the stock actually has to move more than up. You have to actually go up a little bit more than the current price to make money on a regular option. So what I do is I create what I call a probability zone. So I choose a price underneath in an uptrend that says, as long as the stock stays up, sideways, or down, I can still make money on this trade. So kind of like Dr. Paul said, right? Where people get stopped out, that's where he likes to buy. That's what I basically do. I put my orders in for these typically underneath where people would get stopped out. If they're wrong on direction, they get stopped out, I'm still in the trade because I've created that probability zone where I can still make money even if the stock goes back and forth for a while. Now, what I use is a flat 60-40 split. I am looking for options to sell at a baseline that have a 40% chance, and this is the important part, of finishing in the money. Okay? So, a stock is at $100. If I sell a $90 option, I only want a 40% chance that that trade can go against me. Now, what's that probability based off of? It's based off, in my opinion, the best thing in the world, the prior movement of the stock. We look back over a year, we annualize it, and we look back at the history of the actual stock's movement. So it's not made up statistics, it's what the stock actually did. Now, in the next 21 to 45 days, I'm looking out. So you're going to find a couple things that are very similar. This morning, when I said swing trading, I said 21 to 45 days. When I sell an option, 21 to 45 days. You don't have to go out any farther than that. It works perfectly for this. So in the next 21 to 45 days, I'm going to pick a price that I don't think that the stock will get to based on prior movement. Okay? So it most likely will not fall below that price right there. All right? So if it does, and this kind of comes into what I talked about this morning with swing trading, what if it does? Then you exit the trade. We don't let things expire worthless. We don't just say, oh, well, we were wrong. I'm going to go ahead and just let this one go. If you bought 1,000 shares of whatever you buy, it doesn't matter. If you bought 1,000 shares of a stock and it went against you, we would all hopefully use stops, right? You do the same thing with an option trade, kind of like this morning in swing trading. I'm not going to let it expire worthless. I'm going to salvage some of the value of that and exit before I take a large loss. Okay? Now, here's an example of a graph, and it doesn't matter what the graph is. All right? So I take a look at this chart. It looks like it's going up. Trust me, it looked like it was going up, I promise. I know you can only see like a month and a half of data, right? It's going up. Now, a couple things. I'm looking for a base 60% chance of winning based on probability. Okay? 60% chance of winning, 40% chance of losing. All right? Now, the cool part is options have this built-in probability. Pretty much every broker I know has a probability calculator. Thinkorswim has one, IB has one, E-Trade I know has one, TradeStation has one. They all have this probability built in. Everybody has it. Okay? So think about that. At the time, and Jim, what is that stock? Is it Costco? Okay, I can't see it. I'm just guessing based on the price. All right, so it was trading at about $543. I think Costco is going to go up. When I look at probability, right, that level was at $520 at that point. Think about that. I basically have created a buffer of $23 a share that if it goes sideways, I can make money. If it goes up, I make money. And as long as it stays above $520, I will stay in that trade with the chance to make money. I have created a huge zone to be right. That's why I call it income trading, because you're taking that great analysis from VectorVest, right? But then you're taking an option trade and layering even more probability on top of it. That's what it's all about. Okay? Now, building blocks of a spread. How does a spread actually work? This is one of the things, if you guys have ever taken the options paycheck before, I think in the last year, I redesigned the options paycheck with Brian D'Amico's help. And one of the things that I've learned is that people really never understood how you make money in a spread. So I added it to the lecture, right? So this was lesson 3 of module 2. So when you are bullish, and the cool part about options trading is the options trades are basically named what they are. When you're bullish, you use puts. We're going to sell a put when we think the stock market's going to go up or the graph is going to go up. You buy a call if you're bullish as a buyer, but you sell a put as a seller. So when we're bullish, we're going to use things called puts. Now, we're going to simultaneously sell a put and buy a put at the exact same time. One transaction. This is critical. One transaction. Okay? We call that buy insurance, or that buy put insurance because it protects you. It's going to limit the amount that you can lose, and it makes it a very, very low risk trade. Now, both are going to be placed on the same order, and that newly created spread will have a price and trade similar to a stock. So if I sell that option for $2 and I buy my insurance for $1, that spread has a value of $1. I sell it for $2, so I take in, let's say, $200. I buy $1 or $100 in insurance. I keep $100 on that trade. Now, that is called a bull put credit spread. Bullish, because it's a trade you do when the market's bullish. Puts, because you're doing with puts. The bull put credit spread. Now, let's talk a little bit about the mechanics of profits and losses. This gets in again to module 2 of the paycheck. So, in a winning trade, you have to kind of reverse your logic here because, I think we talked yesterday about what's the goal? Buy low and sell high. Now you got to reverse that a little bit. Our goal is to sell high and buy low. Okay? So in a winning trade, when you open the trade, you are going to be a seller. You are out there selling this to somebody. Now, if you've never sold an option before, let's talk about this. Selling an option is not like when you sell your car. Right? If I sell my car to somebody, I sign over the title, they take it, I'm done. I cash the check and it's over. An option is an insurance policy, essentially. If I sell somebody a February $100 call on a stock, remember what we talked about this morning in the basic options. If you buy a call, you have the right to buy the stock. Well, who do you buy it from? You buy it from the guy that sold you the option. his responsibility is to provide you that stock if the buyer chooses. Now, let's talk about this. Does it ever happen? I've been selling options for 15 years. I have not one time ever taken a stock transaction from one of these trades. It just doesn't happen. Only 6% of options become stock transactions. Now, there's a number out there where like it says like 80-some% of options expire worthless. That's BS. It doesn't happen. 80% of the options are canceled out by competing buying and selling orders, right? A buyer and seller get together, they rip up a contract, and they walk away. Only 6% of options really ever become a stock transaction. So being assigned, turning this into a stock transaction is very, very rare. All right? You're going to exit these trades and enter these trades just like any other trade. You're going to enter a trade, and then you're going to hit a profit target or a stop, and you're going to exit the trade. Now, the difference here is when we enter the trade, we are getting paid. The broker is actually paying us. However, we don't just cash the check and walk away. We have the obligation now to possibly provide a stock transaction. If I sell a call, right, I may have to go out there and take stock on or sell stock. If I sell a put, I have the underlying obligation where I may have to buy stock from somebody. But again, that is theoretical. I've never had to do it because I exit the trades way before that happens. So when I enter the trade, I get paid, but I still have that trade on. That trade is going to fluctuate in value every day. I sell something for, let's say, $2. The stock moves in my direction. What's going to happen? That spread value will decrease. I sell it for $2. 3 days later, the trade goes in my direction. Now that spread is, let's say, only worth $1.70. I can exit the trade for $1.70, and I keep a 30-cent difference between what I sold it for and what I exited. So the goal here is to sell to open at a high price, buy to close at a lower price, selling high, buying low. That is how we make money. We sell it for $200, we exit it for $100, we keep the difference. That's how a spread works. Okay? So let's say we sold the spread for $250. 5 days later, the market went in our direction, the stock went in our direction. Now that spread's only worth $1.25. We can now exit the trade because, again, we're trading options and people are trading these all the time. And don't get stuck in that whole belief of, well, for every winning transaction, there's a loser. That's not necessarily the case. People buy and sell options for all kinds of different reasons. Okay? The guy that you're closing the position, he might be winning too. It's not necessarily a winner and a loser. All right? But that's the goal. I want to sell it high, the stock moves in my direction, and I exit the trade low. And what I would tell you is if this whole sell to open and buy to close is confusing, don't think of it like that. Think of you're entering the trade and getting paid $250, you're exiting the trade and you're paying $1.25. You get to keep the difference between those two. All right? Now, losing trade. Losing trades are part of this. The only difference is we're still getting paid that $200 when we open the trade. However, if it goes in the wrong direction, we are going to not only pay back that $200, I got to dip into my pocket for a little bit more. Like, for instance, I got stopped out of an S&P trade yesterday as I was doing the mousing for, I think it was Jerry, or maybe it was Glenn. So in that trade, on Monday, I sold the trade and I got paid $385 a contract on the S&P. Yesterday, I exited the trade and I had to pay $550 to exit the trade. So that $380 I got paid all went back, and then I had to dig into my pocket a little bit deeper for the loss. So I end up losing money. That's how a losing trade works. Okay? I enter the trade for $250. I exit, I have to pay $375. The $250 I got paid, that's gone. I have to give it back, and then I had to dig into my pocket for another $1.25. That's how spreads work to make money and lose money. Okay? Now, rules for managing credit spreads. Now, keep in mind, I am giving you like an 8-module course in about 15 or 20 slides. So it might be a little bit hard, I understand that. 2 rules. Let's take a look at this example. This is Builder's First Sourcing, bull put spread. So, number 1, this is a risk graph. By the way, we're going to cover this in pretty good detail when I get into the live. We're not live trading today, obviously it's Saturday. But we're going to look at some graphs and we're going to look at some trades. So I enter this trade, and if you look over here, it's called a credit. I would get paid $130 to place one contract of this trade. So when I enter the trade, I get paid $130. My goal is to exit the trade at 50% of the value. Okay? So what's 50% of 130? 65. Thank you. I was actually asking because I'm bad at math. Actually, I knew that one. I had a little cheat sheet for it. So, oh, it's actually up there. See, look at that. Just kidding, I knew it was up there. But $65 is where I'm going to get out of that trade. I get paid $130. I exit with profits at 65 bucks. Okay? That's the idea. 50% profit. Now, why 50% profit? This is how you have to understand how a risk graph works. So if you take a look, I know that if you've never traded options before, this can be a little bit intimidating. Why do you need a risk graph for options? Because there's a lot of variables in options, right? You've got delta. If a stock goes up $1 or down $1, you're not going to make $1 or lose $1 like if you buy a stock. You've got things like delta, where it might only be 30 or 40. You've got things like gamma, all right, the rate of change of delta. You've got vega, right, which is volatility. And you got rho. Rho was basically useless until recently. Rho is, by the way, how an option changes with interest rates. Well, interest rates for like the last 20 years have been zero, right? But now that's a variable. So how do you combat all that? Well, you really don't have to, because if you set the trades up properly, kind of like I showed you with swing trading, none of those numbers, I don't want to say they're meaningless, but if you set the trade up properly, you don't have to worry about all those nuts and bolts. But what you do have to worry about is when it comes to profits, because you are going to make money on the spread as the stock, in this case, goes up, and you can lose money on the spread as the stock goes down. Now, what that line right there represents is all of those crazy option Greeks and how they affect the price of the spread. You don't have to do the math. The risk graph does it for you. And a risk graph is not proprietary. If you have an options broker, it has one. Thinkorswim has one. I showed you guys that this morning in the swing trading. E-Trade, Ally, they all have risk graphs. I even looked at a risk graph on my mobile app for Thinkorswim when I was eating lunch, right? So they all have this tool. As the stock goes in your direction, this dashed line represents how much money I will make today. So when I took that screenshot, the trade was up about $35. You can see that over to the right. I'm up about 35 bucks. If the trade continues moving higher, let's say it moves up to about, what is that, Jim, 80? If it moves up to about 80 bucks, yeah, I would be up on the trade roughly about $75. Okay? Now, if the stock moves down in price, I'm going to start losing money on that trade. If it moved down to, let's say, $70, I'm going to lose probably about $90 on the spread. Okay? So that risk graph lays out where the profits and where your losses are going to be. Now, I get a lot of questions about, Ron, why 50%? Aren't you leaving a lot of money on the table? And it's a great question. I want you to take a look, if you can, at this risk graph. Notice where about 50% of the profit would be hit. I'm already up $35 on this trade right here. Now, as I move a little bit higher, we know we only wanted to make 65 bucks. So I want you to take a look right where that pointer is, right where my laser pointer is, right where Jim's pointing. That's where I would make my 50%. The stock only has to move up maybe $4, and I take my 50%. Now, I know it's kind of hidden right here, but look at how much further the stock is going to have to go up to make the remaining 50%. 50% is quick, and you can get in and out of that trade quickly. That's the beauty of this. Now, the next thing that people ask me is, well, Ron, you're selling, so why not you get time decay, right? Because the options are going to expire, and they're going to lose all their value. Here's the problem with time decay. Time decay takes a while, right? This trade right here, I sold this thing. This was a January expiration. I put these slides together in December. In order for time decay, I'm going to have to keep that trade on for probably 3 or 4 weeks. Do you really want to keep a trade on for 3 or 4 weeks in the current marketplace? Or any marketplace? Once, you're going to be up 50%, and then the next thing you know, you're going to be down 30%. You get in, you get out quickly. Now, I've done back testing on this. Hundreds of other people in the options world have done back testing on this. You will make the most money on a spread by exiting at 50% profits. Your accuracy is going to go higher, and your dollar wins are going to be higher. I know it sounds weird, right? But Ron, you're taking profits at a less dollar amount, but your accuracy is going to go up. You're going to make more money more often than leaving this trade just sit on to try to make that extra $65. It's simply not worth it. Okay? So this is how this spread kind of works. This trade was on December 6, 2021. So when I entered the trade, I sold a $70 put, and the option price there was $3. So remember, this is one transaction. I sell a $70 put, and I collect $3. Now, an options contract is 100 shares of stock, so I collected $300. Where was the stock? Well, I'm sorry? Where was the stock? The stock was at about $73.38. So I'm about $3.40 underneath the price. So I collect $300 when I sell that option. Then I buy an insurance leg. Now, people ask, Ron, how do you know what insurance to buy? It all comes down to risk and reward. There's no guessing here. If I sell an option at 70 and I go way down here to buy my insurance, the risk is going to start to outweigh the reward. So there's a delicate balance of where you buy your insurance to get the proper trade. Now I'm going to show you guys this as we put trades together in real time. So I buy the $65 to protect the trade, and I'm going to have to pay $1.70 or $170 to buy the insurance. That means I'm going to collect when I open this trade $130. Now, when I teach this, a lot of people ask me, well, Ron, how do you know when the trade hits profits? How do you know what the premium is going to be here? How do I know what the premium is going to be here? Honestly, I don't care what the premium is there. All I care about is the combined premium. When I get out of this trade for $1.30, this trade may be $1.50. It fell from $3 to $1.50, and this may have fallen from $1.70 to 20 cents. I really don't care about that. All I care about is this. The broker, I don't care what price they give me, I get $1.30 for that trade. If it's $3.10 and $1.80, if it's $2.90 and whatever, it doesn't matter. All I care about is when the broker combines this transaction, they give it to me for $1.30. When I exit the trade, I don't care about the cost of this. I don't care about the cost of that. All I care about when I exit the trade is somehow those two numbers equal 65 cents. So you don't have to worry about the individual options. You worry about the transaction as a single unit. Okay? Now, over the next couple of days, 4 calendar days later, BLDR rose. The price of each option dropped. It went from $3 to $1.50. This one, now remember, I sold that. So if it goes from $3 to $1.50, I'm making $150 on that trade. However, here's the downside. I bought that option for I bought that option for $1.70. Now it's only trading at 85 cents. I actually lost money on that transaction. But that's okay. That's what the insurance leg is for. I'm always going to have an option that wins, and I'm always going to have an option that loses. Okay? If I'm right on the trade, the option I sell, I make money on, and then I lose a little bit of money on the option I bought. If this trade goes against me, I'm going to lose money on the option I sold, and I'm going to make money on the option I bought. That's why we call it insurance. So whatever those prices are, I don't care. They equal out to 65 cents, and that's when I exit the trade at profits. And what you're going to do is you're going to make sure that you put that order in ahead of time. That way, no matter what happens, you get profitable. And I've told this to a couple of you guys now. Yesterday, I got stopped out on a loss of my S&P trade, and I got stopped out of a gain, and I made money on Palo Alto Networks. I didn't do anything. My cell phone went off. I got stopped out for a loss, and I got stopped out for a win. I didn't have to do anything. Thinkorswim took care of it for me. All right, so stop loss. This is important because you're going to look at this, And I'm going to go back to the risk graph real quick. I want you to take a look at this number right here. The most I can make on that trade is $130. Now, this is where some of you that have never been option sellers are going to kind of freak out a little bit. The most I can lose is $370. Does that sound pretty good to you? Not really. It sounds kind of terrible, actually, right? But it's actually pretty good. Because number one, you're never going to lose $370. In 15 years of option selling, I've never had a trade hit max loss, ever. Well, I'll show you this on a risk graph when you have a little bit more room for it. You're never going to lose that. Here's what's going to happen. You are going to exit the trade if it moves against you, and let's say I sold a $90 put and the stock was at 100. If the stock falls to $90, I exit the trade. Just like yesterday on the S&P. Don't quote me on this. I'd have to look at my phone. On Monday, I think I sold a 30, I don't know, I might have to look at my phone. I think it might have been like a 30, no, I got Thinkorswim open. Let's see, what did I do? Was it 39.05? I want to say it was a 39.05. Was it a 39.05? So, okay, so on Monday, I sold a 39.05 SPX call spread. 39.05, 39.15. Okay? Yesterday, the market at 39.05. I got stopped out. I lost money. Now, I didn't lose 10 grand on the trade. I lost like $180 or $190 a contract, right? Because you're not going to keep that trade all the way into this red. This is your stop price. If the trade falls below that, you got to take a walk and get out of that thing. That's what makes the trade not a $130 gain, $370 loss. It makes those gains and losses comparable. Okay? So on that trade on BLDR, I'm going to exit this trade if the stock hits $70. Now, on the risk graph, we're going to outline basically what that loss is going to be. It's going to be about a $75 loss or so. So now what you've done is you've taken a trade that has a $130 max profit. We know we're not going to make 130. It's too risky. We're going to make 65. If the trade falls below 70, we are going to lose about $75. That is how you create a successful spread. You cannot make 100 and lose 600. Okay? The best part about trading these spreads is you control the risk. You have to look at that spread and say, I can't do it. It's just too much risk. I can't tell you how many trades I pass up on a week-to-week basis because I look, I'm like, oh my gosh, I really want to take advantage of this trade. The stock is beautiful. It's going up in a beautiful uptrend or down in a beautiful downtrend. But then I look at the spreads, and I'm like, okay, I got to risk $500 to make $100. I can't do that. So walk away. It's just not an option trade. It's not a spread trade for me. Okay? Now, here's what I want to do. I want to take all that information that we just got, and I want to kind of put it into really a real quick, real-time trade. Now, of course, it's Saturday, so we can't really do it. Jim, go ahead and go to VectorVest and click on the Unisearch. I logged into my account, so if you guys are like shocked it's a white background, that's why. For the longest time, I always used a black background, and then when I started doing webinars, I was like, I can't see the black background, switch to white. And I switched to white, and it was like, oh my God, this is like blinding. Now you couldn't pay me to switch back to a black background. All right, so as part of the options paycheck, what I've done is I've created some, dare I say, custom scans. Jim, scroll down till you see the URS group coaching folder. Now there's like 3 of them because I have a test folder in there, right there, the one that just says URS group coaching. Now, the bullish scans that I have, I give Jim a lot of credit for because Jim, who does retirement, looks for safe stocks. Those are the exact stocks that I look for when I place my credit spreads. I look for safe, good, fundamental stocks, okay? Now, I got to tell you the story. When I first started trading back in '97, right, I worked for a company that created technical analysis software. I traded Gann, Elliott, and Fibonacci, right? I laughed at fundamental analysts. I'm like, fundamentals are ridiculous. Like Dr. Paul said, you got one room you got the technical guys, one room you got the fundamental guys, and all they would do is like argue. Well, Paul has worked with me over there in the corner. Paul and I worked together back in the day, 27 years ago, and Paul was a fundamental guy. So we always would argue back and forth. We worked for a technical analysis company. Paul's like, what about the earnings? What about this? You got to look at the over this. And I'm like, come on, Paul, this is ridiculous. This stuff is no good. Fundamentals are a joke. Well, I changed my opinion pretty good here when I came to VectorVest. Fundamentals are really, really important. So one of the things that I tell people is you do not get into an income trade unless the fundamentals are strong. Or if I'm looking at something going down, fundamentals need to be weak. So if you take a look in that folder, now if you sign up for the Paycheck or you sign up for the URS, this folder comes to you. Look at some of those scans I have. High VST, YSG stocks, long-term winners, RS descending, premier growth, ruler stocks, S&P 500, safe and sound options, Vector 125. I look for scans that have good fundamentals. Now, you don't have to get nuts and bolts into this. I say find good fundamental stocks. How do you find them? Those searches are good fundamental stocks. That's all I need. The software does that for me. I don't have to worry about growth and earnings and all that stuff because the scans are there for me. Now, what I do, Jim, go ahead and click on Premier Growth Stocks. I'm only looking bullish because the market was up yesterday, so we're going to probably have a lot more. This is not a bullish time to buy right now, just so you guys know. If I run that scan, I've also added a couple more characteristics. Now, as a technical analyst, one of the things that I really like is adding this last line. This last line says, only find me stocks that are higher than the current bar's midpoint. That basically means this. If a stock opened at 100, had a high of 101, and then had a low of 90, the stock's not trading down for the day. Even though it's up, it's not trading at the low of the bar. I want it to be moving up. Another thing I add, and Jim, you'll have to scroll down for the next one. Hey, actually I lied. It's not in there. It's this one. Time of search. I want to make sure that the stock that I'm looking to go bullish on is higher than the prior day's high. I'm looking for higher highs day over day. I would never do a bullish trade on a stock that's down for the day, ever. I would never do a bearish trade on a stock that's up for the day. Price is the ultimate decider. Then, Jerry talked about this, Glenn talks about this, Jim talks about this. I have filters in there for trends. It's got to be higher highs than it was 3 months ago, and it's got to be higher highs than it was 1 year ago. Jim, run that scan and see if anything comes up. All right, cool. And then do me a favor and graph. You can just graph all of them. It doesn't matter. Or graph top 10. All right, Schlumberger, right? Now, if you look at Schlumberger, it's not the most beautiful trend in the world, let's be honest. But over 1 year, it's been trending up. Over the last 3 months, it's been trending up. Jim, hit the 3-month button right there. It's higher than it was the prior day's high, and it's going up. Go ahead and go to the next graph. Now, that may not be the best graph I've ever seen. Steel Dynamics, which, by the way, in full, Jim Cramer, whatever you call it, I actually own Steel Dynamics. One of the few stock trades I actually own. Steel Dynamics. And, I'll tell you what, this thing looks good. Because the first thing I see as an original technical analyst, I see a trend line. Right there off that high that kind of runs down there, and I kind of see a breakout. It's breaking out of resistance. Oh, that looks good. All right, let's do this. Let's take Steel Dynamics, STLD. Jim, switch over to Options Pro. All right, I want you to click on Chain. And in the upper left-hand corner, type in Steel Dynamics, STLD. All right, and then I want you to go into where it says Expiration, right down here. And I want you to choose February. Uncheck January, and then just check February. Now, why February? It's 41 days to expiration. It's a good thing, right? 21 to 45 days. Now, Jim, if you scroll that little scroll bar over to the right, all right. Now, what you're going to see, keep going all the way. You're going to see what's called the ITM. Remember we talked about probability? So, if you look at this, take a look, it's 8% right there. So what that tells you is, based on the historical movement of Steel Dynamics, over the next 41 days, the stock has an 8% chance to drop to $85 a share. So there is a 92% chance that over the next 41 days, Steel Dynamics will stay above 85 bucks. That sounds pretty good, right? 92%. Now, if you look at the next option, it says 16%. So that tells me there is a 84% chance of it staying above 90. Now, that looks pretty good. I mean, who wouldn't want to take an 84% trade, right? Jim, do this. Hit where it says clear. I want you to click on the ask price of the 95. Or the ask price, yeah, I know. Oh, no, I'm sorry, the bid price, Jim, sorry. So we're going to sell a 95, and we're going to buy a 90. So click on the ask. All right, so what we've just done is we've created a spread at 95 and 90. This one has about a 70% chance of success, okay? It's got a 29% ITM at 95, and that's what we're really looking for. So go ahead and right-click on, right where you're at, Jim, right-click, and go to a risk graph. Okay, so this trade has a 70% chance of making up to $110 and a 30% chance of going below that 95 bucks. Now, is this trade acceptable? This is where the options paycheck comes in. This trade is acceptable with one condition. How many of you like repairing options trades? Just kidding. I despise trading. I despise options repairs. I really do. If you'd have talked to me 5 years ago, I'd be like, oh, let's repair this trade. Yeah, let's do it. I hate repairs, honestly. I got no time for this anymore. I have time. I just don't want to do it. I'm too lazy. This trade looks really good if you're committed to repairing trades, because you cannot be successful making $55 if you win, and then if we go over here, Jim, line up your crosshair. Actually, over here, Jim, that button right there. Yep, that one right there. And then line up with that short strike price of 95. Now, I can't see that number right there, Jim. What is that? 105. If this trade works, you're going to make $55. If it loses, you're going to make 105. Or lose 105, pardon me. Now listen, if you're willing to repair this trade, which I do teach you, by the way, if you like Steel Dynamics, you like this trade, you can repair it, it'll probably bring your loss down to about $70. But I don't know about you guys, I don't want to repair my trades anymore. So I would just walk past this trade. Yes, it looks good, but the risk reward is not acceptable to me. That's too much, okay? Now, let me show you a cool thing. Jim, go ahead and close that risk graph. This is where Options Pro really shines. Part of the URS package, by the way. Go ahead and close that option chain. Now, go ahead and go back to VectorVest. All right. Go back to the Unisearch. No, you're good. All right. I want you to click on that button that says Options Pro. And then hit Load Option Chain. Now what I'm doing is I'm taking all of those stocks from the Unisearch and I'm bringing them into Options Pro. Go ahead and just close that option chain at this point. Just the X right there, that one. All right, now right-click on Schlumberger SLB, and I want you to go to Open Spread Select. Okay, go ahead and maximize that out. Now, this is really low resolution, so you're going to have to kind of work with me on this one. You're not going to be able to see everything perfectly. All right, so what I'm going to tell the software is this. Jim, over on spread type, right there, I want you to select bull put spread. So uncheck bull call, and then uncheck bear call. Okay, then over here, the next column, I want you to choose the February expiration. So uncheck Jan 20 and check February 17th. Now, mind you, outside the S&P 500, most of my trades are done on monthlies. mainly because monthlies are where all the liquidity is. Some trades have, like Apple and Microsoft, those have, good liquidity on weeklies, but mostly they don't. So I try to do monthlies only. Now, under the number of strikes, Jim, change that to 20. Yeah, you can just type in 20 there. All right, now under direction, I want you to hit below. Now, what I'm telling this thing to do is I want you to build me 20 spreads. And I want you to go below the current price. Why below? Because I'm doing a bull put spread. I want to choose an option below the current value of the stock. All right, now, Jim, I want you to click on this little gear right here. Now, this is where it gets a little funky, Jim. All right, see that little tiny little thing right there? It's like it's the top of the button, just barely got to move the mouse. There you go, load. Click that. All right, now scroll down here, and there should be one called credit spread right there. Perfect. Nope, one up there. There you go. All right, click open. Now, what I'm having the software do is I'm having the software build, keep that up there for right now, it's going to build spreads that have a maximum of a 40% ITM. So it's only going to find me spreads that have a 60% chance or better of winning. The next thing it's going to do, it's going to look at my profit. Now, one of the things that, a lot of people that trade spreads, especially outside the US, say is, Ron, it's very expensive to trade spreads. I get it. I don't like paying commission costs either. So what I do is I have a minimum credit of $75. Now, when I trade my spreads, I make all of my spreads a $1,500, as close as I can get to $1,500 credit. So if I have a $75 premium, it means I have to trade 20 contracts to get to that. If you only want to trade 10 contracts, I can set that to $1.50. Now, the other thing I can set, and Jim, go ahead and place a check mark where it says ROI. And I want you to set that to 35. What the return on investment is this. If I put out $100 to place this trade, I want to at least have $35 in profit potential. So it's ROI. And then last but not least, there is a credit spread risk factor, which is the risk to reward. Now, Steel Dynamics, the trade that I really didn't like, that had a risk to reward of 4-to-1. It had like a $100 premium with like almost a $400 risk, right? About 4-to-1. There's something magical that happens at 4-to-1. 4-to-1 trades generally require repairs. I don't like to do repairs. So I tell the spread select to just go ahead and don't show me anything with a 4-to-1 or better or worse risk reward. All right, now, Jim, go ahead and click. I think it's this button right here which is OK. You can't see it because it's all the way at the bottom. Go ahead and click on that. What did I just do there? Oh, man, click load. This is the bad part because I can't see the buttons. Click on, go back to credit spread. Right there. Use the one below it. And then change that ROI back to 35. And then put a check mark there. And then I think, try this one. Fingers crossed. Nope. Okay, cancel. Try that button. Nope, not that one. Oh. No, click on the first one. Yeah. By the way, don't run this in like 1024 by 768. Okay, credit spread. Nope, the one right there. Okay. And by the way, you save these as templates so you don't have to ever change these things. Then ROI to 35. And then try that button right there. No, it still didn't. The second button? Yeah. No? All right. Jim, let me do this real quick. I love this. I love this.
I don't know.
Because what you got to do, drag this up a little bit. Load, factory. Oh, it's like way down there. I wonder if I can hit X and it would work. Let me see. Let me see if it'll. Yeah, let me just close this down.
Maybe that'll do it.
Okay, yeah, it's not setting itself up. Oh my goodness.
The resolution.
Yeah, this resolution is just not.
Can you widen that one? So
No, you really
adjust the
can't.
window,
Can you grab the top and shrink it down?
No,
Or make it wider, it doesn't adjust at all.
no, it doesn't adjust at all. I don't know. Yeah, that's load template save, but the OK is like below it. Yeah. Yeah, it's not going to work because I don't have the resolution. No, it won't go any higher. Yeah, it won't.
Change the whole resolution.
You have to change the whole resolution of this thing. That's not going to fly because that would screw up everything. Yeah, I mean, I can try that. No, it's not going to. Actually, I'll tell you what we'll do. Tab. Okay. Tab. Enter. I don't know if that's going to do it. No, it's not going to. All right, well, that's a bummer. Okay, so important safety tip. Don't run at 1024 by 768. I didn't realize that was going to happen. But what happens is, with the spread select, over on the option spread filter, you see where it says all the way on the right, fail? What will happen is this thing is going to build all kinds of different spreads for you. And you'll see fail, and you're going to see pass. So what I can do very quickly, Jim, go ahead and open up the side where it says the symbol list. Okay? And if you click on like the next one, Steel Dynamics, you can very quickly go through that list, and it will tell you in seconds if there's any trades that pass your criteria. Okay? So very quickly you'll be able to find these trades. Now, I want to show you some real trades that I'm in that I happen to be losing a little bit on right now, but that's part of the business. Jim, click on File and go to Open. And then there's a folder that's 1-3. These are trades that I did on Monday. Go ahead and go to Etsy. All right, so Etsy. As you can see, I am down $65 a contract in this trade. This trade has a $130 credit, so I can make $65. And then, Jim, I want you to move the mouse to where the short strike is at 120. I think it's 130, 125. So yeah, right there. Now on that trade, what's that number say, $77? That's the trade I want to find. I can make 65, and at worst, I lose 77. Okay? Now, the cool part about this trade is, Jim, click on that little Thunderbolt button in the right-hand corner of the wrist graph. Lower right-hand corner, right? Yep, one up. All right. We all know what the market did yesterday, right? I'm still in this trade. Even though the market had that big 80-point move yesterday, it didn't move enough to stop me out. I still have room to go here. Click on File and go to Open Page. And then go back to that 1-3 folder. Click on Generac, GNRC. That's another trade I took on Monday. Same idea. I have a $165 credit. That means I'm going to make, $82 on this trade per contract if it all goes in my direction. Jim, go ahead and move the cursor to the short price of 105. How much am I going to lose? $38. That's the kind of trade that you want. If you want to be successful at being an option seller and a credit spread trader, this is what you've got to look for. Go ahead and click on the little Thunderbolt to show the graph. And I still had plenty of room as the market moved up 80 points today or yesterday to make money on that trade. Jim, go to File and go to Open. And then click on the 1228. Yeah, that one. Click on Palo Alto Networks. That, by the way, is the trade that I closed out for profits yesterday. I had a $1,450 credit. I made $725. Now, why did I make money on that trade? Okay, fine, I got direction right, okay? That's obvious. But it came down to, even though the market was up 80-some points, VectorVest identified that as a bearish stock. The fundamentals, the technicals all lined up. Jim, click on the little Thunderbolt. Okay? Take a look. And it's just continuing to go lower. Even that little uptick right there, you see the uptick a couple days ago? I traded that with plenty of room. So even as it went against me, I still had room. And I stayed in that trade till the profits. That's kind of like Etsy and Generac. Now listen, I don't know if I'm going to make money on those trades. I hope so. I think I will. But I had enough room to ride out the volatility. And that's really the beauty of what the options paycheck is all about and what we do in the URS. Jim, go back to the web browser Wingman Tracker. Okay, now what I want you to go scroll back up to the top. Click on where it says Analysis. And I want you, see where it says Naked? Where it says Strategy Naked? And by the way, this is weird. Naked just means that I bought or sold an option by itself. Go ahead and erase that. Type in vertical, V-E-R-T. All right, so there's more of a synopsis of how I did last year. So on those trades alone, I was up about $29,000 out of a $100,000 account. So I made about 30% just on the credit spreads. My accuracy last year was suffered a little bit. I was only 57% right. Sorry. But look at my average winner and my average loser. $7.99 and $6.76. You just have to set the trades up right. That's all you have to do. You have to know how to set these trades up properly, and you're going to make money. That's the beauty of what we do in the paycheck. That's the beauty of what we do in the URS. It's all about doing this selling correctly. Okay? That's the options paycheck live. Sorry I couldn't show you the spread select because of the weirdness of the resolution, but that is how we do it. All right, thank you. I didn't take too long, did I, Ray? Oh, you're good. Okay, cool.
Thank you, Ron.
Huh?
Thank you, Ron. That's really powerful stuff once you can get your head around the options paycheck, but it's one of the most consistently successful approaches that there really is out there. It's been amazing for many, many people. I encourage you, if you're at that evolution or that stage in your trading and understanding, take that leap. It's an amazing course, and Ron literally transforms people's lives. On a different note, before I pull up our last speaker, Glenn Tompkins, and a side note, when Glenn is done with the next talk, we're going to bring a panel, bring the speakers up here. We'll take turns answering questions from the audience here and from online. So, you can get your questions ready. We'll try to answer as many as possible. But all of the years we've been coming here, we've been coming to Tampa for over 20 years. We used to do a lot of money shows. And one of the things Dr. DeLito used to tell everybody in attendance was if he would have really started understanding investing, the true nature of investing at a younger age, how could that have transformed your life? And I think to myself, when I came to VectorVest, in all these years I've been here, if I would have just started when I was younger, if I even 5 years younger, 10 years younger, 15 years younger, how much of a difference could that have made? So we always encourage people, get your kids involved, get your grandkids involved. And for those of you who are online and aren't here right now, we had a very special occurrence that kind of humbles us all here in Tampa. And we have an individual, and I'm sorry to call you out, Braxton, but if you wouldn't mind, would you mind standing up? Come, if you don't mind joining me up here. Braxton is 13 years old, and he's a round of applause for him. And I have so much respect for Braxton because he's taking that step, that initiative. Obviously, his family is here, helping him understand, but Braxton is trading options and understanding the dynamics of it. And we're just so proud of you and so honored to have you here with us. And one of the things we want to do is we're going to give you the options paycheck course when we start it in February and let you study under Ron for this next launch and let you take your trading and your education to the next level. And I know he's probably not going to need this or want this, but here's my card and here's Linda's card, and I want to give you your first formal job offer when you turn 18 years old. I know you probably won't need it and want it, but we would love to have you as part of the team when you're a little bit older. So keep rocking it. Thanks a lot, Braxton. Oh, and Grandpa's here is the reason that he's here. So, and I encourage you, my son's 7 years old, and he's almost to the age where I'm going to start hammering him with this stuff. But it's just great to see, and we should encourage the younger generations and pass down our knowledge and information in education. So thank you for being here, Braxton, and thanks for all of you at home as well. I'm going to bring Glenn up here, and he'll give us the final talk, the path to securing financial freedom, and then we'll have a panel afterwards. So I'm signing out for now, but thank you all for being here, and here's Mr. Glenn Tompkins.
Oh.
Sorry, I actually threw this board over the seat. There you go.
All right, Tess. Look at that, Joey, right on point. I'm loving you now today. That's awesome. Thank you, Joey. Joey's an amazing individual, but I give him a lot of flack because he deserves it, because I love him like a brother. What kind of family would we be if I didn't give ribbing to my brother? How about that, right? All right, so let me start this way. How many of you enjoyed what you had for the last couple of days? It's awesome. All right. Before I get into the pathway to securing financial freedom, I want to say personally that it's been awesome to put the face to a lot of names that we see on our YouTube chat. First off, the VV Nation is an amazing community, and it's because you guys make it that amazing. And it's just awesome seeing the faces behind the names and people saying, hey, can I get a selfie? You guys got to stop doing that, because I'm already a diva and I don't need my head to be any more bigger than what it is right now. So I'm just putting that out there. But thank you all for being here. And I want to start off this talk by reiterating what Ray said earlier. It's a difference between being interested and being committed. Now, as I look across, at the lunch table, it's funny because sometimes I can be passively aggressive, but I'm sitting at lunch, I'm looking at everyone at my table. I said, you have a subscription? Yes. You have a subscription? Yes. Yeah. Who's got a monthly subscription? I do. No, you need to have an annual subscription. So I think that, will many of you walk away from this and be like, well, that was great, and walk away? Absolutely. It's going to happen. But just like Ray just said, and I'm going to ask the question, how many of you wish you knew about VectorVest, wish you knew about VectorVest earlier than you did? Raise your hands. Folks, keep them up for a second. For anybody in this room who is still just interested, look at this room right here. It's the reason why I asked, because every time I go to a seminar, man, I wish I knew about this VectorVest a long time ago. Folks, you're sitting in an opportune situation right now to take advantage of the most awesome system that's out there, followed by the coaching. That's the value add, because you can say, well, I can get this from IBD. Hey, I can get this from Zach's. And you can get whatever the heck you want from whoever you want. But nobody does what we do the way we do. And if you think that there's someone out there that does, raise your hand and tell me. Absolutely. I'm just going to be that brash about it. Because nobody does what we do the way that we do. And we go the extra mile. We want to make sure that we guide you. It's not baptism by fire. Sometimes it feels that way. But it feels that way because you don't know where to go to get the answers. A lot of it's in the system. Go to the training tab. I'm going to take just a little bit. In the training tab, there's something called the navigation series. I did the navigation series for a lot of years. But folks, if you're brand new to the system, it will walk you through each and every tab. If you're brand new to the system, we've got coaching 3 times a week where a group of you get together and somebody walks you through how to get started. It's called Getting Started. Fancy that name. Folks, it may feel daunting. It may feel overwhelming. But we're here for you. And you know why we're here for you? Because we're a subscription service. If we don't keep you, we ain't here. We've got a vested interest in each and every one of you. And if you got questions, ask them. Just don't ask the really silly questions. But if you got questions, ask them, and we will do everything that we can to answer them. All right. So putting all that out there, the path to securing financial freedom. That just makes sense. Stay informed. You can stay informed with everything that's out there, but we provide you with visual and audible guidance every night. Jerry does the color guide. Jim does the color guide. I do the color guide. Ray just used to get stocks ready for it, but Steve Chappell does the color guide. Patrick France does the color guide. Todd Schaefer. Folks, I'm just going down names. There's a lot of, if you put all of us together, we've got over 100 years worth of experience in the VectorVest software, starting with Chief Steve Chappell, about 20 years. I'm next. I got 18 years. Jerry, how many years? 16 years. Jim, how many years? 15 years. Todd is somewhere between y'all in there as well. He's about, Patrick has been there for, folks, you add us all up, that's over 100 years in this software. If we can't answer the question, you probably didn't ask the right question. But we can pretty much answer any question you got. Watch the daily color guard reports and the special presentations. Folks, you don't know. Listen, and if anybody tells me that they don't watch the special presentation, don't let me hear it, because I don't want to hear it. You guys don't realize what it takes for us every week to prepare that. Tuesday, Ray will come up. Hey, Glenn, I got you on special presentation. Sigh. All right, that's the first thing that comes to my mind is sigh. But then come Wednesday, hey, what you got thinking? Well, I'm thinking about this, that, and the other thing. Yep, that's not so good. I'm thinking about this, that, and the other thing. Okay, and we go through a lot of work, folks, to present to you that special presentation. It's not something that's just willy-nilly thrown together. But why do we do it? Because it's part of knowing how to use the software. Educational webcasts and courses. Holy smokes. For the amount of money that you pay for a subscription, we go above and beyond, if I do say so myself. The webinars that we give, the Jockey Club. I'm not even talking about the YouTube channel. I'm just talking about what we've got. The courses. We've got 4 different courses. We've got the swing trading course. We've got a retirement course. And a lot of these are already laid out. The only thing that's different is when they're ready, we'll give, what are they called? No, what's the part when after you've looked at a course, it's the live thing, the mastery session. And during that mastery session, you get to, you be like, Jim, you said to do this and do that, and Jim will answer your question. That's the value add. You can go out and get any service you want, but what's the value add? We, over 100 years worth of information, 100 years worth of experience in the software, that's the value add. All right? Heal your current portfolio. I've talked to a few people out there who've given me the horror stories of where they stand. What should I do? You know, first off, I can't give you that kind of advice. I'm not a broker. But a lot of times I look at what you're showing me, and what's the first words out of my mouth? The damage is already done. But that's real. So what should I do now? Well, you got to make a decision. That's as far as I can go. But I will say this. At some point, folks, enough has got to be enough, and only you can make that decision. At some point in time, you want to free that money up to go into a position, now that you've learned your lesson, to put that into a position to help overcome that big pullback in your portfolio. Heed the color guard. Weed your garden. Get rid of the stocks that are hurting you. Guys, listen to me. Just because you love the stock, again, it won't love you. You know something? Even if it's a good stock, sometimes there's a bad time to be in a good stock. Can I get an amen on that? Amen. That's real. And sometimes you got to make the decision and get out of the stock and replace it with a better stock. The color guard, red, yellow, green. What is not to understand? I see a lot of yellow in the color guard, cautious. I see a lot of green, woo, market's going up. See a lot of red, Simple. Only buy stocks that are right for you. That's important. Because you see in the news, hey, this stock just got FDA approval and it's up a cajillion %. Oh, I need that. Wait a minute. You're a conservative investor long term. Oh, no, but I can make money on that stock. Go right ahead. And when that stock goes down because of the high volatility that you didn't take into consideration, how many people have gone outside of their comfort zone and gotten burnt? That's real. Know who you are as an investor and stick to it. No matter how juicy something looks. Now, let me back that up a little bit. If you got a small portion of your portfolio that you could be a little aggressive with, it's okay to do that. But not with your full-blown retirement portfolio. You don't want to risk that. Follow a VectorVest trading plan that best fits or matches your investment style. And that's where these coachings come into place. And that's where we go from being interested to being committed. This is where we go from where we are in our investing to sharpening your tools. Let's talk about sharpening tools. Successful investor approach. Holy smokes, everybody in this room should be in that course. How many of you don't want to be a successful investor? That was a trick question. I wanted to see who was going to fall for that. But that's an honest thing. $1,200, it's like the same price as real-time annual subscription. Well, instead of taking the real-time subscription, take the course. Take the course because, or take the, not the course, take the coaching. Good gravy. I'm getting old. All right, take the coaching because the coaching, again, is the value add. You're paying the same price for real-time, but now you got the value add of the coaching. So anybody who's on a real-time annual, my suggestion is to take the successful investor coaching. All right, let's say, well, I want to get and start to hone in on swing trading. Actually, let me back up. How about I want to hone in more on my retirement? That's a tool, right? You want to sharpen that tool. That is a coaching to sharpen that tool. And guess what? Now you get Jim as a coach, but you still have access to the successful investing. Now you get two. You got access now to two. All right, so, I'm okay with my retirement. I want to notch it up a little bit, and I want to learn, get deeper into the techniques for swing trading. That's when you go to swing trading. Now you go to Jerry. But with that, you get Jerry, you get Jim, and you get Todd. Again, we're giving you, and as you go up, and of course, you go into the ultimate retirement solution, you get Ron. But now you get Ron, you get Jerry, you get Jim, you get Todd. Therein lies, where are you committed? Somewhere in that group, in these groups, you're committed. This is the time to take advantage of that at a reduced rate. Because as you leave today, they go away. Online, all you VV Nation folks, you need to be listening up too, because you've got the link to go do all of this online. All right? Are you interested or are you committed? Only you can make that decision. And for those of you who are interested, we can walk away and be like, hey, it was nice seeing you. Yeah, I'm just interested at this time, not committed. Okay. You can still invite me over for Thanksgiving. I'll still come. Just don't put raisins in your whatever you put it in. Don't put it in there. I'm not eating that. But it's okay. We've done our job. Now it's up to you. You know why? Because this is your business. How committed are you guys to your business? We're committed to you. Are you committed to your business? Just think about that. Let that marinate for a second. Automate as much as possible. Why? Because time is a commodity. Time is money. When I did the back testing portion yesterday, that helps to make me feel confident before I go and try to be automated, what automation I want, what automation fits me. That helps to free me up from my time to now go, I got a trading system. I know when to buy, what to buy, and when to sell. I've already put it together. It takes a little work to get it done, but once you've got it done, you're good to go. GTG, good to go. I didn't make that up, but it sounded very great. Everybody, hashtag GTG. You got that? You got that, Mimi? All right, hashtag GTG. All right. Reduce stress and emotion. And this is so huge. Many of us invest and still invest on emotion. I do it. I ain't gonna lie. I do it. I see something and I'm like, good gravy, and I do all of my analysis. And then I look at it and then it just does not do what I want it to do. And I sit back and go, oh, I knew better than that. But sometimes it comes back to you need to take you out of the equation. It may be about you, but you're investing or using a tool that does it better for you. Got to take emotions out of it. Produce better results. This is why you do automation, to make sure that before you're comfortable pulling the trigger on something, that you got something that you're comfortable with. Allow our industry-leading coaches to keep you headed down the right path. Now, remember I said I did the talk about the successful investing for Todd? And Todd made a good point that even in that coaching, there's a checklist. You get a checklist. Do this, do this, do this. But what happens when markets do what markets do? And instead of being caught out in the middle of the ocean with no idea of where you are, no matter which coaching group you have, those coaches are your navigation to safe harbor. Think about it from that perspective. You're never left hanging at any point in time in your journey to invest better, ever. That, again, is the value add to the coachings, folks. And gosh, I can't express that enough. The talent that you have access to may not be in person, but virtually. And I've seen the successful investing coaching go on for 2.5 hours because Brian and Todd want to answer everybody's question. Those are the times they say, hey, can you help moderate? Nope, because y'all talk for like days. But that's the power of having a coach, and that's why the coaching package is so important. Be an optimist. Sometimes that's hard, especially when markets are going down or you hear the news. Man, the news can sometimes be such a Debbie Downer, such a bummer. Well, you know, folks, Jerome Powell gets up and says, hi, I'm Jerome Powell. And the minutes, and then he takes off his glasses. The minutes show that we're having and then he says, well, we're going to raise the interest rates. And then the market responds. So you got to take off the glasses and do that. All right, so that's when he's serious. All right, so you listen to that. Then you listen to the people on CNBC, and everybody wants to give their opinion. Why? Because they get paid to give you their opinion. Then you listen to the people like His name sounds like a crane. But he talks about there's always a bull market somewhere and he's going to find it for you. That's not real, folks. That's not real. We're going to keep it real, all right? So with all of that, you guys have the opportunity to put yourselves in a better position to be financially secure, all right? And you should take advantage of it. There's no ifs, ands, or buts about it. You need to take advantage of it. And take advantage of the coaching. If you aren't a subscription, take an opportunity to renew your subscription. If you need a course to sharpen your tools, take it. It's all there. You know something you heard? You can lead a horse to water, but you can't make him drink. We can lead you to a path to financial freedom. I can't make you walk it. All right? So that's what we got. Before we close out, we got a panel coming up of us. You can ask us any market-related question, and I'll look at what's going on online, and I'll ask questions in here as well. Am I supposed to be moving this thing, or are we just going to put the chairs up here? All right, so give me a moment. As they come up, is this thing heavy? Crap. No, it's not that heavy. All right. Let's go move this around. Before we start the panel, I do want to shout out to our customer support who's been there on a Saturday today for you. Boston's been in the background. John Marabu's been in the background. Asherton has been in the background. And Devin, all in the background moderating. So I want to give them a hand, folks, in the background, rocking and rolling on a Saturday. So I wanted to shout them out. So I'm not shutting us down yet. We're going to get this panel up here. Give me a second. If you got questions online, start typing them in. All right. If you got questions online, start typing them in. And while that's going on, I'll start off with a question from here, but I want the chairs to get up here first. Let's get the chairs up here first, and I'm going to start talking that way. And Braxton, I like that idea that we offered you your first unofficial job. That is going to be kind of awesome if that comes through.
I'll take it.
All right. I'll bring you under my wing. I got you. I got you. All right. All right, as the chairs are setting up, I got somebody online that says clap, clap, clap. That's awesome. I like that. All right. So I got a question from online, and this one comes from, dagnabbit. I just had it. Oh, this comes from Ken Neal in Canada. He says, Ken Neal says, I'm in Canada. What would I need for Options Pro software? So I'm going to give that to Ron.
Now, Options Pro only works on U.S. stocks, just so you know. But if you want to trade in Canada, you'd have to open up an account that can trade, U.S. stocks. I think Thinkorswim does it. I think Interactive Brokers allows that in Canada. But you can't trade like Paycheck trades through, what's it called, an RRSA or RRSP account. And so you'd have to have a non-retirement account in Canada to do that.
All right. I'll take a question from in the room. Don't yell them at me. Raise your hands. All right. Yes, I'll come to you, but yes.
Okay, yeah, that's for Ron.
Okay?
Yes. In your opinion, is there a big difference using a credit spread versus doing a debit spread? I generally do more debit spreads, but basically doing what you do, other than you have to put the money up front rather than in the back.
Okay. The question is there a big difference between doing credit spreads and debit spreads? And the answer is, it depends. I can certainly set up a debit, like an in-the-money debit spread that mimics a credit spread, where you have probability. If you're I would do an out of the money credit spread, but an in the money debit spread. You can set them up exactly alike, ultimately. Now, typically, when I do a debit spread, I want to have, like when we did the credit spreads, I might make $100 but risk $150. When I do my debit spreads, I put those more in line with I want to make $300 and risk $100. So I put those more as more of a directional where it has to go in my direction versus a credit where I'm setting it up more for its probability. Does that make sense?
Yeah.
Okay.
I actually do it in the money anyway.
Okay, yeah. Well, in the money debit versus out of the money credit, exact same thing ultimately.
All right, I'm going to take an online question. I don't know who I'm going to give this to, but I think I'm going to give it to Jim. Jim, thoughts on the price of gold if U.S. credit rating is lowered? I wanted to, yeah.
Yeah, no, that's all right. I'll comment on what I think about gold. I mentioned it in our user group. This is not a recommendation for you all to go do it on Monday morning, but I've been long gold for a while, GDX, the gold miners. As far as the second part of that question, I'm not sure, but as the dollar continues to stay strong, I've been in gold for a while, and I think it's a safe haven now for those who are looking to maybe not get into stocks, certainly growth stocks or ruler stocks like I talked about. So that's my take on gold. I can share with you where I personally am with gold. I'm long GDX, I'm long GLD.
And the reason why I posed it to you is because I know that in the retirement,
from the retirement-minded view, I believe it's a safe haven. Now, I've been in it since the low 150s. GLD is up, it's up in the 170s now, I believe. But that's my take. As far as the second part of the question goes, I'm not sure where I was going to go
All
with
right.
that.
Thank you for that answer.
Oh,
All right.
David wants to comment on that.
Okay, there you go. Thank you, David.
Guys, if you look at the gold chart, a monthly gold chart, way back for the last, 20 or 30 years, you can see that there's a huge technical pattern building up, a cup and handle pattern that's been in the making for 15 or 20 years. And if it goes much higher, that pattern will in fact pull an awful lot of people into the gold market. The gold market is tiny in terms of market capitalization compared to the normal stock market. And if the big funds start to move into gold in a meaningful way, then I firmly believe that it'll run and run very fast. For those of you, we mentioned Fibonacci a little bit, or Acci a little bit. The Acci doesn't run off my tongue easily, so I call it Fibonacci. There is a huge bullish pattern on the GDX. It's the reason that I took my trade. It's a pattern made famous by a chap called Harold McKinley Gartley in his book way back in 1932. The GDX moving up very, very strongly in that. My own personal view, and I hope I won't be shot, but I think the dollar looks toppish to me, and I would expect the dollar to weaken significantly in the first quarter. But there's a probability associated with that, as Ron just talked about.
All right. Next question, inside here.
Does the NPI work equally well on indexes as on stocks?
NPI,
There you go.
NPI or MTI?
So the NPI is in the near perfect indicator?
Yes.
Does the near perfect indicator work as well?
Does so question for those folks at home, does the near perfect indicator work as well on ETFs, indexes? Is that quite right? The answer is yes, because everything that's involved in the near perfect indicator is looking at price, relative timing. So those indicators are relative timing and our stop price as well. You can apply our stop price or the relative timing to an ETF or an index. It's the same thing. It all revolves around price. So it doesn't matter what instrument you're using, it'll work just fine.
Question from online. When entering a credit spread, do you have a target delta or standard deviation?
No, when I enter, what's that? Oh, the question was, when I enter a credit spread, do I have a target standard deviation or delta?
Yes.
So Yes. Not so much standard deviation, not so much delta, but I do have a target. That's that 40% probability. Now, if you worked it into standard deviation, I would say probably about a half a standard deviation. That would probably be my target for selling.
Okay. Question from in here. Yes.
Is anybody on the panel up there pro-crypto?
Is anybody on the panel pro-crypto?
Not me, nope.
Not anymore.
That's a negative.
David?
I was short of it a couple of times.
Pro-bearish. I'm going to take another question from in the room. Yes.
This is for Ron using SPX system. I mean, a couple of times, you use your DEW system and you get, say, $500 credit for one contract, and it's getting close to the short arm or long arm. You want to get rid of it, and you go and buy it at that time. You want to close it, you're almost like paying $1,500 to buy it back.
Yeah, so the question is, at the exit, essentially on the SPX trade, you're getting more of a loss than you anticipate? Yes, I have seen that. The big thing that you got to learn, and this is tough, patience. So I've seen this live when I get out of trades. I'm looking at a trade and I think I'm going to lose, let's say $500. And then it's at the short strike and all of a sudden it's at 900. This is hard. You got to wait. Because something is causing a bid or something is causing an ask to go out of range, and it will return to the mean. So you just have to hold it. And that's one of the things that I, like with my orders, I put in there. And, about 95% of the time my orders are hit right on the target where I am. But yeah, I have seen that with spreads when you're trying to manually exit the trade. You just got to be patient. I did this a couple of years ago in one of my live classes where I got out of a trade like that. And it's like, oh my gosh, I just lost $700. Ron, how did you only lose 300? Because when I exited the trade, I saw that the midpoint price was ridiculous. I'm like, this is going to return back. There's a weird bid and ask going on. So check that too. Like you might see, I'm just making these numbers up, a $2 bid and all of a sudden a $4 ask when it should be 2 and 3. I have seen that before, and you just have to be patient and wait for that price to return to normal.
All right, online. Now, I'm thinking that whoever wants to take this, with the most current, I'll answer it. Is the downtrend broken and a new uptrend started given the past week's market action? First thing I'm going to say, one day doesn't make a trend. Big up day, one day doesn't make a trend. What else is going on in the market? Where are the levels of the MTI, the buy to sell ratio, all of those different things? If nothing that, when you ask this question, if nothing that we've taught throughout the last couple of days is, where does it all start? With the market's conditions. Where is the market now? Don't get caught up in one day. Now, does that mean don't do anything? If you want to step your foot in the water, you can. But what am I looking for Monday? Follow through. Everybody should be saying that loud and proud. Follow through. And that's what, if you don't do it that way, you're doing it wrong. So let's practice that. Ready? Follow through. All right, so you guys are crazy. That's crazy by osmosis, and that's okay. I'll take that. I can't believe I got that many people to say that. All right. But that was really funny. That's what we're looking for to answer that question. I think that if we looked on the market, don't bring up the market timing graph, but if we were in a downtrend, even if we did break through a downtrend overall, I don't think we did. I think we've been going down a lot. I don't think we've really broken through a downtrend. But a big up day, everybody could be like, whoa, we're going to get ready. Make sure you got follow through, number one. Number two, guess what? You don't have to do a lot of work. Listen to the guidance, because we'll talk about it. We'll talk about it. All right? What? Oh, why? Were you talking behind my back?
Yes.
Okay.
Yes, I
Oh, that's fine. All right.
Just to answer the question.
I did answer the question. Wow.
The question was, is the Dow? The question was, is the Dow downtrend broken?
No, that's not what it said. So
Okay.
you need to listen to the question
Okay.
before you beat me up on it.
So let's say the question was, is the Dow downtrend broken?
Okay,
Let's
that's
go
not
with
what
that.
okay.
Draw a downtrend line and then see where the price of the Dow is, and that'll answer your question. If you draw a downtrend line connecting the lower highs of the Dow, and price has broken above that downtrend line, the answer to the question would be yes, the Dow downtrend has been broken. So.
Did I not answer it sort of kind of like that way?
I'll add one last little bit to that by talking about what a mentor of mine, a gentleman called William Gann, used to say. He said the safest place to buy is after the first rising bottom. And even if that trend line breaks, we will only have first rising bottom on the US markets when it breaks above that top of some weeks ago. And it's still got a bit of work to do there. If the DEW were to turn up and we get a close above that, a weekly close above that high of some weeks ago, my recommendation to the UK people is that we don't do anything until that occurs. On the UK market, pretty much the same as the US market, that last high of a couple of weeks ago is a 62% retracement of the last range. And if the market were to close above that 62% retracement, an awful lot of fib traders on the short side will have to run for cover. So I think that would improve the market considerably. I'm waiting for a DEW plus a close above that last high. I don't know how long it was, 4 or 5 weeks ago. Quite easy to see on the chart. And I think that would be the first rising bottom. That would be a very, very positive situation. And we could easily have a nice run up that could last, even under the most bearish circumstances, that run up could last a couple of months, could easily last into April. And then the market will make a decision for us. Where will the market make a decision for us? If you take from last November down to the low of a few, what was the October low, I think? All right. And at the minute, the American market has just got to 38% of that. Invariably, it goes up to 62 or 78% of that. So I think that my stomach is telling me, and if I was a betting man, that we're going to see a strong rally up to the 62 or 78% retracement, and then the market will make a decision for us.
Okay.
How's that?
Okay.
I'm going to just give a quick.
Did nobody think I answered the question? I'm just asking.
I want to give a little different aspect on it, something to consider from the retirement-minded investor. I would. And this is very general to the question and to what we're talking about. I would urge you to continue to, at least once a week, open that market climate graph and remind yourself of the macro headwinds that we're still facing. Now, if that begins to change, I'm just taking a little different view than the technical view or the trading outlook on it, just to consider. Remember, there still are those headwinds, so the market climate graph is a great place to go as you consider that longer term and remember, preserving and protecting your net worth first and foremost. Again, that goes out to the retirement-minded investor.
I'm going to add on. I don't need that. I need to add on to that because if you look at the market climate graph, earnings is falling. Earnings is going to play a big role in this year, especially if companies start missing earnings. I'm on the opposite side of Dr. David Paul in regards to the run-up, but see, that's the beautiful thing. He's looking at it from technical. I'm just looking at it from an earnings perspective. If companies start missing earnings, market's going down. I don't think, especially if knowing that the markets are moved by earnings, interest, and inflation. So
I agree with you, but
yeah.
I think it's going to go up first.
And you know something? One of us is right. That's right.
Good looks will out.
Yes, I'm going to take an inside question. So the question is there a search that will find stocks with falling price and falling volume? I don't care who takes it, because I can say yes, but yeah.
Off the top of my, you repeated the question, right? Off the top of my head, you can create a search that looks for falling price and falling volume. Off the top of my head, I know we have price volume winners, price volume boomers.
Losers.
That looks for price volume losers.
We'll look for.
That's another. Price volume losers. And you can also create your own as well.
All right. What do I have online?
Excuse me, However, the analysis of volume is quite subtle, folks, and it can happen over a couple of bars. I would prefer, the young man who asked that question, that you actually look for, use a watch list to find some shares with lousy fundamentals.
That's a better way to
When the general market is falling, such as the short searches that the fellow, I think Ron spoke about it earlier on, and then maybe put on my moving averages 21.55 and 89 to make sure the trend is down, and then look for rallies and rallies on low volume, and that can be quite subtle. You could actually see just a couple of bars on virtually no volume towards the end of the move up. That's quite difficult to search for, but I'm quite sure it could be done. But volume is an art, and if you want to get your hit rate up to that 80% that I spoke to that young man at the front about, then it is an art rather than a science. But that's a technical perspective. I think that you've got a little bit of work to do there myself.
All right, a good question, especially for a brand new person. Can you tell us what packages are available for new users? Turnkey, software, subscription, training, coaching? I'm going to answer that question straight up and just say, you go to the successful, as a brand new investor, a brand new person to the VectorVest software, I'm going to tell you to go to the coaching. Go to the successful investor coaching. Anybody who's brand, now, let's step back. Even if you're not brand new, but you're not making money. I've had people that say, and I sit back and go, good Lord, I don't know how. Anyway, if you're not making money in the software, I think that the successful investing coaching is ideal suited to get you back fundamentally where you need to be, with the coaches of Brian and Todd to ask questions to. That's my answer to that. For anybody who's brand new, that's the best way to get started. You've got the real-time subscription and you got the coaching. I don't know what more you need from that. Where you have access to the coaches, even though they're virtual, it's a great way to get your questions answered in a live setting. Yes, Kirby.
On the coaching packages that are available, could you elaborate a little about which packages have RoboTrader and Jockey Club, and what is RoboTrader and Jockey Club?
All right. There you go. You got it. The question
is, which coaching packages come included with RoboTrader and Jockey Club? That would be at the Swing Trading Coaching Group and the URS. So if you get the URS Coaching Group, you get the URS and the Swing Trading. The URS Coaching Group comes with everything. If you're just specifically looking for the Jockey Club, which you get comes included with the Derby, and the RoboTrader, that would be the Swing Trading Coaching Group. Jim, your retirement doesn't come with either one of those, right? RoboTrader and the Derby. So Swing Trading Coaching Group would be the one.
Tier 3, right?
Tier 3, level 3. That's right.
All right. That was a good question. Was that an online? That was in here. I'm going to take another question, right? Yeah.
For David Hall, last year was good. The energy sector was good to play. How about this year, and especially comment on oil and gas, natural gas?
I think my hearing's not as good as it used to be, but I think that the young man said last year energy was really good.
Right.
Going forward, how about oil and gas? What's your thoughts on it?
Well, again, that's a feel based on some years of experience in technical analysis. I'm reading a little bit of macro stuff, but I think that the oil price looks low at the moment. I don't think it's going to go much lower. I'm actively looking at the XLE myself. I had a great run at XLE last year on a spread bet in London, and I haven't bought into it yet, but when I get my head back the other side of the Atlantic, I'll certainly be looking at it Wednesday or Thursday next week. I think my stomach tells me that the oil price is going to run up to about $100 again, and I would suspect that that will happen maybe on the back of a lower dollar as well. So I think commodities are going to have a very good year. If I was going to pick out one commodity, it would be copper. I think copper is going to have a really good year. A lot of the precious metal people are talking about silver, that silver is going to fly through the roof. If I had a £5 note for every time somebody told me silver was going to go through the roof, I would retire. But precious metal people are emotional creatures. They don't look at gold or precious metals or platinum objectively. And if you follow some of them on Twitter, they're going to be right. They're like a broken clock. They've been saying that silver is going to go through the roof for the last 25 years, and sooner or later they're going to be right. But if I were going to pick one, sir, it would be oil. I have a big position personally in Royal Dutch Shell. It's a non-leveraged position. And I have a position in the GDX, which is a leverage position. I think that I have a big position in a big copper miner as well. I'm very, very positive about copper on a view 3 to 5 years, and very positive on commodities in general.
Okay. Question, indoor. You had a question? Okay. Thank you, Kirby, for helping. I've read the US dollar will be out and a digital dollar in. How will this affect VectorVest? Is this relevant? Ooh, all right. I don't want that. Listen, I know that there's a lot of talk about a digital dollar and a digital currency. I don't know. I'm going to answer from my own perspective. With all of the research that I've done, we're in that crypto winter. I don't know how long the crypto winter is going to continue on. FTX screwed up the whole crypto industry for a minute. I think a lot of people are going to be less apt to continue wanting to do much more. Are there some cryptos out there? You got the blockchains, you got there's some that are still strong that have been in there for the longest time, but I think they're getting affected as well. The crypto side of it, huh?
Do you have the clicker in your pocket?
Oh, is it moving? Sorry about that. Okay, that was funny. That really was. So I don't know what the digital currency thing is going to do and how it's going to affect VectorVest. We don't track currency, nor do we track futures. So it won't affect us adversely in any way. Do we have some crypto-related stocks within the software? Absolutely. But we don't track currency in any way, shape, or form. So even if it comes out to digital currency, I don't think that affects us in any way, shape, form, or fashion. All right, I'll take another question. Yes? Yeah.
Dr. Paul mentioned the book Thinking in Bets. I was curious if any of the other panelists had any recommendations for books to read this year based on what they've benefited from.
All right, the question is, Dr. Paul talked about a book specifically, and what was it, Thinking in Bets, and wants to know if anybody on the panel, has any books. I don't read books. All right, so it takes me out of the. I'm being honest.
I just finished the new John Grisham book.
Wow, dude. Nice. Anybody else? Anybody else is reading any books?
I could tell. I did just read the two Ray Dalio books. One is Principles, and the other is kind of an extended title. But the two Ray Dalio books I found very, very interesting. So those were two that I've read fairly recently. No Grisham? Nope.
No W.E.B. Griffin?
Nope.
Okay.
Have you read Reminiscence of a Stock Operator? Yes. Yeah, a great book. My best friend, a guy called Tom Hogarth, has written a book recently. It's called The Best Loser Wins. And your humble correspondent is mentioned in dispatches on several occasions. I think if you have a problem in getting rid of losers quickly, as seems to be central to my methodology, all our methodologies, and even Ron's methodology this afternoon, that would be a useful read for you. The previous lady who spoke about the effect of a digital dollar, I think that a good read of Eckhart Tolle's book, Practicing the Power of Now, will make that thought largely irrelevant. I think that if you focus on what's happening today, let's say your rule is that you're in stocks when the DEW is positive and you're being very careful and not buying stocks when the DEW is not positive. If you focus on that, then that will make the digital dollar and the ordinary dollar totally and utterly irrelevant. Very easy to focus on things that you can't control and forget about the things that you can control.
Wow, that's
So
true.
keep your mind in the moment with respect. As end-of-day traders, as most of us are, I think, your moment is that little bar, the high, the low, the open, the close, the volume traded. That's it. If you're an intraday trader, your moment could be a 15-minute bar, a 5-minute bar, and you have to sort of be able to change your perception of what's happening now every 5 minutes. And that is, as we would say in England, bloody difficult. And that's why there's so very, very few short-term traders around that are consistent. Keep your mind in the moment. Eckhart Tolle's book is absolutely magnificent. It's done an awful lot for my trading. He's this little small German guy with a funny little beard. He looks like what you were like at 14 when you first started to shave, you know. But his book is magnificent, helped my trading enormously.
Okay.
And everybody needs to read Trading in the Zone from Mark Douglas. I've it's been a long time since I've read it, but psychology is such an important part of what we do. Like David said, you're going to have clusters of wins, you're going to have clusters of losses. I wish I had this chart with me because, in the URS, we had a tough month really in October, November. So kind of like when you look at the back testing we do, you see, oh my God, 1,100%. And then you see like a drawdown, right? So I posted this, I think, on Facebook in the URS group. I posted like my 7-year results. And every time it went up, I'm like, Ron's a genius. And then when we had drawdown, Ron is dumb. And then Ron is a genius. And then Ron is dumb. I was being tongue-in-cheek, of course, but you have to be prepared for some losses. You have to be prepared for drawdown. And that's really what the psychology is all about. That's what I think Trading in the Zone is the best book for that. Other than, the ones I've been reading lately, like Callie Cat's Tea Party for my daughter. Good book if you have a 3-year-old daughter, by the way.
I'm a digital guy. I ain't reading nothing. All right. Any other questions indoor? Yes. Okay. Well, I'll come back to you, Marty. Go ahead.
Actually, it's not in the system, but I wonder if any of you have looked at Hikanachi candles and what your feeling might be about them as a way of smoothing a trend.
So you're looking at Fibonacci candles?
Hikanachi candles.
I don't know nothing about Hikanachi. I don't. Does any? All right. Does any?
I don't use them.
That answers your question, 'cause I don't know what they are. All right. Marty, yes.
I got a general question for each one of you.
Don't do that, and because that'll take up a whole lot. So if you put.
Well, like each one could answer briefly.
All right.
If you had to pick one important trait or ability to become a successful trader or investor, what would that be?
John, you got the mic?
Yeah, go ahead.
Oh, no, I'm saying you go first.
Oh, no, you go first.
Well, I think to become successful in anything, you have to be disciplined. The question was, what one trait do you believe someone would need to possess to be a successful trader? Is that
What to improve on?
what to improve on? Well, that's not one trait, right? The most important thing is to be
I knew
disciplined.
that was going to be that kind of question.
Right.
But
It's going to be you got to have discipline, and to go back to the word we used earlier is commitment, right? If you're not disciplined, and it's like anything, not just being a trader. It's whatever you do or you want to do. Or if you don't work at it, if you don't try hard, you're not going to succeed. So discipline is the way to go.
Well, for me, I know that the thing that helped me most become consistent and make a few bob along the way was being in the gym twice a day. Being in the gym twice a day made me feel very good. An old trader that I worked with, a very aggressive Scotsman in the city of London many years ago, he used to say that if you get up in the morning and you don't like that bloke at the other side of the mirror, then money's going to run away from you. So for me, the gymnasium was key. And that may seem stupid, but that's the truth. This year I haven't been that well, and I haven't been in the gym since June, and I pulled back my size on the S&P by nearly 10x. I'm only trading a tenth of the size that I was prior to being in the gym. I'm working on getting that size back again, and I'm working, when I get back to England, to being in the gym 3 or 4 days a week. So if you feel good about yourself, money runs at you. If you feel miserable, money runs away. And I think, as Jim says, that pertains to pretty much everything in life.
We're going to wrap it up.
All right.
Yeah.
So I knew that we were getting close to the end. That's why this was a tough talk. I need to wrap up because you know we've had, well, gosh, Ray, the questions are still coming in. All right. Huh? All right, so that's what we'll do. Anybody else, any other question that we have, we'll take it outside and do that for you. Sorry about that, but you wanted the questions answered, so we did the best we can. So with that, I'm going to end up the way that I normally do on our YouTube channel. Thank you guys for being here. All right? Thank you guys for being here. VV Nation, thank you for being here. And with that, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam shalom, namaste, yasu. We're out of here. Bye. All right, so.
Hello everyone. Hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the 2-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real-time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real-time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end-of-day or intraday subscriptions, or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks, and this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options Paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. Hello, and thanks again for joining us for the 20. Hello, and thanks again for joining us for the 2023 2-day investment seminar. As you know, we're offering the $100 discount voucher to all attendees once again this year, and I want to spend a moment to explain what the $100 voucher can be used for and how to take advantage of it. This year, you can apply the $100 voucher to any one of the 4 courses listed on the offers page, or it can be applied to any of the 4 annual group coaching packages. The voucher is not valid for a base subscription like end of day, intraday, or real time. When you go to www.vectorvest.com/offers, you will see the group coaching packages button that you can click on to access the list of coaching groups. The prices you see are our special seminar prices and does not reflect the $100 voucher. When you submit an order for one of the coaching group packages, we will automatically apply the $100 voucher to the price listed when one of our billing specialists apply the order to your account. The additional $100 discount will not be displayed on the order page itself. If you're ordering one of the 4 courses listed, the $100 savings will be applied at the time of purchase, so you'll get an additional $100 off of the prices shown on the offers page. If you're ordering an annual coaching group and a course, the $100 savings certificate will be applied to the course and not the subscription, as there is only one voucher to be used per person. This voucher will expire at the conclusion of the 2-day seminar and will not be valid once the seminar is over. Thanks again for joining us to kick off 2023. Hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the 2-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate, hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the 2-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher, good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real-time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real-time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions, or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks, and this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options Paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot.